We extend our heartfelt gratitude to our gold sponsor, Standard Chartered Bank, and our technology partner, Kia.ai, for their generous support and commitment to this conference. Their partnership has been instrumental in making this event possible, and we look forward to their continued support to IMC. Thank you for your invaluable contribution. So, good morning, ladies and gentlemen. On behalf of the IMC Chamber of Commerce and Industry, it gives me great pleasure to extend a very warm welcome to all our esteemed guests, distinguished speakers, and delegates to the 15th Annual Banking and Finance Conference. This year's theme, Transforming India's Banking and Financial Ecosystem, Innovation, Inclusion, and Resilience in the Digital Age, promises insightful discussions and valuable perspectives. We are truly honored by your presence and look forward to a fruitful exchange of ideas. It is said that lighting of the lamp amounts to awakening of the Atma Jyoti within oneself. Light symbolizes knowledge, purity, and wisdom. It shows the bright path forward. So let us initiate the inaugural session with the traditional lighting of the auspicious lamp for prosperity and success. May I request Mr. Sanjay Mariwala, President, IMC Chamber of Commerce and Industry, to welcome and accompany our esteemed chief guest, Mr. Anand Sinha, former Deputy Governor, Reserve Bank of India, along with the other dignitaries, Dr. M. Narendra, Chairman, IMC's Banking, NBFC and Finance Committee, and former CMD, Indian Overseas Bank, Mr. Ajit Mangrulkar, Director General, IMC Chamber of Commerce and Industry, Mr. Mahesh Thakkar, Co-Chairman, Banking, NBFC and Finance Committee, IMC, and Chairman, Finance Industry Development Council, Mr. Sanjay Mehta, Deputy Director General, IMC Chamber of Commerce and Industry, Ms. Sheetal Kalro, Deputy Director General, IMC Chamber of Commerce and Industry, Mr. M.K. Chauhan, Vice President-elect, and Ms. Rajya Lakshmi Rao, President, Ladies Wing, IMC, and Mr. P.D. Singh to kindly come forward for the lighting of the lamp.
इधर इधर
May I now request the respected dignitaries to take their nominated seats on the dais.
आइए ना.
A loud round of applause, ladies and gentlemen.
So can you look here, sir?
May I now request the respected dignitaries to take their nominated seats on the dais. Round of applause, ladies and gentlemen, for the lighting of the lamp. And we start off the conference. To initiate the session, may I request Mr. Sanjay Mariwala, President, IMC Chamber of Commerce and Industry, to present the welcome address. Over to you, Mr. Mariwala.
Ladies and gentlemen, a very good morning to each one of you. It's both an honor and a privilege to extend a warm and heartfelt welcome to the 15th Annual Banking and Finance Conference organized by IMC's Banking, NBFC and Finance Committee. Today we gather under the powerful theme of transforming India's banking and financial ecosystem, innovation, inclusion and resilience in the digital age. This is not just a topic, it's a call to action for all of us to shape the future of India's financial landscape. I would like to begin by expressing my deepest gratitude to our distinguished panelists and moderators, whose presence here today is a testament to their commitment to excellence. Your willingness to share your expertise will undoubtedly enrich our discussions and inspire new ideas. Allow me to set the stage with some remarkable facts. India's banking sector is now one of the largest and the fastest growing in the world. In 2023, the sector managed assets worth $3.1 trillion. By 2047, this is projected to soar to an astonishing $45 trillion. The State Bank of India's deposits have grown from 770 billion in 2018 to then 16% of India's GDP to 2 trillion by 2024. HDFC's market capitalization has reached $150 billion in March 25. The sector's growth outlook remains robust at 13 to 14% in the coming years. To truly fulfill our potential as a developed nation, India must add another 4 trillion in capital by 2047 into this system. These numbers are not just statistics, these are milestones. On India's journey to becoming a global financial powerhouse. The Indian financial sector has made extraordinary strides in its digital journey, powered by visionary government initiatives, relentless technological innovation. This digital revolution is not only expanding access to financial services, but also driving efficiency, transparency, and trust. Digital financial transactions are now the backbone of our economic growth. They empower individuals, reduce costs, enhance security, and align perfectly with our national agenda for digitalization and financial security. The phenomenal rise of UPI transactions is a shining example of what can be achieved, thanks to simplicity, interoperability, government support, robust security, and widespread acceptance. UPI has transformed the way Indians transact, acting as a catalyst for a financial inclusion and digital empowerment agenda. But our journey is far from over. Sustained growth in digital payments will require ongoing education, robust security, and continuous improvements in infrastructure. We must keep innovating, keep adapting, and keep moving forward. As we celebrate our achievements, we must also confront the challenges that remain. High NPAs, weak governance, political interference, flawed lending practices, slow legal recovery mechanisms threaten the health of our financial system. To overcome these, we need strategic capital infusion, deep structural reforms in governance, stronger regulations, a robust legal framework for loan resolutions, and a renewed focus on priorities of our banks. Today's conference, under the able leadership of Narendra Ji and the IMC committee, has curated sessions that address these very issues. Together, we will explore solutions, share insights, and forge a path towards a more resilient and inclusive financial ecosystem. Before I conclude, let me take a moment to reflect on the legacy of IMC. Established in 1907 and headquartered in Mumbai, the IMC Chamber stands as an apex body of commerce, trade and industry in Western India with over 5,000 members, 150 trade associations, and a network comprising of more than 400,000 businesses across the nation. IMC continues to be the beacon of leadership and progress. Ladies and gentlemen, today is not just another conference, it's a gathering of visionaries, innovators, and change makers. I encourage all of you to participate actively, challenge assumptions, and leave here inspired to drive transformations in your own organization and communities. Once again, I welcome you to what promises to be an insightful and impactful day. Let us work together to shape the future of India's banking and financial ecosystem. Thank you and wish you all a very enriching experience.
Thank you, Mr. Mariwala. May I now request Mr. Sanjay Mariwala, President, IMC Chamber of Commerce and Industry, to felicitate our esteemed chief guest, Mr. Anand Sinha, former Deputy Governor, Reserve Bank of India, with a special memento from IMC as a token of our appreciation and gratitude, sparing his valuable time for this conference. Thank you, sir. May I request all to stand for a group photo? Thank you, sir. May I request you all to stand for a group photo? Thank you. May I now request Dr. M. Narendra, Chairman, IMC's Banking, NBFC and Finance Committee and former CMD, Indian Overseas Bank, to deliver the introductory address. Over to you, sir.
Good morning and hearty welcome to all of you. At the outset, I extend a hearty welcome from IMC and all behalf of all of you to our chief guest, beloved and respected Mr. Anand Sinha, former Deputy Governor, Reserve Bank of India. Give a big clap. And we are grateful for his esteemed presence. And of course, we are slightly late today. today exceptionally heavy traffic. Otherwise, Saab had started right in time. And we are also glad that some of our esteemed speakers are all in the audience. Apart from that, on our request, quite a lot of senior people and in the respective positions, they have all responded. So I find the hall is full of knowledge-seeking people. So that is also great to make our program a great success. The endeavor of the IMC in the respective field try to bring opinion makers and the very policy propagates as well as esteem different sectors of who have accomplished and earned a lot of respect as well as knowledge on a platform. And in that respect today, in each of the section, I am very grateful to the speakers who have responded to our request. As covered by our President, Sanjay Mariwala ji, that this particular banking and insurance and the other NBFC, as per the financial stability report, which was released recently in June by the Reserve Bank, all of them are in a very sound health, all of them adequately capitalized, and all parameters which are relevant to these financial institutions, they are in a good shape. So now it is poised for all of them to rise up to the need, because India has to achieve 30 trillion economy or US dollar economy by 2047. From a middle income group, we have to become developed. So there is a greater role for the financial institution, particularly bank and NBFC, and also the other is insurance sector, is to see that insurance is given to all by 2047. So coupled with all of them, we could achieve the GDP growth. And also per capita income from hardly around 2,800 US dollar, we have to achieve around 18,000 to 20,000 US dollar. The benefits is for all. But can it be merely a slogan? No. It has to have the involvement and commitment and the contribution to every one of us, as well as all the responsible institution. So in that respect, our finance secretary, our banking secretary, he mentioned that the current credit to GDP is only 56%, whereas in the developed country, it is almost more than 100. So he has said that by that time, our credit to GDP should go up to 110%. So that, because with that only, the contribution of our banking sector to the growth, all the aspect of the banking and the other institution will have to gear up to take up the momentum. Of course, in that artificial intelligence, machine learning, metaverse, and all the emerging technologies will enable not only on the liability raising, but also in the asset management and also in customer engagement and customer delight. So as we go for the, digital, there is also element of cyber security. The trust and confidence bank is holding, that has to be nurtured and maintained through lot of measures to mitigate this cyber security. And similarly, of course, the insurance sector, the penetration aspect has to be improved substantially. And on the wealth management, today banks have to improve their value proposition, because there is a danger to threat for resource mobilization. It has been growing at a slower pace. Unless you improve your overall value proposition with the customer by providing other risk engagement product or proper planning for wealth management and integrate the entire resources of the investors into the whole planning of enabling higher investment, so that its average return will become higher. Currently, banks are not able to give higher return because the other side, the lenders will not like to take on a higher cost. So that has to be, the margin maintenance is very important. So internationally, margin is at a lower level, whereas the fee-based income are higher. So that is another challenge which bank has to play. Whereas we find that even now credit growth is not picking up, which has to be definitely reach out. And we have to achieve the micro and small segment, agriculture and all others, which has a higher bearing on the GDP growth. Madam has already come. My point is I have to restrict for covering the time. I wish that this conference with the so many speakers, you will take advantage and make it a grand success. Thank you.
Sir, it is my privilege to introduce Mr. Anant Sinha, former Deputy Governor of Reserve Bank of India, a distinguished central banker with over 3 decades of service at the RBI. Mr. Sinha has played a pivotal role in shaping India's banking and regulatory landscape. His extensive expertise spans banking operations, supervision, financial stability, and policy formulation. We are truly honored to have him with us today. A loud round of applause, ladies and gentlemen. May I now invite Mr. Sinha to share his invaluable insights with us. Over to you, sir.
So, ladies and gentlemen, I'm delighted to be here as a part of this annual event on a very important and relevant topic to discuss the transformation of the Indian banking and the broader financial system in the backdrop of exponentially evolving digital ecosystem. The way forward has also to align with the national aspirations of a Viksit Bharat by 100th anniversary of our independence in 2047, whereby our GDP and per capita income have to increase by almost 8 to 9 times, which is a huge task, and it calls for the involvement of all sectors of the economy and individuals and professionals. Before I go into the topic, I feel embarrassed that I was 20 minutes late and I had to keep all of you waiting, but then it's very difficult to know all the risk factors of Mumbai traffic, as it is with climate risk, going by the state of knowledge today. So the innovations that we are talking about have to promote growth, be inclusive, inspire trust, and enrich the customer journey while managing risks. Now, risks, traditional risks are well known. We keep on talking about that all the time. But with the new developments, more and more important, certain risks have got enhanced and some new risks have come into play, not necessarily also like geopolitical risks and climate risk. Now, climate risk is a long thing. Geopolitical risk, of course, we don't know how long it will last. So all these risks have got to be managed prudently to ensure financial stability. The phenomenal innovations in new technology in the post-global financial crisis period, that is post-2008, has resulted in major improvements in the connectivity of systems, low cost of computing and data storage. This has led to the proliferation of fintechs and big techs, who, unburdened by the legacy IT systems, which banks and other financial institutions have, they have been very nimble and they have disrupted and altered the financial services markets and business models of banks and non-banking financial institutions substantially. They even provide financial products and services directly or through their subsidiaries where they have been able to obtain regulatory licenses. The more prevalent model is one of partnership and collaboration with the regulated entities. In India, these partnerships work within the ambit of outsourcing framework. Market dynamics is leading to new business models like BaaS, that is banking as a service, which I notice will be discussed in the immediately following session. The demand for these services has been fueled by the demographic changes in as much as the computer and savvy millennials are attracted to convenience, speed, lower search and lower switch cost, and user friendliness of financial services provided by new technologies. Digital finance also introduces new risks or traditional risks and calls for focused regulatory intervention. Cyber risks have got elevated due to increasing interconnectivity and disaggregation of services, introducing more links to each product chain and user interface. These factors also increase operational risks as a greater number of entities are involved in the provision of a single product or services, creating operational dependencies. There are new risks to privacy and data protection due to handling of enormous amount of data. And we all know that the digital medium basically leverages the data available both from traditional and non-traditional sources. So there is a proliferation of providers who share data in the product and services chain. And that is why risks to privacy and data protection have got enhanced. The main reason being lack of awareness. The RBI does run digital payment awareness campaigns. Banks, NBFCs, and other regulated entities have to play a vital supporting role to bridge this gap through digital literacy. For further expanding and deepening the digital payment ecosystem in the country, a payments infrastructure and development fund has been constituted to encourage deployment of payment acceptance infrastructure. Cross-border payments have been very inefficient, as we all know. RBI is making efforts to address the challenges of high cost, slow speed, and insufficient access and transparency in cross-border payments. RBI continues to expand the reach of UPI bilaterally by linking UPI with fast payment systems of other countries, and also explore the possibility of linking payment systems other than UPI for facilitating efficient cross-border payments. RBI is also continuing its engagement in a multilateral project known as Project Nexus, which has been conceptualized by the Innovation Hub of the Bank for International Settlements, aiming to connect the fast payment systems of 4 ASEAN countries, that is Malaysia, Thailand, Singapore, and Philippines, to enable instant cross-border retail payments at low cost. Now, coming to the topic which is in flavor nowadays, talked about a lot, is AI, artificial intelligence. It is fundamentally redefining the banking sector, transitioning from automation tools to becoming the driver of innovation, personalization, and strategic transformation. Today, as AI is making forays in the financial sector in the form of services like chatbots, internal data processing for intelligent alerts, fraud risk management, credit modeling, grievance redressal, early warning, and other processes, integrating this cutting-edge technology into a robust and responsible DPI, that is digital public infrastructure, presents an opportunity to amplify the capabilities and efficiency of DPI even further. It is estimated that generative AI itself could increase global GDP by $7 to $10 trillion over the next 3 years. Large language models are estimated to increase the productivity levels of workers by 8 to 36%. Now, India is uniquely positioned to unlock new growth avenues and optimize existing ones with its DPI, a vibrant IT sector, a wide user base, including in semi-urban, rural areas, and among women in the country. And also we have a burgeoning youth population, including one of the largest AI talent bases. While wider use of AI will bring transformative benefits to the financial sector, it may also pose additional risks. That is model risk on account of what is said a black box, that is lack of explainability, data-related risks relating to privacy, cyber security, algorithmic bias. This arises because the process is based on on the data which goes into training the models. And traditional data, whatever bias it carries, that can get perpetuated. So that is a big risk as far as AI and, for that matter, any machine learning algorithm is concerned. Then there is third-party dependencies and service provider concentration and market correlation. By market correlation, I mean widespread use of similar AI models and training data. These risks will have to be managed effectively. There are serious concerns about the impact of AI on jobs. It is therefore very important to have a balanced approach in the use of AI. It will be important to position AI as a complement to human expertise rather than replacement. It is well established and it came into sharp focus during the global financial crisis that blind reliance on models was counterproductive. And studies established that the distinguishing factor between banks which managed risk better than others was the extent of human judgment applied to model outputs. The rapid evolution of AI technology often surpasses existing regulatory frameworks, creating complexities for banks and other regulated entities operating across diverse legal jurisdictions. This necessitates active engagement with regulators, sandbox environments for controlled AI experiments, and establishing cross-functional AI governance teams to ensure compliance. Recognizing the need to regulate AI, international bodies such as the OECD has outlined core principles governing AI. Financial sector regulators are also into this exercise. RBI has set up an external committee to develop a framework for responsible and ethical enablement of AI in the financial sector. Now, talking about growth. To promote growth, acquire momentum, and create jobs, special emphasis must be paid to support manufacturing in labor-intensive industries and MSMEs. To improve MSMEs' access to credit, the sector should be encouraged and trained to, apart from building its capabilities, formalize itself by maintaining proper financial records and joining and using various platforms like Udyam, GST, Account Aggregator, ONDC, and TREDS, etc. This will generate a large digital footprint which can be used by AI ML-based credit risk models to assess their credit needs. An important use case of AI in the financial sector would be RBI promoted ULI, which is somewhat similar to UPI, which is currently under a pilot stage. This platform will facilitate seamless and consent-based flow of digital information, including land records of various states from multiple data service providers to lenders. By digitizing access to customers' financial and non-financial data that otherwise resides in disparate silos, ULI is expected to cater to large unmet demand for credit across various sectors, particularly for agricultural and MSME borrowers. Now, the pilot stage, once it is crossed, then we will have, based on their learnings, the scope and coverage of the platform would be expanded to include more products, data providers, and lenders. If it succeeds like UPI, it will transform the credit availability to MSMEs and other weaker sections, which is very essential for growth, exports, and employment. The next issue I would like to talk about is financial inclusion. Financial inclusion ought to be centric to the financial sector objectives, both from a humanistic perspective as well as for economic growth. A number of policy interventions have been made by RBI and the government. Pradhan Mantri Jan Dhan Yojana, PMJDY, marked a watershed moment in financial inclusion, which leveraged the digital ecosystem in the form of Aadhaar and mobiles. That is what is popularly known as JAM Trinity. RBI's Financial Inclusion Index shows that while there has been remarkable strides in expanding financial access, in fact 80% of adults now have a bank account, usage is still lagging. This shows that there is still a long way to go to ensure that the most vulnerable and low income groups have access to secure and affordable finance. Significant gaps lie in credit availability and insurance penetration. Technology driven solutions can democratize finance, bringing a wider range of suitable financial products to the undeserved segments. The ULI and adding of several new features to UPI hold promise in this regard. Now, to involve the population which is not yet fully integrated, financial literacy becomes absolutely essential. The efforts towards augmenting financial literacy has been institutionalized by setting up of the National Center for Financial Education jointly by the financial sector regulators. RBI, of course, as a regulator, has been at the forefront of financial literacy campaigns. Lack of effective grievance redressal mechanism and mis-selling of products dents the trust and confidence in the regulated entities and may result in disintermediation instead of promoting inclusion. There is a lot to do in these matters. Now, let me very briefly talk about CBDC. One of the objectives of CBDC is promoting financial inclusion by providing a safe, reliable, and cheap remittance services. RBI's initiative in launching pilots for use case of CBDC for wholesale and retail payments, including offline payment, and its programmability is a step to promote inclusion. The programmability feature of CBDC could serve as a key enabler for financial inclusion by ensuring delivery of funds to the targeted user. Illustratively, tenant farmers often find it difficult to access agricultural credit for inputs and raw materials, as they do not have the land title to submit to the banks. However, programming the end use for purchase of agricultural inputs can give the required comfort to banks in this regard. Now, how much? Only. Okay. Give me 10 minutes, I'll finish. The next topic to talk about is climate risk and green finance. Climate crisis is, as we know, an existential threat to life on Earth. It can have large impact on growth, inflation, and financial stability. However, not enough seems to be being done. The current emission trajectory projects warming to 2.7 degrees Celsius by 2100 against the Paris Declaration cap of 1.5 degrees Celsius. That means almost doubling. One, there is not enough funding available to emerging markets. And the fact that US has backed out from the Paris Agreement will also weaken commitment. So adequate finance is an issue apart from many other issues. India's vulnerability is quite high because of its geographical location, and according to an estimate, climate change could lead to an annual GDP loss of 3% to 10% by 2100. Therefore, dealing with climate risk requires concerted action by all stakeholders, whether governments, financial system entities, regulators, and corporates. The government, of course, has been at the forefront in fostering sustainable and climate finance through Green Hydrogen Mission, National Solar Mission, sovereign green bonds, etc. India has committed to ambitious targets aiming to derive 50% of energy from renewable sources and reduce GDP carbon intensity by 45% by 2030, aiming for net zero emission by 2070. RBI too has taken proactive steps. Of course, on the face of it, it looks that things are moving slowly. That's a fact, but we expect that in 25-26, a number of guidelines would come out from RBI. So some of the steps which have already been taken is including financing renewable energy projects under priority sector loans, introducing green deposits and a framework for sovereign green bonds, drafting a disclosure framework for climate-related financial risks, and efforts at capacity building. To ease climate finance availability, there is 100% FDI under the automatic route for the renewable energy sector and relaxed norms for ECB for companies raising funds for green projects under the automatic route. RBI is planning to release guidance notes on scenario analysis, stress testing, and effective management of climate-related financial risks based on BCBS principles. RBI's aspirational goals include establishing a robust regulatory and supervisory framework to effectively manage challenges arising from climate change. Absence of historical loan loss data related to climate risk and sectoral benchmarks for transition to net zero pose a serious challenge in modeling climate risk and evaluating transition risks of entities. To address these gaps in climate data availability, in October 2024, RBI has announced creation of a data repository, namely RBI Bank Climate Risk Information System, CRIS. The repository is intended to bridge data gaps by providing standardized assets. While clearly a lot is to be done, India has shown strong progress in renewables, especially solar, but remains heavily reliant on coal, being among the countries with largest developed coal reserves and planning to increase its production. Now, coming to the question of digital mediums, technology can play a vital role in the area of climate finance. For instance, blockchain technology can enhance transparency and traceability in green bond issuances and provide immutable records of project impacts. AI and big data analytics would enable banks and investors to assess environmental risks and opportunities associated with green investments. Fintech innovations such as digital platforms for trading green bonds and impact measurement tools can streamline processes and attract a broader investor base. RBI governor has recently urged the regulated entities to seriously consider setting up a pool of bankable projects through an appropriate institutional arrangement. The suggestion is in the context of the difficulty in identifying bankable projects, and this arises due to capacity and expertise constraints. Creation of such a pool will benefit the entire system. There were some other issues which Mr. Narendra had mentioned, which I would have liked to talk about, but we are running out of time. So let me come to my closing remarks. Regarding balance between regulatory intervention and innovation, this is something which is very close to practitioners' hearts. There is often complaints about regulatory overreach, hampering innovation. So, why does it happen, and what banks can do and what regulators can do? I have some reflection on that. So one thing is that banks should adopt, by bank I mean it's a generative word, it means every regulated entity. They should adopt a prudent approach to business. This will provide a fine balance between innovation and regulatory intervention. Regulatory intervention, usually how does it happen? It comes in when the innovations have undesirable features and they attain a scale which can impact financial stability and or there are large customer complaints. So what is needed is responsible innovation, not driven by obsessive focus on growth and profit, to ensure balance between regulation and innovation. While regulators have to be sensitive to the needs of commerce, bankers will have to don a bit of regulatory hat. Banks should remember that they are their own first line of defense. And within banks, the first line of defense are the business units who are risk takers. An obsessive focus on growth and profits leads to short-termism, resulting in herd mentality, increasing the risk to financial stability. As we saw in the case of infrastructure loans in the 2003 period onwards, and more recently, the race for extending unsecured personal loans. Now, I would just like to mention that what RBI did, that is modulated the risk weights, is not something which is new. In fact, today it is known as macroprudential policy, and RBI had used it extensively between 2003 to 2010 by modulating in 5 sectors. Here it was only one sector was touched. In that period, 5 sectors were touched, and the risk weights and the provisioning norms were modulated depending upon the state of the economy. So obviously, when the crisis struck, they were relaxed. Before that, when the exuberance was building up in the system, these factors had been tightened. So the quality of corporate governance, culture and ethics within banks will have a large impact on financial stability and fair treatment of customers. Welfare of society would require prioritizing human dignity so that increasing corporate profit is accompanied by real improvement in workers' lives to bolster inclusive growth and accelerate GDP growth too. Of course, it will be necessary to build capacity in financial services and also foster proper attitude, and these will constitute the key to successes. So thank you. I wish you very productive discussions for the rest of the day.
Thank you, sir. As we conclude the inaugural session, may I request Mr. Ajit Mangrulkar, Director General, IMC Chamber of Commerce and Industry, to kindly present the vote of thanks.
Thank you, Selvi. Good morning, ladies and gentlemen. It is my privilege and pleasure to present the vote of thanks at the end of the inaugural session. The inaugural address by our chief guest, Mr. Anand Sinha, former Deputy Governor, Reserve Bank of India, has set the tone for discussions to follow. We are grateful to you to spare your time and address the gathering here. Thank you, sir. As we come to the end of the inaugural session, I am confident that the day-long conference will throw up many interesting perspectives on the theme of the conference. We look forward to hearing all our eminent speakers as we go along. I would like to express our gratitude to Dr. M. Narendra, Chairman of IMC's Banking, NBFC and Finance Committee and former CMD Indian Overseas Bank, Mr. P.D. Singh, Co-Chairman of IMC's Banking, NBFC and Finance Committee and CEO of India and South Asia Standard Chartered Bank, Mr. Mahesh Thakkar, Co-Chairman of IMC's Banking and NBFC and Finance Committee and Chairman Finance Industry Development Council, Ms. Pooja Bharwani, Member IMC's Banking, NBFC Finance and Finance Committee and Executive Director, Strategy, Risk and Transactions, Deloitte India, for conceptualizing and structuring such an interesting conference and getting prominent personalities from the domain to speak at the conference. I would also like to take this opportunity to thank our gold sponsor, Standard Chartered Bank, and our technology partner, Kia AI, for their support towards the conference. Without their gracious support, it would not have been possible to hold this event. We look forward to their continued cooperation in all our future endeavors. Our sincere thanks to media representatives for their participation and to all the delegates for joining in such large numbers. And last but not the least, the IMC team for all the hard work in putting up such a flawless execution. Thank you all and look forward to a day-long, very interesting conference. Thank you.
Thank you, Mr. Mangrulkar. So, ladies and gentlemen, we now begin with our first panel discussion on emerging banking trends expected to shape India's banking landscape, Bank CEO panel. I invite Mr. P.D. Singh, Co-Chairman, IMC's Banking, NBFC and Finance Committee, and CEO, India and South Asia Standard Chartered Bank, the moderator for this session on the dais. This session will throw light on a broad spectrum related to AI and automation in banking, embedded finance and open banking, rise of neobanks and digital-first banking, regulatory shifts and compliance challenges. The esteemed panelists joining Mr. Singh in this session are Mr. Mehul Pandya, MD and Group CEO, Care Edge, Mr. Rajneesh Karnatak, MD and CEO, Bank of India, Mr. Pranav Chavda, CEO, JP Morgan Chase Bank NA, and Mr. Tushar Vikram, Country Head and CEO, India, Mashreq Bank PSC. May I request all to join us on the dais for the panel discussion. I request my media friends that since we are having global banks out here, kindly be a little bit restrictive in quoting whatever the specific person would be speaking. Thank you very much. And Mr. Singh, the session is all yours. You have 50 minutes to go. Yes, thank you. Sorry.
Thanks. So, very good morning to all of you. It's my pleasure and privilege to host this session. We've had very lovely introductory remark by our president, Mr. Mariwala, and thank you, Mr. Sinha, for all the insights that you provided us, especially from a regulatory lens. And very important for the entire industry, both lenders and borrowers, to embrace the regulation and take it in the spirit that it's been put forth. So without much ado, let me get ahead. We are privileged to have today one of the largest Indian banks represented by the CEO, Mr. Rajneesh Karnatak. We are also privileged to have one of the largest American banks, indeed one of the largest banks in the world, represented by the CEO, Pranav Chavda, JP Morgan. A very large constituent for India and Indians is the Middle East. And here we have Tushar, who represents Mashreq Bank. And of course, someone who keeps us in check by making sure that a lot of things that the banks do get external validation, and that is Mehul, who represents Care Edge. So thank you all for being with me today. And I represent one of the oldest foreign banks in India, indeed a bank that started from India. The first ever branch of Standard Chartered Bank was started in Calcutta in 1865. And indeed from India it grew outwards. And while it is today a British bank, but the roots of this bank are very much from this country. Thank you. Mr. Narendra is always been a cheerleader, and thank you for all your support, sir. Like we heard from the RBI governor very recently in the Financial Stability Report 2025, the key engine of global growth is the very strong fundamentals that we have in the Indian economy, and of course a very resilient Indian financial system. So to just underscore the resilience of the Indian financial system and the growth of the India story are very deeply interconnected, and the role played by the Indian financial system is not to be underestimated in any manner. And that's why I'm so grateful for this very esteemed panel to be with us today and share with us their insights and inputs on the way forward. As has already been mentioned by Mr. Mariwala, but just to summarize, we have 12 public sector banks in the country, 21 private sector banks, 11 small finance banks, 4 payments banks, 43 regional rural banks, and 44 foreign banks. Each one plays a very critical role. And as again mentioned, the word bank is a generic bank for regulated entities, and all of them have a very key role in the financial system. And thank you, Mr. Sinha, for reminding us we are all material risk takers sitting on the dais here today, and indeed very conscious of our role as frontline and first line of defense for the bank. Last night, when we had a very interesting meeting, Madhav Nair reminded us of the twin balance sheet problem we had, which has now become actually a twin balance sheet strength with both the banking and the corporate sector doing so well and moving forward in tandem together. I think we're all very excited to know about the future of banking, what each one of our panel members has to say, but I can't help but add that despite our digital progress and the fact that we are doing so well, we still have 38 lakh crore of cash that our system currently has, and that reminds me again of what Mr. Mariwala said, that 40% of Indians, adult Indians, are still outside the digital banking system. So there's a lot of work to be done. The last point that I want to make again, which we take for granted, is the interconnectedness of the banking system with the entire financial market. And that is again something that many of us take for granted. So for example, whatever happens in the capital markets banks can't be insulated from them, and vice versa. So the very proactive approach played by the RBI and the other regulators involved in this entire system are, I would say, critical for keeping us on track and where we are today. The winds of change are opportunities, and that's what we want to talk about. So without any delay, Mr. Karnatak, thank you for being with us. I can't hold myself back but ask you, what do you make of the current situation in the global financial system? Number one, and number two, with all the geopolitics going around, how does a very large bank and indeed one of the largest bankers in the country, how do you think about the world today? So I'll start with that, and then we go into details on the technology changes that you're bringing along in AI and ML.
Thank you so much, PD Singh ji. First of all, thanks to the IMC Chamber of Commerce and Industry for inviting me here for this panel discussion. It's my privilege to be here. In fact, I was just discussing where I was sitting there that I am coming from Bank of India. So there is quite a correlation between IMC and Bank of India in the sense that both were established on 7th of September. I was just discussing, in fact, IMC Chamber of Commerce is 2 years older than Bank of India. IMC Chamber of Commerce started on 7 September 1907 and Bank of India started on 7 September 1909. So that is the the correlation between IMC and Bank of India, just to set the context. As far as the today's 15th annual Banking and Finance Conference is concerned, and also the theme which is there, transforming India's banking and financial system, innovation, inclusion, and resilience in the digital age, I would say that it clearly coincides with the digital revolution which has taken place, particularly in banking. So this is the 15th annual conference, and from the banking point of view, you can say that the digital revolution started somewhere in 2010 also. So from 2010 today, 15 years, and it clearly coincides the 15th annual banking conference of the IMC. So good to know that. Just to set a context, I just jotted down a few points, PD Singh ji, just to set the context on why this today we are one of the best digital technology banks in the country, and India is doing so good there. So as far as the banking is concerned, banks are doing very well. So this is one of the contexts why the entire ecosystem is doing well. As said earlier, PD Singh ji also said that it's a twin balance sheet advantage now. The days of problem and other things are gone. All the banks are doing well now in the banking system in India, whether it is public sector banks, private banks, including other regulated entities like NBFCs, though that is one part. What it gives the strength is that to invest in technology. So as we are all aware that India is very strong in IT and ITES, and this strength in the balance sheets of the bank is enabling them to invest huge in technology and digital, and also in cyber security. So this strength is helping it. Had the banks been weak, so this the advancement in digital, IT and cyber security would not have happened. So this is another pillar, strong thing, which is at the backdrop of that. Third thing that I would say that why digital and this thing is improving in the system is also because of the fact of the strong telecommunication network which is there, and 90 crore plus internet users in the country. So that is again helping in the digitalization of the banking system. Fourth thing that I would say that India has a very robust digital public infrastructure system, and the biggest example of that can be a UPI, which typically the three basic pillars of technology to be successful which is that the technology, the platform should be it should have speed, it should have scalability, and also that it should be safe. So all these things are present in UPI, which has made it such a big success in the country as part of the public digital infrastructure. Apart from that, the other things which are there in the public digital infrastructure, which is helping the economy, is the Aadhaar system, which is there. Then the eKYC, which is there, which has been started by the Reserve Bank. Then which is helping in the finally the JAM Trinity, which was there, and the Aadhaar enabled payment systems which were there, and off late which is there is the digital signatures which have been started, which is again helping in the thing. Account aggregator is another thing which is helping in a big way in the digitization of the things. ONDC is another thing, that open network and digital commerce, that is also enabling the digital banking which is happening. And not only digital banking, in fact the digital financial inclusion which is happening in the country. And last but not the least, the latest thing which the RBI has also now introduced is the ULI, which is the Unified Lending Interface. So that it has started picking up, and it will go in again, I would say, in a long way in helping the country. But having said all these things, I would say that it will be very mindful for all of us sitting over here, and also to the financial system, that we keep an eye on the data protection, which is again very important for everyone, all the stakeholders. And then last but not the least, something very important is again the risks which are associated with technology is the cyber risk. So that also we have to be very mindful of as a regulated entity, that the cyber risk does not go on to the clients and the customers which are there. As regards the ecosystem which is there, how the banking is doing, so as I can say, PD, that we are present in 15 countries as Bank of India. So out of our total global business, which we closed at around 14.8 trillion in March 25. So I'll give any numbers today which are up to March 25 because we are a listed entity. And 14.8 was our total business. Out of that, 15% business comes from our international business. And we are present in all 5 continents in 5 different countries, in 15 different countries. In that, I would say that if you see context about the global economy, so in the 15 countries we are present, the GDP growth of India is the best. So that is one thing when many people ask that where the Indian book will grow more or where the international book will grow more. So I always say that the Indian book will grow more for the simple reason that the GDP growth in India is much better than the GDP growth in the markets where we are present. So that is one simple point which is there. So this year also, as per the RBI data and also from the S&P, that the GDP growth for India for FY26 should be at around 6.5%. If we translate it into a credit growth, normally if you see in the last 75 years, the trajectory has been that the GDP growth to credit is the multiplier of 2. So when we are saying that the GDP growth is estimated at around 6.5 for this financial year, so we can safely say that the credit growth should be in the range of around 11 to 13% in this financial year also. So that kind of GDP growth and that kind of credit growth is quite healthy if you compare with other countries. And definitely we are all aware that India is growing to a very large economy. We are already the 4th biggest economy in the world in the GDP terms. And the GST collections which are coming also are at the run rate of nearly 2 lakh crores. Though they have dipped in the month of June, but nonetheless, now they are at 2 lakh crores per month. That is the kind of number. In that context, I would say that overall global economy and the strength that inherent India has with the muted credit growth also being here, it is very, it can be safely said that this financial year FY26 will also be a good year for the entire financial system in the country. And then at the last and not the least, I would say that when the government is saying for a Viksit Bharat 2047, so there are 3 basic pillars. There was a deliberation happening in the Viksit Bharat thing also conducted by the Department of Financial Services, in which we said that Viksit Bharat 2047 can only be imagined when each and every person in the country has 3 basic things. The first thing is that every person should have a bank account. Number 2, that every person should have an insurance coverage. And third is that every person should have a pension with that. So only when these things are available to the person in the country in 2047, we can truly say that the country is a Viksit Bharat. And the entire ecosystem, I can say the financial service ecosystem is working towards that only, that every person has a bank account, an insurance product and the pension account. With these words, I think I would stop myself.
Thank you, Rajneesh. Really very insightful, and thank you for sharing with us. I'll move on to Pranav. I think a lot of you may already know Pranav. Pranav has been, apart from JP Morgan, with DBS Bank, and prior to that with Citibank as well. So Pranav, let me just keep the theme as the current economy and the situation that you see from your vantage point as JP Morgan. So if you can share a few words with us, and of course I want to come back to you to give us real life examples of where some of the digitization or technology changes globally are use cases that may be applied in India. But first on the economy.
Sure. Thanks, PD, and good morning to everyone. I think before I answer that question, I think just wanted to share that from a JP Morgan perspective, if you look at it, as PD mentioned, it's the world's largest and the most reputed bank, and from a market cap, from a business. But more important, I think we take pride in the fact that this year, JP Morgan India is celebrating its 80th year in the country. So that's a big pride for us. Looking at it over the period of last 80 years, I think what JP Morgan India has managed to do is add a lot of contribution to the Indian economy, to the Indian ecosystem. And recently when I was there with Mr. Governor of RBI, and I was explaining that, what are the areas that we added a lot of help in terms of bringing the globality into the country. So if you ask us, the primary thing that we focus on, apart from the banking business and apart from the businesses that we do in India, is to promote India as a destination and to attract flows into the country, whether it is FDI or an FPI. And being a global bank, I think it puts us into a unique advantageous position of showcasing India as a best destination. So this year, again, we are going to do an investor summit, which we do every year in the month of September, where our global chairman and CEO, JB Diamond, comes. We invite all our investors, government officials, people from Reserve Bank of India, ministries, to basically articulate the story of India as the destination. And that has worked really well from our perspective, as well as focusing from a country's growth perspective. So that's a little bit about how bullish we are on India. And apart from the bank and the businesses that we do, the other way to showcase how bullish we are on India is, outside US, the largest workforce JP Morgan has is in India. So at this point in time, we have on our shared services center has about 60,000 employees in India. So by far, we would be the largest today in the BFSI space and still growing. So that shows the commitment towards the country and the bullishness that we have on the country from that perspective. So coming to the point, PD, you mentioned on the economy, I think so many things happening and so many variables at play right now. I think it's very, very difficult to say in the short term how the economy looks like. But having said that, if you look at on the long-term trends, I think this clearly seems to be a global reset happening. Across segments, across geographies, if you look at it, I think everything is back on the drawing table. So if you look at the recent data that's coming out from the US market, I think a lot of things that was taken for granted, that there will be a soft landing, it's an exceptionalism, I think those are all off the table. Now, every data is looking very, very different. Maybe by today, end of day or tomorrow morning, we'll have the payroll data and the employment data. If that disappoints, I think there will be further more recalibration that will be required to be looked at. So that's on that front. If you look at the whole situation that's happening on the tariff, the time is coming closer for the 90-day period to get over. So there is a lot of hope that it has a amicable settlement across various geographies. Vietnam has been already announced. India seems to be the front runner, where we are almost close to getting it announced. In what shape and form and size it gets announced is a different thing. But the fact is, because of all these things, I think the corridors are changing. We can clearly see that the trends in terms of the trade overall is going to change. So I don't think in the current scheme of things, it's fair to say that the trades will stop. I think the way the trades are being done will go through a lot of change. So that's another trend that we are seeing. Coming to the closer to the home market from in India, I think most of the data that we see from an India perspective, as Mr. Rajneesh Karnatak also mentioned, I think India is well positioned right now. Whether on an absolute basis, I think we look at it, or on a relative basis to what's happening globally, I think whichever angle you look at it, it looks very good from India perspective. So more often than not, at least we share with our investors that this is from an India perspective, it's a Goldilocks moment for us. That everything that could go in our favor is happening in our favor right now. So the opportunity window is really prime for us to encash, and it's a short window because everything is getting reset, so things will change very quickly. Overall, we are seeing from a balance sheet perspective, I think Indian corporates are again in the best shape because the leverages have all come down. They have the ability and the ambitions to become bigger and bigger companies. We are seeing a lot of companies looking at inorganic growth. This is the time when they know that the access to capital is not an issue, whether it is on the capital market side or on their own individual cash flows. The ability for them to look at opportunities outside India is also growing because of the technology availability that they have. So overall, my sense is on the economy side, we are quite bullish that the activities will keep going up. We should be focusing on how we can expedite this and ensure that we don't miss out on this opportunity that's throwing up because whatever is happening globally and in the overall market.
Great, thanks, Pranav. Tushar, from your vantage point, what are you seeing more from the future of the current situation, the volatility? How are you managing it? Number one, and number two is a little bit about your digital journey. Will be very useful for all of us to know about.
Thanks, PD. So I'll give a bit of a background about Mashreq Bank and then I'll get into yours. So Mashreq Bank is the largest private sector bank in Dubai. It is over 6 decades old. It was actually older than UAE. So it was actually called Bank of Oman. And it was formed before UAE. And once UAE was formed, you couldn't have a Bank of Oman in UAE. So that's why the name was changed to Mashreq Bank. It is obviously a single A rated bank, one of the very high ratings in the world, and extremely well capitalized and profitable. The returns are over 25%, and it is growing 20% year on year. Coming to India, India is the largest offshore hub for Mashreq, and it is one of the highest focused countries for Mashreq globally. In fact, we continue to infuse capital in the country. We did some last year also. And we also have a global center in Bangalore where we do back office processing for all our offshore locations. And as we speak, this week we got our approval to set up GIFT City also. So that continues to be our focus and endeavor in the country. And what I would say here is that the global headwinds which are there, but I think from a Middle East and India perspective, I think this is the best time. If you see, Middle East is a kind of, from a growth and stability perspective before these attacks happened, was very different from the rest of the world. The trade was doing very, very well. And there was lots of investment which was happening from Middle East to India and vice versa. And the Indian government signed the Comprehensive Partnership Agreement in 2022 between India and UAE. After that, the trade has just grown 30% year on year and is targeted to touch $100 billion. And we are seeing a lot of UAE companies investing in India, whether it is in the pharmaceutical sector, in the retail sector, in the food sector. So for a bank like us, I think it is a very opportune time and a very good time because we are in the midst of sort of ensuring the flows between the two geographies happen very seamlessly. We are seeing more and more companies, or Middle East companies coming in India, and we are seeing more and more Indian corporates going offshore and acquiring and growing their businesses. So from that perspective, I think it is working well from that perspective. And the trade flows which were there, I think there's a change. Rather than having multilateral treaties, it's more a chance of having bilateral treaties with the world and with each country. And as India signs those treaties either with the US and like it's done with UAE, it's signing with other countries, the trade flows will sort of reorient towards those. And banks like us are in the middle of that, playing into that situation. And I think our government has done an excellent job managing the sensitivities both of the country as well as the trade flows from that perspective. And if you talk about digitization, when I was coming here, I passed my old office, which was here 30 years ago, and it reminded me the day when we launched internet banking in the 90s. And I was a payments officer in the bank, and I thought that the day we launch internet banking, my day will be, relatively simpler, because most people will start now using internet banking. So, but it happened. But the first call which we got was that the person said that I have done an internet payment, but has the transaction gone through? Can you confirm? And the whole day was flooded with calls, with people asking us to confirm whether our transactions have happened or not. So for the first week, we had to set up a special desk to answer those questions, whether the transaction has happened or not. So from that period to now, I think India has come a long way, where the expectations of the customer is very, very different. They wanted customized solutions, they wanted flexible solutions, they want a solution which is bespoke for them. So from that perspective, I think the digital space in India has evolved significantly. And as Dr. Sinha mentioned, I think India is ahead of a lot of other countries in the world in terms of our tech stack. And we continue to evolve from that perspective. And in Mashruq, we are both focused on our customers for digitization as well as automating our internal processes to make sure that we enhance our controls as well as use the latest tools and technology to meet the growing requirements and provide those bespoke solutions.
So I think that's exactly what the regulator is asking for, right? To automate some of your control systems, etc. So you obviously are a shining star ahead of the curve in many of those aspects. So thanks, Tushar, for sharing that. What we're hearing is complete reset, lots of disruption, uncertainty, don't know what the future holds. How does a rating agency survive in all of this? So maybe do share with us, what do you think is going on and how do you think we should cope with it, number one. And number two is, what is the relevance of rating agencies and ratings to both the borrower and the lender, in fact the entire ecosystem in the financial services system, and how we should look at it?
Let me just first start by thanking IMC for this opportunity and the very contextual thematic address by Anand Sinha that set the thought process in motion. It's heartening to see the convergence of the views coming from the Indian arms of the MNC banks and getting reinforced by pure India players who have their global footprints in the form of Bank of India, and I am representing CareEdge. I think one thing which stands out very clearly, in all facets of the financial system and the global economic landscape, we have made our mark. It's for no reason that we see this convergence of the views coming from the stalwarts sitting over here. It's a testament to the resilience of the system. It's a testament to the strength of our institutions, which has been built over the decades. And also, it's a testament to the commitment of India Incorporation as a whole. When as the first Indian rating agency to make a mark on the global space by entering the sovereign and the global scale rating, which had been the domain of the Western world, I think we are proud of the fact that within 7 to 8 months of our operations on the global scale rating as well, we are a part of the global top 10 in terms of the coverage of the ratings. If this is something which is leading to
a greater integration of thought processes. I believe that India's banking system shall be the hallmark of excellence in all facets of the functioning. When I was thinking about this theme of the conference as well as for the panel, I had certain views which were hovering on my mind. But they all got reinforced when I was a part of the closed-door discussions less than 48 hours back, wherein views of the regulator, the participants in the system, and we as the risk assessors, they all were gathering around some similar themes that just further strengthened and reinforced my thought process. Without getting into those details and sticking exactly to the theme and how we as the rating agencies are contextual as far as the overall system is concerned, I think today, as this industry in India is into the 4th decade of its operations, we just cannot think of the landscape, the financial landscape of the country without the rating agencies. It has pervaded and percolated to all facets of the functioning. Be it the investors, be it the issuers, be it the regulators. From its contribution in the form of disintermediation and efficient allocation of the capital, ratings have an integral part to play. For that to happen, if we first start from the investor's perspective, it provides them a critical assessment tool and informed opinion making when it comes to balancing the risk-return paradigms. Moving on to the issuers, not only does it give an assessment to benchmark themselves, but also leads them for a potential reduction in the borrowing cost. This is the outcomes of the rating. And when we talk about the regulators, I think one of the fundamental things which any regulator could be looking forward, and we have an eminent regulator sitting in front of us, is the fact that every regulator looks forward to an orderly growth in the financial system. For an orderly growth to happen, there has to be a consistent bridging of the information asymmetry which is there in the market, so that the investor and the entire fraternity, the lenders fraternity, they're able to take the right decisions based on certain inputs. And that's why the rating agencies like us, they come into the picture. I think in an overall sense, when we are looking at this sector and contribution of the rating agencies, one thing which comes to, which is coming out very clearly in my mind is that, number one, as Rameshji alluded, we are at a stage of the economic growth where potentially the problem that we thought of twin balance sheet has actually turned into an advantage. And that is courtesy, the kind of innovative resilience which has been brought about by the sector, as also the fact that the strength of the regulatory system that has got manifested again and again, which has helped the country withstand the volatility and the vagaries of the geopolitical developments in a much better manner, even as compared to the so-called developed world. So I think in an overall sense for the future as well, we are optimistic, and I'm fully in congruence with the views which have been presented over here, and also the fact that from the rating agency perspective also, both from a domestic angle as well as from the sovereign angle, on both the facets, India's strength are something that the global investors are going to consistently take note of. Thanks.
Thank you, Mayor.
Rajneesh ji, coming back to you. I know you're in the middle of very exciting AI and ML projects. It'd be lovely to hear from you, what this is all about, how you think this is going to help in banking overall, and your personal experiences of this journey as well.
Thank you, PD. Thanks for that. So we have a very robust AI/ML project which is working in the bank. Actually, when we started, the genesis of it was in 2023. Actually, when we thought that we have so much of data, how to use that data. Just to give you a perspective for Bank of India, so as on March 25 numbers, we have total customer base of 12 crore plus. So if we remove the Jan Dhan accounts which are there, the BCBD accounts which are there typically, they are around 5 crores. So 7 crore is the normal customer base for Bank of India. We are a bank which has nearly 5,300 branches spread across all rural, semi-urban, metro and urban centers. So how to use this data of nearly 7 crores of customers which was there. So to do that, we onboarded one of the best IT-enabled services company through a process. And then what we did was we launched a Star Aditya project. So what is this Star Aditya project? This Star Aditya project is to leverage the artificial intelligence, machine learning and also generative AI into the banking system for enabling the business, for the controls and also for the underwriting and also for the leveraging of the early warning system which is there, finally to help the staff and also to help the customers, improving the customer service and other things. So what we did is we called this project Star Aditya as Aditya is an acronym which means analytics driven insights to yield actions. So everything is analytical driven in this, and the basic mission of this is to build a culture within the bank which is of taking decisions which are data driven and through digital format through a straight through process wherein there is no manual intervention of the staff and everything is digital, whether it is into business, whether it is into the early warning systems, whether it is into any compliance function or whether it is into any kind of customer service that we are trying to give. So these were the basic, the mission which was that, and that was the underlying problem which we wanted to solve. So now the project is fully up and operational, and there are basic 4 pillars in that. The first pillar was with respect to the revenue enhancement. So what we did over there is the data, the 7 crore customer data that we were having, it throws it back to the customers and also to the staff. In the sense that the emails, so first of all about the staff. So the data project, the Star Aditya data sends emails to the branches every day about the leads which are available within their database of the branch, the customer which is there in the branch, right? That is the first part. Second is it also gives SMS to the branch managers and also to the concerned officers. If a credit officer is there, the SMS would go about some leads, about the credit leads which may be a new to bank, NTB which we call, or ETB which is the existing to the bank. And also the SMS goes to the branch head if any other thing is there about the sales and marketing part is there, and if the person is into recovery and into the collections, SMA collections or the installment collections, there the SMS goes to the staff with respect to the installments which are becoming due of the customers of that branch. That SMS is also going. So that is just an example how it is working out. Beyond the email and the SMS, the staff is also getting WhatsApp. The staff is also getting calls from the call center, where the call center staff is also calling our own staff just to nudge them and tell them that these are the important tasks and things that you have to do in the branch today. It can be at the branch level, it can be at our underwriting centers, which we have around 450 underwriting centers for retail, MSME and agriculture. It can be also to the zonal office, which are basically the overlooking officers, administrating offices, 69 administrating offices which administer the branches. And then it can be also our FGM offices which control the zonal offices at each of the centers. So this is how the structure was panned out. Apart from that, these communications through this project are also going directly to the customers. So how they are going? Again, they are going, emails are going to the customer, SMS is going to the customer, WhatsApp is going to the customer, and calls are also going from the call center. Now what it is, so if a customer is, for example, under the AI/ML, if this data finds that there is an education loan of a student and that education loan is now under repayment, where the education is over and the job is there, and 3 installments have already been received from that student, and he has got a job and installments are coming now. So immediately email or a SMS or a WhatsApp will go to that customer who is a student now and who has taken up a job. Like if he wants to immediately avail a housing loan, he wants to avail a vehicle loan, he wants to avail a personal loan, or if he wants any of the wealth management products which are available to us. Like we have a subsidiary which is selling mutual fund, so that message will also go to him now that he is earning. Does he want to have a SIP, SIP he wants to open? Does he want to open a demat account? Or does he want to open and take some insurance? We have a subsidiary which is selling insurance also. So does he want to any life insurance or any non-life insurance or any health insurance product he wants to get? So these kinds of things are coming and going. And then many of our customers are having savings account, but they are not banking with us in terms of the loan facilities. So there what we see from our saving statements is that if any EMI is going from our saving account for serving any EMI of a home loan, say from a NBFC or a vehicle loan from a NBFC, there again that message or mail or calling up is going that why don't you avail this facility from Bank of India, where the rate of interest maybe are lesser or the repayment terms are longer. So that kind of messages are going, and this is all through this Aditya project which is going, and there is no intervention of the staff anywhere, and this is all an automated thing which is we are leveraging the artificial intelligence and machine learning under that project. The second pillar under this is with respect to the customer centricity. Here what the AMIL project does is, Project Aditya does is that it gives personal hyphenization to the customer. So if a customer, we come to know from the data is that this customer has searched about a vehicle loan from any of the data. So immediately a message will go that Bank of India is also selling and giving vehicle loan products. So that kind of thing. Immediately another message will go that these are the tie-ups with these dealers with us, from where he can purchase the car or where he can take the vehicle loan from Bank of India. So that kind of personal hyphenization is also happening under that, and customer is at the center of that. So whatever the customer is looking for from the data, we are able to generate that kind of thing. And if someone has searched for an insurance policy, then again immediately the message will go that these are the insurance product available within the bank, and if he wants to avail on any of those insurance product, immediately that kind of personalization is there through this project. The third pillar in this is with respect to the pre-delinquency management. Here again, a lot of tools are there within the system which tells the customer in advance that today, like we are on 4th of July, and suppose the installment in the system is of 30th of July, the customer will get SMS or WhatsApp or email starting from say 10th of July that your installment is due on the 30th of July. 20th of July again he will send. If he pays on 21st July, the system will know that he has paid it. After that the message will not go. So that kind of specialization this AIML project is having, and that kind of deep diving is happening. And if he is not able to pay the installment of 30th July, and on the 1st of August, for example, the account becomes SMA 0, immediately the next string of messages will start going to him that he has skipped one of the installments, unnecessary, he will be paying a penal interest on that. And what will be the penal interest unnecessary he has to pay? It will be better for him to regularize his account so that his data is not reported to any of the CIC platforms. So that kind of information also start flowing to the customer, and we try to educate the customer why paying of the installments in time is so important for him. So it is an education part also for the customer. So this is the another thing which is going, and it happens till the entire life cycle of the loan account, right from if the account is regular, still it is going. If the account becomes SMA, it goes, and if the account becomes NPA, then again another set of kind of correspondence goes to the customer through email, through SMS, through WhatsApp, and also through the call centers. And last but not the least, the fourth pillar of this project, Project Aditya, is with respect to the employee experience. So where in the employee experience, what we have done is we have a dashboard. We call it Click now. What is the dashboard? So the staff just has to click, and on the dashboard, any kind of business parameter which is there in the bank will be available to him depending on which position he is. Right from one scale, one officer at the branch level till the MD CEO. It will be available whatever data any person wants to see. If a officer in the branch is looking after credit, so he can see the entire dashboard of his credit in the branch, what is the credit outstanding in the branch, which accounts are going SMA, which is the sector in which the outstanding is there with the retail, how much is the outstanding in retail loans, how much is the outstanding in MSME loan, within retail loans, what is the outstanding in housing loan book, what is the outstanding in vehicle loan book. Similarly, for the MDCO or the zonal head or the FGM, all that kind of data is available at the click of the button. So what we are doing is through this AIML project, which is artificial intelligence and digital learning, that the entire ecosystem within the bank is now controlled through the dashboard and through the AIML project. So this is what we are doing as far as that is concerned, and technology is a big enabler to all of us in the bank for doing that. I am sure that all other banks are also doing it. Maybe we are at this stage, some banks are some better stage than us, but nonetheless the process has started for the AMIM. Thank you.
It's fascinating, Rajneesh ji. Thank you for sharing. And so I can see all our fears about losing jobs, etc. I think AIML still needs to be supervised, and it can act as a tool rather than take over the job that we are doing, right? Pranav, very quickly, any global use cases that you think may be interesting in the Indian context? Otherwise, we can move into Q&A as well.
Sure. No, so I'll not take much time in the interest of. So the only couple of use cases that I can say is that the AI is actually now moved way beyond the automation and bringing efficiencies and doing the same repetitive task faster, simpler, error-free. I think it's more about now the generative AI phase. So more often than not, I think the kind of stuff we are looking at is how can it add value in terms of the overall process, which was not present till now. So a simple use case I can share is that all our legal agreements in the US now, we can actually put it into our LLM model, and that checks all the compliances with the regulatory requirements or any of the legal requirements or laws. And any term sheet that you give to a client, you just put it on that, it generates a legal agreement which is error-free, and also points out that some of the legal agreement requires an amendment. So that's one. Second, we have launched something called Kinexys, which was earlier Onyx. This is for cross-border payments using blockchain technology. Now this enables a lot, big time in terms of use case using AI again. And the last one I would say is that the LLM model from a generative AI is actually changing a lot of things the way the bank functions internally. So we have about 200,000 employees who work on this LLM, which is only in-house for JP Morgan. As of now, the survey shows that people have started saving about 4 to 5 hours a week because of this. So that clearly shows the enormous benefit that it could generate. So these are some of the things that we are using.
Quite fascinating, quite fascinating. And I think apart from writing equity research reports, which again the machine is doing anyway, to many other things, I think will get taken over by the machine. And as the machine learns more, maybe our jobs will be more to make sure that there's no bias in the output that comes out. We have a few minutes left. I really wanted to speak to Tushar about trade with Middle East. I wanted to speak to Mehul about intrinsic risks. But in the interest of giving the audience a chance to also ask a few questions, we open it up. Please be respectful to keep it high level so that it's applicable to everyone who hears, would also want to hear from a response to that question. Yes, sir.
My name is M.K. Chauhan. I am incoming Vice President of Indian Merchants Chamber. My question is particularly to the reference of financial inclusion. Despite of the fact that we have 55 crores Jan Dhan accounts, the more important thing is that usage of those accounts, just merely for the sake of opening accounts, they have been done. So the whole panel, any ways how we can sort of encourage and motivate these 55 crore people to start using those accounts. Then only in true sense the financial inclusion will happen. And I say this from the point of view of a very close information because I was founding chairman of Fino Payment Bank and I have seen it very, very closely.
Yes, sir. I think, again, Rajneesh ji, coming to you because being the largest bank with a very vast footprint in India, also what we heard last night from the Government of India was also very similar in a forum that we were on, where the aim is to make sure that these accounts are used also, so not misused. So if they're not being used, the guidance is not to force keeping them open, because they could also lead to, being misused.
No, it's a very valid questions actually that you have asked about the financial inclusion. So definitely financial inclusion has happened in the country in the last 10 years, I would say. There is no doubt about that. But yes, there are certain gaps which are there. As you rightly said, that there are certain inoperative financial inclusion accounts which are there in the system. But nonetheless, if you see the overall macro view as far as the financial inclusion is concerned and the Jan Dhan accounts are concerned, so huge benefit has also accrued to the society, community at large and the banking system with that. So if you see the average balance which was 10 years ago in these accounts and the average balance which is there now, it is at least 4 times more than that from what it was 10 years ago. Similarly, the balances that the scheduled commercial banks are having today in these accounts, it is at least 6 to 7 times more what it was at least six years ago. So that kind of build-up is happened, which means that cash flow is there with these people and they are putting their money in the saving accounts and with the banks. But the gaps remain that there are certain inoperative accounts also, particularly in the rural areas, that all the banks, all scheduled commercial banks are trying to address it and try to get the re-KYC and get them made operative. That is one thing. And otherwise, if it is this such kind of depositors are not wanting to use those accounts, such accounts are also getting closed because individual may be having account in X bank, he doesn't want to use the Y account, bank account, so obviously those accounts are also getting closed. But the latest thing which is happening is that on the mule accounts, as rightly said by PD Singh ji also, that we have observed that some of these accounts are also being used as mule accounts for the cyber fraud which are taking place. So, but nonetheless, we have been very cognizant to that. RBI has also been very cognizant to that. So recently, Mule Hunter has already been started by Reserve Bank of India, which will help in tracing these mule accounts within the banks. And there is a I4C mechanism which has been started by Ministry of Home Affairs for all the scheduled commercial banks, and we have a back office and all the payment data which comes, the entire any UPI transaction, 160 crore UPI transactions are happening every day in the country, and majority of small UPI transactions are happening through the Jan Dhan accounts. So what has been done is, when the transaction happens by an individual and the credit has to go, the Mule Hunter gets activated in each of the scheduled commercial banks who are live. We are one of the live banks in that platform, and immediately the alert will go if that credit is going into a account which is a mule account identified by the Mule Hunter, the RBI software which is there. I am happy to share with you that in Bank of India itself, we itself in the last 6 months, we have been able to save 147 crore of depositors' money through these Mule Hunter accounts. So it is go live with us, and many of the other scheduled commercial banks, both private and public sector banks, and the government and the Reserve Bank is taking steps in the right direction for protecting the cyber security for the clients. Thank you.
So, Professor Chauhan, I think financial inclusion for banks and Government of India are at the top of the priority list. And again, the suggestion made to us was also use CSR funds for financial literacy to make sure that these accounts get used for the purpose that they were opened. So I think that is a very valuable input as well. So I think one last question, we've already run out of time. So
if there is time, I'll ask the question. Okay, my name is Raj Nair. I'm a former president of the chamber. My question is about what more can we expect in terms of customer centricity. What you mentioned was very, very impressive. In fact, it makes me wonder whether I made a mistake by removing Bank of India as one of our bank 25 years ago. And the context is that the branch manager came and talked to our CFO and said, look, we're fed up of your company, you're growing too fast, you're adding too many people to the salary account, it's a lot of burden for us. He said, look, it's good for you. I said, from there, what you're saying today is extremely impressive. So a question for all of you, what more can we expect in terms of customer centricity as customers?
So from our side, I would, because we don't do retail in India, but globally we do. So I think what more you can expect is, one is hyper personalization. So every customer's needs are different. Every customer's way of usage of banking services is different. So one, hyper personalization is clearly one aspect of the customer centricity. Second is more proactiveness from the bank in terms of customer choosing certain products and services based on their understanding, versus the bank having an insight saying there are 3 other alternatives which you may have not thought of because it was not known to you. So that could be the another one, saying that you want this product, but there are 3 other alternatives which may be actually better suited for you. So that's the another one that clearly, and again, powered by technology.
So let me also add a few things there. So for example, the feedback that we've always got is that a home loan is a very restrictive product, so can you make it flexible? So one of the products, the flexible home loan product, has come out of feedback from customers. So make it customer centric, of course, within the guidelines and parameters that you have to adhere to. Second, there are certain branches in India that are 24/7 for locker operations, because that is a feedback that customers give us on a regular basis, that you've been a bank here for a long time, you know how India is, it's very difficult for us to come and we don't need to access our locker until we are going out somewhere in the evening. Jewelry needs to be put back after I have come up from a large event. I don't want to take it back home. So those are the kind of innovations that I think every bank has brought in. If you don't listen to the customer, he'll go somewhere else. That's a fact of life now. And I think that competition and the very astute understanding of what the customer wants is very important for any bank to survive today. Sure.
KYC is, I think, the biggest concern for most of us.
Yeah,
we end up giving the same documents over and over again
Yeah.
for a simple financial transaction.
So here you have a regulator who rules by disruption. So the regulator has said, if you have CKYC, I cannot ask you for that information.
But that's again a garbage in, garbage out. So
So-
I
so
suppose AIML should first address something like that.
So you're right. It's one of the biggest pain points in the banking system today, for both sides, right? So and again, something over-induced maybe by over-regulation, anxiety that we are having new accounts, that system is being defrauded. So to make sure, so for example, my bank, every single savings bank account holder is visited at their premises to see that they exist there. So that's the only way you can do it. Now this no AIML can take care of. So we've tried everything, but you still have
There's video KYC, which is very unique again by RBI.
and again, it's the only place in the world where many banks are able to do video KYC. So again, lots of innovation, but lots of dangers that need to be done in the traditional form, right? Great, thank you very much. I must thank my panel members for being so open, transparent, and also sharing so many interesting things. I, for one, learned a lot today, so I'm sure it was useful for all of you as well. Thank you.
Thank you for that impression. I now request Mr. P.D. Singh to present a memento to our panelists as a token of our appreciation and gratitude. Mr. Mehul Pandya, MD and Group CEO, CareEdge. Mr. Rajneesh Karnatak, MD and CEO, Bank of India. A loud round of applause, ladies and gentlemen. It was a great session. Mr. Pranav Chawda, CEO, JP Morgan Chase Bank NA. And Mr. Tushar Vikram, Country Head and CEO, India Mashruq Bank PSC. May I request Mr. Sanjay Amariwala, President IMC, to present a memento to our moderator, Mr. P.D. Singh, as a token of our appreciation and gratitude. May I request all to stand for a group photo. Thank you. And now, ladies and gentlemen, we now begin with our next panel discussion on cyber security, a significant challenge for banks and financial institutions. I invite Mr. Parvez Dewan, Managing Director, Matrix 3D Infocom Private Limited, the moderator for this session, onto the dais. This session will concentrate on the most talked about and in-trend topics like emerging cyber threats in digital marketing, zero trust security architecture and AI-driven fraud detection, regulatory and compliance challenges in cybersecurity, role of fintechs in enhancing cybersecurity. The esteemed panelists joining the session with the moderator are Mr. Anil Kurul, Chief Information Security Officer and Head, Data Protection Office, Union Bank of India, Mr. Bharat Panchal, Chief Risk Security and Stakeholder Management Officer, Bima Sugam India Federation, Mr. Rajesh Mirzankar, Co-Founder, MD and CEO, Kia.ai, Mr. Kuldeep Pal, CISO, Bank of India, and Mr. Nitin Bhatnagar, Regional Director, PCI Security Standards Council. May I request all to join us on the dais, and can I request all the participants to not crowd in front of the dais.
Excited. I never knew bankers could get so excited. So, good afternoon. And yeah, we were supposed to, I have good morning there, but I think we are running about 30 minutes late. So we'll start immediately. You know, it's so encouraging to know where India is going. And, you know, the digital triumph. In the last 2 hours, we have heard what is our growth, how fabulously we are moving ahead. 131 billion UPI transactions in 2024, right? And that number is only growing. That's not going to go. And 83% of all digital payments, UPI. Now, with that, there is a check. So we have faced in the first only financial phishing. See, there are many kinds of scams and many kinds of things. Only financial phishing in the first half have been about 2 lakhs. And, you know, you're talking about a 175 to 200% increase in the attacks which are happening. And last year there was a major area where almost 300 small banks went down. So what is the $5 trillion question? Right? 5 trillion. 2027, India. How do we secure, how do we protect, how do we secure a digital ecosystem? And today I have a fantastic panel. You are going to get CISOs from the largest banks, fintech, insurance platform. We have a co-founder from the NPCI, so we understand payments, and then we are here to discuss. Okay, so the objective of this is not to give you statistics, but to discuss how we are going to primarily get ready for 2027, right? Because the way AI is going and security is going, it's not going to be like planned for the next 6 months or 1 year. We have to get ready for 2027. And so without much ado, I will start immediately. For gentlemen, I think you will need to introduce yourselves, please, if you don't mind. My name is Parvez Diwan. I'm the founder of a company called Matrix 3D, which primarily looks at information security, GRC, and every aspects of threat modeling, every concept of penetration testing and vulnerability. I think one of the only pure techies out here. But let's take that on forward. So without any specific order, I will start with Mr. Anil, CISO and Head Data Protection Office, Union Bank of India. So, Mr. Anil, it's very interesting. You are CISO and Data Protection Officer. That is unique to banks. This is very important for you to note. And it's the first public sector rank to have that kind of thing on leadership. Otherwise, you know, IT is considered an enabler, but you're talking about on leadership. And I think that's showing very high level of maturity at the Union Bank of India. So how are you integrating cybersecurity and data privacy strategies, especially in DPDP, as per DPDP Act? So.
Yeah, thank you. And I'm Anil. Good morning. I'm Anil Kuril, Chief Information Security Officer and Head of Data Protection. Now, as a Union Bank of India, obviously protecting every customer is a aim for us. And being a CISO for the bank, obviously that becomes my primary duty to do that.
each one of us knows that how important it is for banks to protect not only to themselves but to their customer also. And cyber security is one of the threat which is ever growing, the kind of an attacks which are happening around the world and in India specifically. I think it's going to increase only, it's not going to decrease in any day. Now when it comes to the protecting the customer and protecting the organization, obviously banks like Union Bank of India and almost every bank, they work on a multiple level. One, which we are talking about at the technical level, which means that the kind of a tools and technology which are needed to protect the bank system, as well as to identify the threats and indicators which are coming in a proactive basis and take action around this. Second important aspect is in terms of a customers. Now we all understand that while we are all educated, and we think that we know, but the kind of attack which are happening, and particularly Parvez has talked about the AI part of it, particularly the deep fake attack which are happening, that leaves nobody. In fact, in recent past we have seen the number of attacks which are happening using the deep fake are increasing multifold, and people like ex-CEO of MNCs, government officials, even the official from the regulator, official from the bank, even yes. So if you look at it, the attack which they have suffered, the loss which they are suffering, if that is the kind of a scenario with the educated person like us who can fall trap of all those kind of a thing, what about the people who are in the rural? What about the people who are not so educated? Obviously this risk is very, very high. And that's why the organization, and in fact most of the organization, they are trying to contain the risk at the device level itself, which means the mobile phone which you are handling or which you are having, if I am able to protect you for most of the threat, then probably part of job I can do it. The second part is the awareness part. And awareness is not something which I have done once in a year. Rather, it's a daily I need to make each and every customer of mine and in public in general, I have to make them aware of the threats. Now, one of the most important aspect which is coming and each one of us falling prey to that is a phishing attack. An email coming to us, we are clicking on the email and then our devices, our laptop, mobile, everything getting compromised. Now that is the one threat which none of the technology is able to prevent that. And that is what the requirement today is, to understand this part of it, not to click anything which is unrelated to us and then take action around this. The second part which you and we all are concerned about is a privacy, protection of our data. Now, when we look at the cyber security and data protection, they are the two sides of the same coin. So they are not very different. They are all integrated with each other, because when I am protecting the organization assets and customer, obviously I need to protect the private PII information also. Now this information is about you as a customer. Whatever information you have given to the organization, it's my duty to protect. My duty to protect your privacy. Now, Government of India has come out with the DPDP Act. Although currently rules are not notified, so obviously we are all waiting towards that rules to come up. However, as an organization, we are not waiting for rule to come and then we start working on it. Bank like Union Bank of India, in fact, most of the banks, they have taken the proactive step. They have created a function within the organization which is called a Data Protection Office. Their job is to protect the customer information. Now, if you look at the interaction which is happening today between the bank and the customer, we take a lot of data. And earlier, there was a tendency on the part of a bank to grab as much as data possible. We ask for your information, If you are a customer of a bank, we ask for your spouse information, we ask for your children's information, we ask for each and every information to the extent possible. The only aim was to provide you the better services, to understand your need in a better way and provide those services around this. But with the DPDP Act coming into the picture, probably that trend need to undergo a change now. As an organization also, the more information we keep ourselves, more risk is pertaining. And that's why most of the banks now they are going into the data minimization strategy, which means that the information which is needed for the banking purpose, that should only be taken. Second part is which will come as a consent. Now today, banks are using the data and processing data to understand your need. But have you given the permission to the banks to process that data the way banks are processing? Possibly in today's scenario, nobody has asked a consent from you and neither you have given that consent. But with the DPDP Act coming into the picture, probably each and every action of the bank has to be consented, which means that whatever data banks is going to take from you, there will be very specific consent which is going to come. And based on that, only banks will be able to process that. If they are not doing that part, then obviously there is a penalty provision. One more important aspect, you are hearing a lot of breaches which is happening, but nobody is coming to you and saying that there is a leakage of your data on account of these breaches. Now with the DPDP Act coming into picture, each and every entity has to come back to you. If there is a breach happens, your data is getting stolen or has got stolen, as an organization we have to come back to you and say that there is a breach which has happened, and all these are getting set into. So we are going into a much better regulated environment where you as a customer is aware of, I as an organization is aware that what my duties are, and I think this will provide you much better security in days to come. And obviously during this process, we are going to
Fantastic. Mr. Anil, this is very, very interesting. IT sometimes get, these acronyms are a problem. DPDP, data protection or data privacy. I think Mr. Anil very well put it that they are completely two different aspects. Data protection is cyber security and is basically protecting the data from hacking. And data privacy is that you have the right to, your data needs to be private. You cannot share that data. You need consent. I think Mr. Anil, that was very insightful. Now, we are lucky to have a co-founder of NPCI and we are going to use his expertise. And right now he's primarily the Chief Risk Security Officer for the Bima Sugam. And that Bima Sugam is a great initiative by, I think, made by our government. So Mr. Bharat Panchal, I think he needs no introduction. And so my question to you, sir, is more a little bit on the digital insurance and the concept of what are the kind of cybersecurity challenges would InsurTech, FinTech, everybody is there, InsurTech, and how does it differ from, you've handled traditional banking in every time, UPI, everything. So how do you manage security across multiple insurance stakeholders, sir?
Thank you. Thanks for my introduction. So I'm lucky to design the security around UPI. So I'm just I'm sure that everybody is using that safely. But when it comes to a cybersecurity, it does not see the color or the field or area where to breach. So irrespective of InsurTech or FinTech or banking and all, the cybersecurity is a maniac, and that's where we all are struggling. We have to handle with the same degree of importance, whether it is one data or billion of data, because when we are at this stage today, at no point of return, we can't detach mobile or any person the technology from our life. If we can do so, probably we'll go back to the Stone Age, right? We are not in that position. I was lightly telling somebody that if in America GPS is down, 98% American would not find their own home because they are so much dependent on GPS. Slowly, gradually, we are also heading towards that. So the cybersecurity has become a permanent part of our life, and it is giving a humongous challenges to manage from the tech side of us, because when we have to deal with 1.4 billion people. When I built NPCI's different product, or right now we are building Bima Sugam, which will be a unique initiative anywhere in the world, where we are going to integrate all the insurance requirement of yours with a single platform. It will be a frictionless journey where you can do everything on one single platform. However, the challenges emanating out in the cyber world is so much so where it doesn't differentiate between the literate and illiterate people. Sometimes more literate people are digitally illiterate people, and they are falling in the trap. Okay, because of I was part of that. I'm not saying that, and many of my colleagues may agree with this. See, India's banking and technology infrastructure is the way apart, best in the world. Even no one can compare with that. The way we have made sophistication, the resiliency, and the kind of security is built around. I think we are the best in the world. The only problem which is required, and that too what Anil said about be it the security or privacy, nothing much to do with the technology. We are ruling on the world as far as technology is concerned. Take it from me. We are the best in terms of the brain who bring the best of the technology in the world. And if we are bringing for the world, definitely for homegrown system, we are building the best, as you have seen the UPI or the India Stack is best example of that. Where we need from the cybersecurity point is not more the technology, it's more on a psychological point. And I'll compare two great examples because when it comes to a fraud today, we are losing money. I mean, many people are losing money, of course, because of various reasons. But you will be surprised to know that 70% of frauds today in our country is happening out of greed. Greed has nothing to do with the technology. Greed is a purely your mindset. Everybody wants to be billionaire overnight. And that's where we are putting our money, and then later we say, oh, I lost my money. That is one point. The second is that is ignorance. If I am a techie guy, I have made this building, this entire system, how can I fall in trap? So nothing is going to wrong. That overconfidence kills us. We are ignorant about certain fact. We know that, okay, somebody do not call me at 2 o'clock night to asking for my password to reset, but still we are ignorant to that fact. And the third one is fear. We are always afraid if my mobile is switched off, my SIM card is blocked, I will be disconnected from the world and my UPI will not work. Then legitimate fear. 98% of fraud are happening out of these three components. And only 2%, of course, technology has its own limitation. No one can say if we sitting here, if we say we have built the safest system in the world and nothing is going to happen, only two things are there, that we are very smart to make you fool or we don't know anything about security. Security and IT has always there a flow, and that is going to be there forever. Nobody is going to build a fail-safe product as far as cybersecurity is concerned. The second part coming to the privacy. Why privacy is, of course, the DPDP rules and everything is bringing so far, the strongest rule for the nation, which is needed in our time. But do you think that the day when, as Anil was saying, that it is yet not notified, do you think it's going to make a significant difference in our life after the notification comes? We are going to bring best of the technology. There will be a great consent manager. There will be great traceability of the data. There will be great compliance framework. But again, there is psychological change required. Technology will not help because I am a Gujarati and many of you are Gujarati, and you will definitely going to laugh after I am sharing this example. We bought from Bombay Central or Borivali and land to Ahmedabad in train. बाजू वाले को हमने पूरी लाइफ बता के रखा है. He knows everything about us. मेरी बेटे का ससुर सबका हम बता दे. Has he asked? But we believe khakra thepla and information sharing is caring. That's the reality. We share it. Even the person is not interested. उसको कोई interest नहीं है. But we still believe that sharing is caring. That psychological change is needed because today, and why it is, a few months back, the Ghibli thing came and everybody started Ghibli avatar, this, that, pura photo leke. What is happening? The people like this, the AI companies, they are taking your data. They are bringing, they are making use of your character, demographic or characteristic of your facial expression and all. And today, as we move for stronger authentication, we want to, like in insurance, what we are going to do now, for any claim or anything, you need not to give multiple documents. You come, give your Aadhaar number, show your face, and every authentication will happen. That's the system we are building right now at Bima Sugam. So once that is therein, It's hard to pull that system without your face. But if you are sharing your face every now and then, and some intelligent guy build the replica of your face, people are making a replica of your thumb, and they're using it as biometric. Tomorrow, with this kind of tool, people are going to replicate your face. How are you going to end it? That is where the psychological change is required. Technology is at best. We will bring far better solution than this. Unless the psychological change is there in the system, there will be always a problem. Thank you.
Fantastic. That was very interesting. So, I think what he gave us a good acronym: GIF, greed, ignorance, and fear. This is there. So, my thing to this is, thankfully, at the moment, AI is not influenced by GIF. So, we are safe. Once AI starts getting greedy, it will primarily be much bigger. And that brings us to the next concept of AI. And we have Mr. Rajesh, but what is interesting for Mr. Rajesh, of course, he is the co-founder, MD and CEO of Kia.ai, which you're seeing on the board. But what is important is that he has 30 plus years of experience, and he has experience across 57 countries. So we learn. We learn, and that's where primarily, Rajesh, I would like to understand, how do you see AI-driven cybersecurity solutions for financial institution, and how do you think fintech will play a role in enhancing banking finance?
Thank you. Good afternoon, everyone. So I'll just put the AI in context. We are using AI for good from the perspective of scanning, and I'm sandwiched between two banks for whom we provide digital solutions. Sorry, yeah, I was saying I'm sandwiched between two banks for whom we provide digital solutions, and their apps run on our technology since the last 10 years. And similarly, I'm sandwiched between two standards. One, which is a global standard of PCI for setting standards globally, which fearlessly we are adopting, and another, of course, is from ex-NPCI, which has set a global standard for digital payments itself. So from a perspective of AI being used for cybersecurity, I think it forms the basis, because at the end of the day, any response to cybersecurity is a response from what comes from ahead. It is a response pretty much like antivirus, to say if there is something that comes ahead, you build something forward from there. And I think there the momentum has to drastically increase from, let's say, now until the next 5 years, given that cybersecurity itself will be threatened by AI players coming from front. So I'll put things in perspective of what AI has a role to play. A very important part as a role to play in AI is about data. And one of the reasons we are able to run our anti-money laundering solutions, anti-fraud solutions, and other solutions ahead of digital solutions is also the fact that we use a lot of data that is available to create inferences of what are trends for fraud, what are trends for potential threats, and what are the trends that customers would fall in for from unstructured data. So data at the end of the day is actually the gold dust for us when we create AI to combat cybercrime. So I would like to point a few things that where India is coming out as a much more safer country for digital payments. One is when we look at UPI, it was almost a foolproof way of doing digital payments. The fact is, you would have heard stories from 2016 until now that people are able to hack UPI. It's not the case. UPI has been unhackable so far, and I want to touch wood at this point to say it will remain so. And that is one of the blessings that that we have as a country, that the digital payment infrastructure itself is not faulty. Second thing is it's very resilient. So people will have faith in using it. Now let's go further from there. Bharat talked about greed, right? And that's one of the cases where social engineering is used to create a situation where you would yourself with your own hands allow the cybercrime to be conducted. And there, I think, although not much can be done for that crime because it started from the user itself, but I would encourage everyone to say that, if you found a phone number that tried to get details from you to say that you want to conduct crime, and you said, oh, I'm lucky, I just avoided getting, cheated. I would still encourage you to put a complaint on that number on the call centers that are provided by the government and then the cyber security cell as well to update on these numbers, because companies like us would use that data because MHA, the Ministry of Home Affairs today, segregates that data to say which are those numbers from which complaints have been received. Those complaints go to banks. Banks are able to tap that data. So there is a MHA portal of all cyber crimes that are done in the country on reported. So it is not about cyber crimes conducted, but those that are reported to MHA. So it is, I think, a very important point for citizens to make sure they do file complaints. It's not just about a zero FIR, and don't think about what happens post putting the complaint. It's important to put one. The second point comes about sharing of data, and I think there the government has played a very important role with the formation of digital public infrastructure and taking it that seriously. I'm sure in the next couple of years we will also have a DPI for cyber security in the country. Given that we've already created DPI for payments, we are creating DPI for lending, and soon we will have a DPI for insurance. And that's a given thing that we'll have DPI for cyber security. The work is already under play with I4C, as it's termed, the Institute for Combating Cyber Crime, which is seriously looking at all these threats and being able to deal with it. So the role I think AI has to play is in one, using data. The second thing is about whole part of anomaly detection and using algorithms that are able to crunch large volumes of data to come at typically creating patterns and being able to find frauds. But a very important threat that's emerging, I'll quickly add here, is the fact that today we are talking about mobile phones being used for business. Earlier it was the computers that were being used for business, which is internet banking. Now when you look at it, banks will typically try and use the customer's infrastructures to make sure adoption of digital payments is useful and it's prevalent, which means that your mobile phone is now hosting the app, which is being able to do the transaction, and somebody else's computers were able to host the link to be able to do the internet banking. Now when we say AI, and that's something I keep telling banks, that it will be soon possible that client intelligence will supersede what is normal AI intelligence kept at the bank. So somebody will say that I don't need an AI at the bank to tell me what's my cash flow forecast. I have my own AI tool implemented in my company, and I want to now use that tool to negotiate a better deal with the bank. And I think that is where we will have to look at saying where AI will become the API. We already have a lot of APIs coming through, but AI will become the tool where you will have that interface, and we will have to deal with cyber security where you will potentially have then AI becoming one of the threats, and along with seemingly one of the opportunities as well. And last point I want to mention is that deepfakes is something that are detectable. So it's not that AI threat of deepfakes is unsolvable. For the customer onboarding and various things, that there are solutions implemented by most banks. Most banks do have technologies that will detect deepfakes as such.
Fantastic. So Rajesh, that was very insightful. One interesting point he brought in is that cybersecurity, the responsibility is also with us. Please don't only say that it's an institutional thing. Anil also said it, and Rajesh also said it, that if you get a thing, please report it. Because that's what the data helps to protect us better. If we as citizens are not going to be aware, and we are not going to do, and one more thing which he is very clearly said, that AI is dependent on data. Okay, and the more data you share, the better we are equipped to handle it. I think that was very insightful from you, Rajesh. I'll move to actually, in the order, I'll move to Nitin because they are sitting. It's fine with that. Is that fine? That's okay. I thought it would be better for the audience. Okay. So we have Nitin here, Mr. Nitin Bhatnagar, who is Regional Director, PCI Security Standard. This is a de facto standards which worldwide people follow, and getting insights from him would be fantastic. So Nitin, from your regulatory, from the standards perspective, how do you see payment security standards evolving? Because you have right now certain, there is a lot of encryption and all, and what is the, India's massive digital payment growth, and what guidance do you provide for banks struggling with compliance while maintaining innovation?
Interesting. I think,
the payment card industry is evolving, and I think we are going beyond cards now. I think that's what I should put it across.
Absolutely.
And so the standards. So we are evolving our standards to an extent where we are able to support industry with different families of the standards.
Okay.
So just not the PCI DSS, which is a well-known standard for the PCI Security Standard Council, and I'm sure people know us with PCI DSS, but we have 15 more payment security standards.
Wow, I didn't know that.
Right. So, and that's how what we have done now is we have segregated each, we have classified each standard into different product families. So we are now in a phase of announcing 7 product families of our standards, which will cater to the families of like cryptography, encryption. You talk about environmental standard security, and then we talk about mobile. We talk about the tokenization and point-to-point encryption. So these are the different families that you're going to see coming in, and all our 15 standards that we today have in existence are going to be part of these 7 different product families, and you will also see the different standards getting merged. For example, the point-to-point encryption standard that we have and the tokenization standard we have is going to get merged.
Okay.
We have mobile standards like CPOC, which is for the mobile on pin, where you put the pin on your mobile phone on a glass, and we have SPOC standard. We have also evolved our mobile standard to the MPOC, which is mobile payments on cards. Now, you will also see the CPOC and SPOC standard getting merged to an MPOC standard. We have also updated our standard of MPOC to version 1.0, which is 1.1, which is an evolving standard at this point of time. So there are a lot of things which is going to happen in terms of evolving the standards around the payments to protect the payment data globally. And these are the global standards. And how we involve in the industry is that we get inputs from the stakeholders. For example, NPCI is an affiliate member to the council, and which is also taking part in different working groups of these different standards, and that helps us know what kind of work that has been done in the country and what are the challenges that we are facing and how we can evolve these standards from the region perspective and influence them. And in addition to that, we are also evolving in terms of making sure that we get industry inputs. And in that flow, we are also setting up a regional engagement board for India and South Asia this year. And this will comprise of likes of the financial institutions, merchants, service providers, and the vendors and solution providers. And this board largely is going to collect inputs regionally and ensure that the board of advisors that we have globally, we have 62 board of advisors that sits on the global board of PCI Security Standard, likes of Apple, Google, Microsoft, and we have a couple of companies from India like Concentrix who have been on that board, which is also helping us drive or probably you can say take part in the strategic decision of what the PCI Security Council does. Now, if I go back 10 years, Bharat will relate to that very easily, it was completely driven with the brands. Now, the standards today are just not driven by the brands, but also with the industry. So industry plays a very important and crucial role on how the standards are going to look like.
Okay.
Right. So that's the whole way that the PCI Security Standard Council works at. And our role is to make sure that we educate, we create awareness, education around the standards, and help industry understand if they're facing any challenges, and we support them.
Fantastic. So that's very important, 5 families you are saying, 7 families and 15 new standards coming in. And there is a lot more happening in technology, and typically if we are there, we only talk about something called as encryption, but there is much more than encryption, and depending on the device. So it's very important for decision makers to get educated about this. There's a lot of technology which goes, and one of the very interesting thing I think where standards make a difference is APIs, because nobody works in silos, right? No, there's no bank which works independently and does not talk to any other bank, or if you're in the insurance sector, you're not going to talk. So encryption and standards are going to be very critical. If you are in the financial space, you need to understand how not only can you protect you, but there is a very popular term which internationally is accepted, but in India it's still taking on. It's called TPRM, third party risk management. And third party risk management is somewhere where you're looking at standards, whether you're looking at compliance. So GRC, governance, risk and compliance, and technical standards go hand in hand. So this is something we need to get educated about. It's something we need to know more about. So moving on to, thank you very much, Rajesh. Now, Nitin, sorry, moving on to Kuldeep. So Kuldeep, Bank of India, largest public sector, one of the largest public sector banks. So how do you balance? So this is a dichotomy. How do you balance robust cyber security with the government's digital inclusion, right? You need to give, you need to enable everybody, urban, rural, all the population. And at the other end, you need to innovate. And innovation and expansion. So how, particularly when serving diverse customer segments from metro cities to rural, how do you look at it and how will you handle it? What are your views on this?
Thanks, Parvezi, and very good afternoon, everyone. The challenge that you talk about, that is a real one. And as a public sector bank, we have large customer base, and that is very diverse one as well. But all those customers need security. They need simplicity of operations, smoothness of operations, transactions. So the requirements are same. Only thing is we have to facilitate wherever we see there are certain challenges on their side. We should have empathy with them and see that how our solutions are actually helping them to bridge those wherever there are certain gaps. Suppose sometimes language gaps are there. We try to have multilingual support wherever possible, whether it is website or our applications. We can have regional language supports into that. So even our top management also keep on harping that whatever we are offering, it should be in multilingual, so that even the remote customers are able to understand and run those solutions. If we see the overall our government objectives that our CEO sir was also telling that we will be able to be called truly a developed nation only when we are able to reach each and every one of our customer. We should have a bank account, he should have insurance coverage, he should have pension. So ultimately, if we have to reach everyone, then we have to talk in their language. So it is very much important, and security is the basic need. We cannot compromise on that, but it should be made transparent to the user so that he need not to struggle with it. So when we are designing a solution at the basic level, by default, we should give him the standard security. And if we should give flexibility to him if he want to increase or decrease. So whatever solutions we try to offer, we follow that principle that by default, we should offer them a very good, robust security baseline. Another thing is that whatever transactions or whatever things are happening, we should try to do it in the adaptive fashion. Means we should try to identify our customer behavior, how he is doing the transaction, and we should try to throw additional challenges only when there is a change. We should need not to bother him for putting password, all those things each and every time. So it should be transparent enough so that it should not be hassling him. But if there is a change in pattern, then definitely we should come up and try to validate whether it is a genuine customer or not. And technology is evolving like anything. We are getting support of AI, we are getting support of enhanced models as far as machine learning and all those things are there. So we keep on enhancing our solution in the way. And it is still, if we see the landscape, frauds are increasing. And it is a concern area for everybody. Even our government is focused on that. We also, as a part of this ecosystem, are trying to support everyone. As far as this, yesterday I was part of a meeting where government is trying to build up a database of such fraudsters, or the key ingredients like mobile numbers of those fraudsters, what kind of SIMs they have used, what other parameters they have used in other frauds. So that we are able to do transaction monitoring in the runtime. Means if some fraud is being attempted, immediately we should be able to search all those databases and flag that this is a possible fraud and stop it there itself. Because in such cases, once the money is out, getting money back is a challenge. So better we stop it then and there itself. So that kind of capabilities are being built at present in the banking system so that we are able to reduce those frauds. Even if it happens, the government has set up a robust mechanism where all the banks are part of it. If customer is able to report fraud in the golden hours, like in 2 hours, there are very, very high chances that money will be blocked because all banks in the ecosystem are part of that. And what happens in cases observed is that money will not remain in the original account. It will move to another account and then another account and then another account. But beauty is all banks or payment aggregators, they are part of that ecosystem. They are sitting there then and there itself, and money can be stopped even after a layer of 2, 3, 4 banks. So what is important is timely reporting, because after significant time, then fraudster will be able to divert it to those avenues where it is really difficult. It goes out of banking system, we can even say. It will go to crypto, it will go to overseas, or it will be used for some payments and all. Then it becomes really difficult to retrieve it back. So reporting on time is very important. So I was telling that all these things are being done in the background so that we are able to provide a very secure banking environment to all our customers, whether it is a rural customer, whether it is a high net worth customer, is a city customer. So all those things are actually going to help us in achieving this overall security objective. Thank you.
Fantastic. So there are a lot of initiatives happening. I know, Kuldeep, there is 3 or 4 years back, we've been investigating these scams where you're saying that there is bank hopping. From Ghatkopar it moves to Noida, from Noida it moves to Lucknow, from Lucknow it's gone. And we've been investigating many cases, and previously it was very difficult, but now what you're saying is correct. We ourselves are observing that a lot of, the government has put in a lot of initiatives where before it moves, so typically other countries, we've spoken to the police in Myanmar, in Singapore, across where, and you know, across other countries which are so not very cooperative with India. But now I think the Indian government is saying, hey, look, we got to, protect our own people. And they're putting in systems in place which are now going to be a challenge for everybody. And I think that's great for you. We're running out of time, so I just thought I will throw a question open to the panel. I don't have that much time to do, but just one question to the panel. And I'm combining 3 or 4 questions, and I'm please open to any one of you all who are interested in taking it. So I want to introduce this concept because I come from a tech background, and it's something which maybe the audience needs to know. There is a holy grail in security, that means something which is unachievable, which is called ZTA, Zero Trust Architecture. And zero trust means I have to be how do I trust anybody, right? Zero trust architecture. And everybody wants it, but you cannot have zero trust. You cannot say I don't trust anybody, because you are going to have APIs, different banks are going to live, government, UPI, as Bharat said that UPI was never compromised and will never be compromised. I hope so, because I think we have all the stalwarts out here. But so I'm just saying that, and what are the practical things that, on this thing where you have regulatory, okay, regulations are there, banks want to innovate, bring in new products, and then how do you create distrust? Please, any gentleman would like to pick up this first on zero trust? Bharat bhai?
So when it comes to zero trust, I think there's a good concept.
Okay.
But the fact of the matter is that, okay, whom you want to trust, you have to identify that first. Because, in a security, there is nothing called a safe till the time it really act. Look, Kuldeep was also saying, and you all must have experienced that when you open your mobile, scan the QR code and make the payment, you put 4 digits, 1, 2, 3, 4, and payment is done. how simple it is. We don't want people to get engaged in any other thing as far as security is concerned.
Okay.
For user, it must be the most simplest thing. They should not get into anything. But when we design, it is the most complex thing which we have designed.
Absolutely.
So when we design, we do not trust anybody, at least on that part, because that's the core of the product, that's the heart of the product. And security is something, the image what you have built over decades and decades is just one single breach and your reputation is gone.
I want to, Bharat bhai, in fact, bring in the next question with that, which is exactly the word which you use. That look, there are going to be breaches. And, we have two CISOs from the banks. How do you bring trust back? If there is a breach, how do I bring trust back? What are the lessons we have to learn to get customer trust? Because once customer trust is broken, there is a very big challenge.
I will answer to this. And it's not my quote. This is one of the very, controversial politician. He said this. And that in the parliament, because we were called in front of the finance committee of the parliament after the biggest breach happened in the country, the Cosmos Bank. And the committee was asking me that, okay, tell us that how you will make sure that this will not happen again. That gentleman stood up and said, Chairman sir, this is the wrong question to ask. Because rather you should change the question like this, that if something happen, how fast you will detect, and the soon you detect, how fast you will react on this. That's where the cybersecurity comes. Because there is no golden bullet. One can say it will not happen. But like in our medical science, there's a golden hour. For us also, there are golden seconds or golden minute. The faster you can think. And from the awareness point of view, let me tell you all also. Even whenever you, and that's where I link with the zero trust, whenever you are doing some transaction, hold your breath for 2 seconds. Think why you are doing this. Is it legitimate? Is it needed? Is it something really you can trust before transacting that money to him? I think this pause of 2 seconds will definitely not 100%, at least 70% of transaction will be safeguarded.
Well, let me throw a googly. I have 1 minute left, but I want to throw that googly if you don't mind. But it's very important. And this is to Anil and Kuldeep. Okay? Cyber security actually is an obsolete concept. And I'm continuing with Bharat is saying. It's an obsolete concept. It was 10 years back. If you're looking at cyber security now, you are already 10 years outdated. What banks or any financial institute should look at is something called as cyber resilience. You need to protect yourself. You need to be ready that if you are compromised, how will you recover? And that's what just saying, how do you recover? Cyber resilience is very core. So how, Anil, Kuldeep, Anil, please, how will you handle resilience rather than security?
I think I'll go one step further.
Fantastic.
Now the people are talking about the operational resilience at the organization level, because cyber security can be one such component. Now when it coming to the resilience part of it, obviously there is no single solution, which means that the way systems are designed, they should be able to come back if there is any breach happens. That is one part of it. If systems are not available, obviously, then other systems should be available so that you are able to work. If people are not available, you should have a people to take care of that, which means that as an organization, there are multiple components to achieve the resilience part of it. Now, if you look at entire concept around this part of it, and what Bharat said, I think that is also a part of the resilience only. When you do a transaction, pause for a minute or pause for a few seconds, because that is a second which is a golden second for you to decide whether I am going to do it or not. I give one very basic example. When you are walking on the road and somebody gives a gali to you, what is your natural tendency? To give back. That is a natural tendency. But if you pause for a second, then you will think that, why am I knowing him? What is the relationship with him? Even if I say something to him, is it going to matter? No. And the similar thing is happening Here in the cyber security also, when you receive an email, and let me tell you, most of the breaches happen whether within the organization or with the individual customer. Almost like a 95% of these breaches is on account of an email which is coming to you. Majority of things are happening through that only, and that is the one link. If you understand that this email, whether I was expecting to come or not, if it was expecting, that it means that it's a genuine. Something is coming to you, you are just clicking, then obviously things are going. All the banks are trying to do that part of it from the point of view of providing the resilience at your level, at our level. Government is doing, there is a concept called a digital payment intelligence platform, which is going to come up in some time now, which will tag each and every individual in the system to identify how suspicious that customer is or that account is. And if you try to do a transaction to that, then obviously system will throw alert to you saying that this is a tagged one, do you still want to send? And that kind of a mechanism is coming. So this is again a part of resilience only.
Fantastic.
Government is also trying to bring that part.
So I think we should end the session with that life lesson that if something happens, pause, count till 10. Can we have 1 minute of Q&A, sir? Or we are running out of time? I will give it to her. You tell me, you do you. One question. You please.
Okay, my question would determine that. Most of us, whenever we do, I think everybody is doing net payment, mobile payment, OTP concept is there. And by the time you complete the transaction, there is hardly like any few seconds are left where you're supposed to complete OTP part. Rather thinking for 2 seconds, 3 seconds, you have to do it like probably 3-4 seconds in advance. So that again you don't have to follow the same process. I just wanted to understand your thought.
Only one question.
Yeah. So so in a way that because the way systems are getting designed, and people don't have a time, because if you give it too much time, then obviously people feel that systems are slow and all. And as a standard, today you have available only 30 seconds to complete a transaction, whether UPI transaction, whether ATM transaction and all, and that is how the systems are getting designed. What Bharat and I am saying, and in fact others are saying, we are not saying about when you are doing this part of it, when you are initiating, think through that, whether it's needed or not needed. That is what, because ultimately, it is your money, and when it is going and you are reporting, there is already a time lost. When it goes to the first account where money has gone, the moment it will go to the second level, money is already lost in the system, because thereafter you are not able to recover it. And that is what if it goes to the first account and if you are able to react to that, then there is a possibility of getting it. But when it goes to the second level, then obviously it can't go.
I think with that, I can see people want to go ahead with that. Yes. Please give a big clap to the... Thank you very much. Please.
Thank you for that insightful session, and remember to think before you do whatever transaction you're doing. Thank you for that session. May I now request Mr. Parvez Dewan to present a memento to our panelists as a token of our appreciation and gratitude. Mr. Anil Kuril, Chief Information Security Officer and Head, Data Protection Office, Union Bank of India. Mr. Bharat Panchal, Chief Risk Security and Stakeholder Management Officer, Bima Sugam India Federation. Mr. Rajesh Mirzankar, co-founder, MD and CEO, Kia.ai. Mr. Kuldeep Pal, CISO, Bank of India. Mr. Nitin Bhatnagar, Regional Director, PCI Security Standards Council. May I request Mr. M.K. Chauhan, Vice President-elect, IMC, Chamber of Commerce and Industry, to kindly present a memento to Mr. Parvez Devan, the moderator, as a token of appreciation and gratitude. And then I request all the panelists to kindly stand for a photo, a group photo. All the panelists with the dignitaries for a group photo. Thank you very, very much. And please, please do not crowd in front of the stage. The speakers will walk outside, and there you can speak with them, because the next we will continue with lunch. Sorry. After a sumptuous lunch, it is difficult not to nod off, but we have fantastic sessions lined up for you, very interesting ones. So the next session that we move on to is digital evolution of mutual funds, diversified, democratized, delivered. And we would be emphasizing on the subjects like increasing digital access to investment platforms, greater product variety for different investor needs, enhanced convenience, and democratization of investing. So as we begin the session, may I request the moderator, Mr. Venkat Nageshwar Chalasani, Chief Executive, Association of Mutual Funds in India, AMFI, on the dais, and the esteemed panelists joining the moderator are Mr. Amit Tandon, Chief General Manager, Securities and Exchange Board of India, SEBI, Mr. Mihir Upadhyay, General Manager, Division of Investment Funds to International Financial Services Centers Authority, IFSCA, Mr. D.P. Singh, Deputy Managing Director and Joint Chief Executive Officer, SBI Mutual Funds Management Limited, Mr. Sandeep Bagla, Chief Executive Officer, Trust Asset Management Private Limited, and Mr. Saurabh Nanavati, Chief Executive Officer, Invesco Asset Management India Private Limited. May I request all to join us on the dais for this discussion.
On behalf of SEBI, I would like to thank IMC for extending the invite to us. Before I can talk about the evolution of digital evolution of mutual funds, I must mention the reforms and digital transformation in the recent past in our country. These includes evolution of Aadhaar, digital payment infrastructure, including UPIs, ensuring reasonable price of mobile data and mobile penetration. Post-COVID, fast-track adoption of electronic mode of communication and payment has also helped a lot. The mutual fund industry as part of its ecosystem over the last decades has done well to adapt and transform its practices of changing digital development taking place around. They reshaped the mutual fund product, how it has been structured, how it is being marketed and experienced by the investors. From the onboarding of the investors through the eKYC norms to the investment of mutual fund products sold through the multiple electronic modes. The post-investment monitoring also has been looked into by them. The industry is striving to better the investor experience. And as a result, mutual fund industry has seen phenomenal growth in the recent years. On the issue of diversification, let me just touch upon the diversification by giving the two examples. One is on the investor base, the diversification in the investor base, and another one is on the product offerings. Earlier, mutual fund used to be very concentrated. The investor base was very concentrated. It used to be majorly from the top 15 cities. Now, through digitalization, what we have done is we are able to reach out to the investors at even the smaller towns, and they have made it possible by the digitalization of several key processes, including, like I mentioned, the key eKYC,
the transactions in mutual funds through various things, various EOPs, and the validation of the KYCs was provided, like the KRAs which has been set up. As a result, the number of investors has increased from, say, 2 crores in March 2020 to over 5.5 crores in May 2025. On the product diversification, if we can talk about, the product diversification has also undergone a major change. Now the mutual funds have the greater product diversity, including passive options like ETF, index funds, etc., which they are now offering. ETFs and index funds are providing the low-cost entry to the mutual fund investors and many retail investors in this regard. Today, we have over 200 ETFs which are open for public subscription and offering the real-time NAVs. So this deeper penetration of mutual fund into India's beyond top 30 cities has emerged as a powerful growth catalyst for the industry. On the democratization, so what we have done is the mutual fund product is offering now to everyone, everywhere, regardless of income and geography. The direct plans through the execution-only platforms has also undergone a major change. They have seen a robust growth in India. So SEBI has introduced these direct plans in 2013 only. But however, with the digital revolution, the digital platforms set up by the RTAs, the stockbrokers, execution-only platforms, that has helped the products to be, reached to the most of the investors. Now with the mutual fund central MFUs, the number of AUM which has been garnered through the direct plans has gone multifold. Now they have reached to a staggering of 30.62 crores in 2024, nearly 45% of the AUM compared to just the 10% in 2014. Digitalization has also ensured that no matter the number of investors or the investment size, the technology has made sure that all investors investing prior to a set cutoff time gets the same NAV. So automation process has ensured that the transactions of all mutual fund investors are treated fairly and uniformly across the spectrum. Digitalization has also removed the knowledge gap which was there. The information which are transparently disclosed by the AMCs and AMFI on their websites. And in addition, the digital communication tools which are available, including the podcasts, where the critical knowledge and concepts are being shared with the public by the mutual fund participants. These information can be accessed by the investor from anywhere. So that has also given us a flip that the critical informations are available. It has really democratized the whole process of investors. So these tools have resulted in the informed choices by the investors, and it also gives them a sense of empowerment that yes, they can do on their own investments. On the delivery aspect, if you practically see, what we have done is that the mutual funds are available to every investors on their fingertips. Now it is fast, simple and secure to invest in mutual funds. As a result, the AUM of the mutual fund industry has grown from 8 lakh crores in 2014 to now 72 lakh crores now in 2025. So similarly, on the number of investors, mutual fund investors has also seen a leap and bound increase from around about 1 crore in around about 2008 to 2014. It has come to around about 2.2 crores, and up to 2025, it has come to around about 5.5 crores. So the share of direct SIPs also has seen a tremendous growth. In fact, the age group of 18 to 35 have also taken heavily on this direct SIPs. The growth, it seems like around about 23.6% it has increased, and which is highlighting the change in the investor profile also. With this progression of technology processes and increase in efficiency operations, SEBI also is in a position to launch various other schemes like the Choti SIPs, which we are able to launch, wherein with the nominal amount, a multitude of mutual fund schemes are available to the investors. So practically, what is the way forward now for us? So after having all these things, what we feel that the spread and investment of the technologies especially in the financial services space, it has led to the opportunity to ensure that the seamless integration of processes are better. In this regard, what SEBI has done on its part is it has set up a working group, which comprises of many, all the MP, RTAs, the clearing corporation, the stock exchanges, which is looking into the processes involved in the the digital onboarding of the clients. And is there wherever the redundancies are there, we are trying to take away those redundancies and trying to make these transactions even more seamless for the investors. SEBI is also working with the NPCI to increase the frequency of the settlement cycles and introducing the 24/7 time processing module of match. So this also we are taking it up with the NPCI. SEBI, the digitalization in place and more processes being digitalized, there is one thing which we have to keep in mind, both as an industry as well as a regulator, and that is the issue of the data protection and the cyber security. Because more and more processes are there, although we have put in place certain requirements subject to this regard. However, attention is more required on those aspects, because not only because the technology is transforming us and it's changing every day. So we have to be mindful of that, and we have to ensure that the trust which we have built upon over so many years is protected. As we look ahead, the technologies are already reshaping what's possible. But one thing is very clear, that the mutual funds are becoming integral part of everyday financial life of more number of investors every day. And that's the future worth investing in. With that, let me just thank you and
Thank you, Mr. Tandon. May I now request Mr. Mihir Upadhyay, General Manager, Division of Investment Funds to International Financial Services Centers Authority, IFSCA, to address us with his valuable knowledge on the subject. Over to you, Mr. Upadhyay.
Thank you. Good afternoon, everyone. I'd like to thank IMC on behalf of IFSCA to give us this opportunity to come and share some of our thoughts. So as we begin, I'd like to give some amount of introduction to IFSCA. So IFSCA is a regulator based in GIFT City. We regulate GIFT City as a jurisdiction, and it's an integrated regulator. So when it comes that all the four domestic regulator powers, which are the be it of RBI, SEBI, IFSCA, IRDA, and PFRDA, lies with IFSCA to exercise in GIFT IFSC. So as we started our journey in 2021. We inherited, I would say, a lot of domestic regulations, and that is when we started benchmarking ourselves with the global jurisdiction. That is where the real, or I would say, where we are looking forward to with our mandate of onshoring the offshore was. And that is when we started looking at other jurisdictions, we started benchmarking our regulations. The first regulation were in the banking sectors. Second, it came into the capital market, CMI. The bigger one which I deal with is the fund management regulation. That is where we deviated from the domestic side, which with the Nilesh Shah committee at the helm, which started looking at the benchmarking thing and the regulation coming out subsequently in April 2022. We shifted from regulating the fund to regulating the fund managers. That is the investment manager, we call it as FMEs. And that's how the journey began. So that is a genesis as to how the fund management as an ecosystem has developed. In last 4 years, we have now crossed close to around about 600 entities across various spectrum which we regulate in GIFT IFSC. More so when it comes to the fund management side of it, as on June, we have more than 180 fund managers who are registered with us. This would be comprising of angel funds, venture capital funds, private equity funds, debt funds, and also the retail funds. Retail fund is a recent phenomena which we have seen. So, and if we have to look at the numbers, there are 14 asset management companies who are now registered with us. Today, you would have seen an article in the Mint. The first retail fund is launched by an offshore retail fund, which has been launched by DSP. the first retail license or the fund registered by us was NJ, which will be also coming out pretty soon. So we're seeing a lot of traction when it comes to the fund management side of it. The journey has just begun for us, and that is how we are playing as a card. The initial set of, I would say, people who came in were on the private side of it. So I have to give you certain statistics. In last 4 years, if I have to look at from 2022 to 2025, and I'm just speaking about the FPI part of it, where the funds which are registered with GIFT, investing in Indian markets through an FPI route. So we have total 109 FPIs which are registered with SEBI, which are from GIFT City. Correspondingly, if you look at other jurisdictions for the same time, so Mauritius at the same time had 28 FPI registered. Singapore had 131, Luxembourg had 180, and US 146. Ireland had 185, UK had 64. So if we see the ramp up in terms of how GIFT City as a jurisdiction is coming up, it's pretty good in our assessment when it comes to that part of it. And as we move towards how we can make it better, so that is where we take a lot of feedback from the industry. We would like to understand the pain points, because we want the way GIFT should act is a point of soft lending for the foreign investors, especially the NRIs. They should be easily come into a fund which is there in GIFT, and then subsequently can get invested into the domestic market, which is regulated by our federal regulators, which is SEBI. So that has been a lot of changes which we have been doing. After the first major change which we had in terms of the fund management regulation, there are certain other changes or more ideas which we keep floating. One being the recent circular on SPVs, where we want or we are envisaging that people would make use for the structuring side of it. So that has been enabled by us. Similarly, we have also are now experimenting having a platform play where a smaller fund manager can access by coming into already existing FME, he can plug and play and start his fund over there. The idea is to have large number of funds who can go and access to large number of individuals which are there outside of India, because we are just scratching the surface. We require a lot of money for our development, and this is the way which we feel that we can play a part in doing so. So that has been the journey on the fund management side. The investment which has been now deployed is close to around about $8 billion in a span of, I would say, effectively 3 years. So there has been a good, decent amount of growth when it comes to the fund management. The ECBs which are being written off are being originated from GIFT. The amount of debt issues which are happening on the capital market side of it. So that is the holistic picture which we are trying to develop. There are certain new sectors where we would like the fund managers to actually come and play a vital role is on the aircraft leasing and the ship leasing side of it, where we've been telling or pushing that there are various funds which are there in the other jurisdictions like Luxembourg and Ireland. Why can't we have similar? Because we have a lot of credit funds which are doing it, and here you have some secured asset. Why can't you create a product around it? So here is a regulator who is nudging the industry to come out with a product, but that is where we have to see how people can do it. And when it comes to the digitization, we are trying to see how we can facilitate this particular piece, because we are at the juncture where there is a cross-border angle is involved, because IFSC is a jurisdiction is all currency except for INR. So that is where there are a lot of fintech solutions which are coming over here in our sandbox, which are trying to see how a seamless access to the product which are available in the India side of it can be, they can act as a platform for us. So they are there in our sandbox. Hopefully once they complete their journey, we will be able to graduate them into the mainstream side of it. Similarly, we have seen that law for the NRIs, there are a bouquet of products which are available. Most of the banks, they provide dollar-denominated FDs. There are portfolio managers who are providing customized solution for them. We're trying to work out a way how we can have a seamless onboarding, because the initial work of creating a mother regulation, all those things are done. Now we're getting into the nitty-gritties of the operational side of it. Here we have to see how a digital process can be enabled for them, and we are also trying to see if the domestic registry can be utilized at least for the NRI to begin with. That can be done. So those are few things which are happening. One thing which we are also looking at, since everything is dollar denominated, settlement creates it takes some time. It takes around 2 days or 3 for the funds to hit. So we are also working out a mechanism where domestic, or I would say real-time settlement can happen within GIFT side of it. So Standard Chartered Bank and CCI has come together and they would be doing a pilot project on that. So from that perspective, we are trying to iron out a lot of operational efficiencies, and the last bit of it is at enabling IT and services at, or I would say technology at the regulator level. That is where we are trying to see. We already implemented SWIFT, our internal portal, where all the applications from any of the verticals can come, land it, and people can see on a real-time basis where it is processing, how much time is there, which space where it is stuck or where it is being done. Similarly, we are also launching the second version of it, where other operational activities which are required, where a small like change in name or change in KMPs and those things are concerned, even that would be now going to the SWIFT side of it. So we are trying to see how we can integrate the entire process, so which is good for the industry to come launch their operation at ease, at the same time have also people onboarded. And everything said and done, last thing is that though there is a lot of emphasis on convenience for the business, we also emphasize that at the same time investor protection is also a key area which we have to take care of it. So as a regulator and also as an industry, both have to come and make sure that investors are not at a loss by any means. So that is from our side. Thank you.
Thank you, Mr. Upadhyay. And now, ladies and gentlemen, I hand over the session to the moderator, Mr. Chalasani. Over to you, sir.
Thank you very much. Yeah, good afternoon, everyone. First of all, thanks to IMC for organizing this particular mutual fund panel discussion. I think this is for the first time that in the BFSI sector, having mutual funds as a part of a panel discussion. Thank you for making us a part of it. Like Mr. Tandon had mentioned, the mutual fund industry had seen a phenomenal growth over the last 5 years. In fact, the origination happened in 1963 with UTI, but the real growth that we have witnessed is, we have seen it from 2018-19 onwards to the present day. And the numbers, again, Mr. Tandon has very clearly articulated. AUM has grown up to 72 lakh crores. The number of investors are around 5.4 crores as we speak now. And taking the present topic of digital evolution of mutual funds, diversified, democratized, and delivered. One important point that we would like to bring to the notice is the digital transactions that are happening in the mutual fund industry as we speak today is more than 90%. And one of the success stories, which again Mr. Tandon spoke about, was about SIPs. And the way we could collect the SIPs, as we speak again today, every month we're getting around 26,600 crores is a total as the funds that are being collected under SIPs. And again, more than 92% of the money is being collected through the digital format. So digital and the growth, the success story that we have witnessed is on account of various factors. The one, of course, the demand that has happened and people were looking for better yields. Then subsequent to the COVID effect is brought in the digitalization into the mutual fund industry. At the same time, with the SEBI's guidance, we have introduced number of products. We have gone in for a financial literacy and awareness program across the country, made it easy for the people to understand what the products are. We have run a campaign called Mutual Fund Say, all of would be aware, demystified the jargon that used to be there earlier, where earlier people used to think about mutual funds is only for the allied class, has been made available to the retail population now. But having said that, I mean, we have seen a phenomenal growth.
We were around 10% of the banking deposits Mr. Nair would be looking at us, but as we speak now, it is around 32% of the total banking deposits is what assets under management is. If you look at the GDP numbers, comparing to the GDP numbers, as we speak now, we are around 19% of the total GDP, where earlier we were around 8% in 2019. Today, as we speak now, we have come to the stage of 19% of GDP. But this is, we are scratching the bottom. It's not that we have achieved, although the numbers are pretty good when we put these numbers, but when I compare with the developed world, where the US or any Australia, other numbers, they have the assets under management to the extent of more than 100% of the GDP. If you look at the average assets under management is 65% of the total GDP of the entire globe. So we are very, very low. We need to achieve those numbers. We are looking to the financial inclusion, migrate to financial well-being. That's our objective. We're working on that. And for that, the topic is very relevant, and I'm fortunate to have three stalwarts who are moving the mutual fund industry as we speak now. So we will have the discussion with them and see how digitalization is going to help us to improve this mutual fund by diversification, by democratizing access, and also delivering to the people that is required. So to begin with, let me start with DP Singh, because he's the one who are looking at democratizing the mutual fund industry. I think the first people to launch Jan Nivesh. Subsequently, SEBI had come out with what Mr. Tandon spoke about is a Choti SIP. So Mr. DP, how are you as an AMC, as a mutual fund, how are you trying to spread? While you have done an extremely good job in the urban centers, how are you looking to move to the semi-urban and rural areas to bring a revolution the way in which financial inclusion happened in 2014-15 with the help of digitalization?
Thank you, sir. Thank you very much for having me on this program. But your point is very, very valid. As you rightly said, we started the Jan Nivesh. Because what is the intent is when we talk about the financial inclusion, the country has evolved over the last 1 decade in a big way. And when we look at the mutual fund numbers, when the whole AUM industry, the industry AUM used to be 12 lakh crores 10 years ago, which has now become 72 lakh crores. And today, our fund house alone is managing more than what industry was having 10 years ago. We are having more than 10 lakh crores. So that is the kind of growth which has happened in the industry. And very, very happy that SBI Mutual Fund and the industry per se is today actually servicing the clients across 98% pin codes of the country. The revolution which Mr. Tandon talked about beyond 15 and what Mr. Venkat has talked about is actually happening. And today with the digital payment system and digital solutions available all across the country, whether somebody is sitting in Mumbai or whether somebody is sitting in Thuang in Northeast is having the same services, same tools available to them. Now the issue is only one, challenge is only one. Today we are 32% of the bank deposits, the AUM of the industry. It used to be 10% 10 years ago. It became 18% 5 years ago. It has become 32% of bank deposit. And as Venkat sir said, more than the GDP, the journey is on. With this speed, I think 10 years down the line will be 70 to 80% of the bank deposits. So that's today, if the bank deposits are around 200,000, the 200,000 lakh crores, 200 lakh crores. Now maybe the industry will be from 72 to 150 lakh crores, maybe in next 3 to 5 years itself. That's the kind of growth. But the issue is the number of investors has to grow many fold. Because today we are having only 5 crore investor, 5.3 or 5.4 crore investor. This number need to double up as quickly as possible. The same people are putting more and more money, but new people have to come into the industry. That is a challenge for the industry. The AMFI has already run a very successful mutual fund Sahi Hai, but now decoding of that further. What is Sahi Hai in mutual fund? क्या सही है, किसके लिए सही है, क्यों सही है, उसके ऊपर जाना बहुत ज़रूरी है, क्योंकि अभी everything is not suitable for everybody. Yeah, so that's something which we need to work on. But I think the way investor education initiatives at the industry level, at the fund house level is happening, it will happen very soon. And coming back to Jan Nivesh is a very honest effort. Of course, it was the thought process came from the ex-chairman of SEBI, chairperson of SEBI, madam, that today when we are talking about the $3 SIP, wherever we go to the globe, people say, wow, how can you do $3 SIP? But our idea is not to have $3 monthly SIP. Ultimate idea is there are so many unorganized sector people who earn 1,500 rupees per day. Can we have 250 rupees daily SIP or weekly SIP from them and can make the base much broader? That will from today from 50 million customers to 150 million or 200 million customers is something which is the idea. And the moment we are able to do that, I think we will say that we have arrived, and that will be the moment where our AUMs will also be equivalent to GDP of the country.
That's right. From 50 million to 200 million customers is what you're looking at. And in fact, if you look at the banking sector, the number of customers are more than 700 million.
Yeah.
More than 70 crore customers are there. There's so much we can do, and we have with us the international AUM, global AUM, it's Invesco, which has got AUM almost around $1.8 trillion or almost $2 trillion, which is much more than the total AUM of the Indian industry. So what the digital tools that you think of, like we're talking about reaching beyond urban centers, we are looking to reach to every nook and corner of the country. And basis the global experience that you have, what digital tools that you are looking to implement in India, or what you are implementing in India to achieve this particular goal of 200 million that what DP was talking about?
So thank you for this question, and let me just give you some details about our organization and how we are structured, because actually each country is very different, and each country has a very different business model. We at this point of time as Invesco manage close to $2 trillion, and we operate in 25 different countries. I think two countries where we would actively like to compare ourselves with would be the US and China. And actually from a digital perspective, I think China is just way ahead of any country in the world at this point of time. I would say that they are in fact 10x ahead than any other country in the world. So just to give you a sense of the scale of operations, I think the China market has an AUM of close to $5 trillion at this point of time. India is roughly 800 billion, so we're almost 6 times our size. From an investor standpoint, we are talking of close to 40 to 50 crore retail investors in China. Invesco manages $100 billion in China alone, and on a daily basis, we get close to 2.5 crore transactions in our mutual fund alone as Invesco in China. So it's a completely different scale. I don't think in India we would be even 1/20th as a whole industry of that at this point of time. So it really depends country to country. Let me now get to the Indian part of it, and I think from an Indian part of Indian perspective, we have come a long way last 20 years. I was the first employee to have started my company way back in 2007, and I remember till maybe 2018-19, as an industry we had this challenge of going and meeting clients and telling them why mutual funds. So our biggest thing was, why should you invest in mutual funds and why not in bank deposits as traditionally it should have been, or real estate or any other asset classes. I think the hard work of the
industry, the association, and very importantly, SEBI, I think I've seen a dramatic shift in the last 5 years where we're not talking of buying mutual funds, but now when we meet clients, it's about which product meets your requirement. Everybody knows about mutual funds. Or we would like to believe that everybody knows about mutual funds, and the selling has become a lot more easier at this point of time in the last 5 years. A result of which you are seeing a dramatic growth in the AUM. Now, DPN, Mr. Venkat spoke about this whole concept of percentage of bank deposits. I think that should not be the comparison at all. It would be foolish of us to start comparing it with bank deposits in any form or fashion. And let me just explain the reason behind it. Say, for example, you have 5 lakhs in savings. Chances are you are keeping 4 lakhs in bank deposits and maybe 1 lakh in other instruments. But if your savings increases to say 1 crore, chances are your bank FD goes up from 4 lakh to 10 lakhs, but you have 90 lakhs surplus, which you can invest for a longer period of time, where you will get a higher return. And therefore, you will basically invest a lot more in the capital markets. You flip that to basically looking at a billionaire's portfolio. I'm sure Mr. Mukesh Ambani is 100 billion worth. 99 billion is in equity assets. He's not going to keep 50 billion in bank fixed deposits and 50 billion in this thing. It's in their own equity assets or investments. So as wealth increases, this comparison of vis-a-vis bank fixed deposits, I think will recede and will go away. And therefore that, honestly speaking, that percentage, to be honest, doesn't make sense. We are comparing two very, very different things and products. Now let me just come straight to the digital part of it and what we see where India is. I think India has progressed a lot on the digital front. Today 90%, 99% of our transactions are digital. Very interestingly, new asset managers are coming on board. We have an asset manager in Bangalore who's gone completely digital. And when I speak with the CEO of an asset management company, out of his 25 employees, 15 are engineers. And only 10 are on the business side or fund management stroke business side of it. So very different from traditional operations like me or Mr. DP Singh or Sandeep here, where we have, employees in each and every area in that sense. So I think increasingly you will see these kind of business models coming up, which are far more scalable. And the two big, I would say, issues at the ground level from a digital perspective going forward will be one, data security, and what we call information security and how we will manage it. We have grown a lot on the penetration part of it without understanding perhaps the risks involved on data breaches. I think relative to the world, we are very, very weak in that area. I think the regulators are concerned about it and the government is concerned about it, and therefore they have passed the bills. But it is a long way from an implementation perspective. I'll give you a very simple example. Any of you all, if you all have basically gone and seen a property project in Mumbai, after visiting that property project, how many calls are you all receiving in a day from other developers? Chances are 5 to 10 calls a day. And what has happened actually? You've gone and seen one property, your name has got registered, and then your name and data has been sold indiscriminately in the market to 100 other people. There's actually a price tag to your data. So depending on which platform you come from, whether it's digital, whether it is your data, there's a price tag. And I think this is where India lacks. We have a long way to go, and hopefully the digital protection bill will go a long way in securing us for the future. But I mean, just as a word of caution,
I would say that each one of us in the next 5 years will face a digital break-in, either of our WhatsApp or a bank account or whatever. And once we go through that experience, we'll realize how difficult it is and you know what can be penetrated in that thing. So I think data security is a very crucial cog in the wheel in this whole digitalization journey, and maybe we have some way to go, but we're getting there. I think on the positive side, what you will see in the next 3 to 5 years is hyper personalization. What do I mean by hyper personalization? Digital knows exactly what you're doing. There is no control on it. The minute you basically go digital, you go to a website and you say that I'm accepting all the cookies, everything is public. The guy on the other side virtually knows what you are watching, what is your interest, where do you want to, what are your areas of interest, and it will start throwing up a lot of options to you. And this is the world which we will move to as an industry in the next 3 to 5 years, where, you know, once we know you as a client, we will start prompting you that you should be doing this. And the prompt will be basically can be on a daily basis, can be on a weekly basis, can be on a monthly basis, but we will start, you know, prompting you all what action you all should be taking at that point of time. And those will be exciting times. I'll take a pause where I can go on this for the next 2-3 hours, but you know, let's move to the next topic.
Thank you, Mr. Saurabh, because you have very clearly articulated not just the benefits of the digitalization, but also the risks that are going to emanate from that. And that's where we require to ensure that the proper controls are in place. I think all of us are working in that direction to ensure that the controls are in place so that no mishaps happen. And that's what we look at for the digital resilience in this particular economy. I think all regulators, players like us, everyone is working on the direction. But then thanks for bringing out the risks that are likely to come out on account of this digitalization. While we heard about the biggest AMC here, and then we talked about the AMC, which is on the international front, their presence in the India and how it has been operating, we have a new player that has come, relatively new player. I'm not saying very new player. Relatively new player in Mr. Sandeep Bagla is here. So I would like to understand how you're using the digitalization to penetrate into the new markets, because that's something is for you to build a brand and also push your products would be relatively challenging when compared to these two big players. So I just want to understand from you.
Thanks, Venkat. Very interesting discussions, whether we should compare ourselves with banking deposits or not, how DPA and SBI mutual fund have penetrated the markets, how mutual funds really has been a fantastic campaign for increasing the knowledge of the retail investor. But you know, for a newcomer, you know, entering into the retail space, it's a very, very different experience for us. You know, while it's theoretically very easy to say that, you know, we live in a digitized world, the reality is that the person who's investing, who's say far away, is actually in the digital world, he is experiencing a lot of information. So there is an information overload from fitness to health to nutrition to exercise to entertainment to sports. So it's a very difficult world out there to create your mark. Secondly, bank FDs people understand because there is a particular rate of interest which is associated with that investment. There is a certain amount of uncertainty with equity markets, and I'm saying equity because retail is mostly equity oriented. It's not easy to communicate in absence of a certain return. So we can only probably talk about the long-term benefits. So in my mind, as a new AMC, while it is very easy to say that you can reach unlimited number of people across geographies, the practical realities are very, very, very different. We can only provide, so I have, initially we experimented with trying to popularize our schemes and our name, but it's a very futile exercise. You spend lakhs and lakhs of rupees and you don't know who has seen in the digital world. If I give an ad in the Economic Times, I know that, okay, so many people have seen it. The digital world is very different. You don't know who has seen it. Also, while you can reach out to people and you can probably, like Saurabh was mentioning, you can personalize it. But the fact is, people do not invest every day. People might be having a biscuit every day. Investment is a long-term decision. It is not an impulsive decision. It is not an intraday trading that we are doing. So I think for the current state that we are in the mutual fund industry, while SEBI has promoted digitization and the payment mechanisms are far better, it's much easier for investors to invest across geographies. As fund houses, while AMFI has done a great job in mutual fund Sahi Hai, what has really changed is that the fact that despite global uncertainties, global financial crisis, bubble of internet, taper tantrum, COVID, Indian markets have stayed resilient. And we can now say that, okay, if you stay invested for 10 years, you will be able to overcome the volatilities and you will be able to earn an interest which is close to the nominal GDP growth, the profit growth of companies. I think that is what has been the experience of the investor, and which is why mutual funds have become popular. The actual experience of the investor has been very good in spite of the volatility. I think, so I have redefined my digital goal. My digital goal is now to create reels, shorts, podcasts, reach as many investors as I can, and demystify mutual fund investments as investments that you have to hold for longer period of time. See, retail is a very boring business. It's a very standard business. Very easy to understand products tend to do well in retail. So the idea for us is that we do not want to popularize trust mutual fund. We do not hope that we will get more money from remote corners of India compared to, let's say, Invesco or SBI mutual fund. Our objective right now is to reach out to more people and try to enhance that message that mutual fund sahi hai, kyun sahi hai. So rather to give information that long-term investing is the key to success. Long-term investing should be done under supervision, maybe through a reputed or reliable advisor or a distributor, so that you do not end up investing in the wrong time of funds and do not take out money at the wrong time of the fund of the market. And I think spreading the basic knowledge which takes the message slightly forward compared to mutual fund sahi hai, I think that should be the goal of digital media, because people are consuming more and more digital media. They are seeing reels, they are seeing shorts, and people in smaller markets do not understand CAGR or rates of return. People talk in terms of मैंने 10 लाख लगाए थे, वो 20 लाख हो गए. आपने 10 लाख आए थे, 20 लाख हो गए, आपने कितना रिस्क दिया, कितने साल में हुआ, कितना रिटर्न था. People don't understand that. We are inherently dealing with a violent animal, which is the equity market. We are trying to convert that into a very palatable experience. That transformation the investor need not know about. We have to tell them, if you stay for a long period of time, you will not experience the volatility. And which is why perhaps SIP has become so popular. And I think now is the time when we have to take that message a little further, and that should be the goal of our digital messaging. And because the digitization has already happened, I think more money will flow in, because there's only limited amount of messaging that you can do over the digital media. And I think we should focus on that, and that is our goal right now.
Very well put up, Mr. Sandeep, about the digital messaging that you're talking about. While we spoke about the bank deposits, while we're talking about the way in which mutual fund industry has grown up, the risk that you were very clearly articulated, Mr. Saurabh has also clearly articulated about it. One thing that is very much essential, again, as you rightly brought out, is the financial literacy. the investor awareness and education program is something which is very important. And why we are talking about the saving habits of the Indian population, household savings, just to put a number, as we speak now, the RBI annual report that has come out talked about 66% of the people still investing in non-financial assets. Like 44% goes into your real estate, 22% goes into the gold, and remaining 34% is going into the financial assets. Out of that, around 40% is going into the banking deposits, etc., etc. But more important is that financial education, investor awareness is extremely important, because the risk that you very clearly articulated, or even Mr. Saurabh has clearly articulated about the rest. So I just want to understand from DP how you are using the technology to ensure it's not going to replace, but how is it going to enhance this financial literacy across the country? How are you using this?
Yeah. Before I respond to your question, I will just respond to what Saurabh said, that it is foolish to compare bank deposit with this thing. But I say कि म्यूचुअल फंड का रास्ता बैंक अकाउंट से होके निकलता है, तो कंपेयर तो करना बहुत ज़रूरी है. ओके, बैंक अकाउंट के बगैर तो म्यूचुअल फंड कैसे चलेगा? Only thing is how much we can keep in bank deposit and how much we can bring into mutual fund. बिना उसके तो होगा नहीं, foolish तो नहीं है. थोड़ा सा तो ठीक है.
That's a long debate, so I thought let me avoid it. Yeah. Because that's a long debate, and we talk about liquidity, the bankers are here.
So many
we can
things.
have a big debate on that, so we said let us leave it there.
No.
Yeah.
That's just on the lighter side. I said कि वो थोड़ा सा सौरभ भाई को बोल दे भाई, वो इंटरनेशनल है. He is talking about Mukesh Ambani and Saurabh Nanapati. हम तो 250 रुपए की SIP की बात करते हैं, तो हमें तो बैंक अकाउंट को देखना ही पड़ेगा भाई, उसके बगैर कैसे होगा? So now using the digital. See, honestly speaking, what Mr. Sandeep has talked about the small messaging and positioning of the funds. In fact, we have to move beyond products to solutions. People need solutions, and now the more education has to happen. How mutual fund products can be used for knitting the solutions for an individual. Today we have seen the revolution of SIPs. I think the moment has come, we have to bring the revolution of SWPs. How people can use mutual fund money, keeping it for a long period, and then keep the benefit over the longer period of time. Accumulation and then diversification. When we talk about long term, and I'm not talking about the cream la cream of India. I'm talking about the commoner. What does he need? He needs liquidity over the period of time. So the example is that of we all are, and we know how either keep the milk on the hot and take the cream out and the skimmed milk is there, or keep on simmering on a low flame and keep on having the taste of milk. So mutual fund is simmering on the low flame and keep on putting dry fruits and having the taste. And whereas mutual fund is put the milk on hot spray, take the cream out, take the interest out, and keep on enjoying the skimmed milk, where the value of money has come down. That is the example of deposits and the mutual fund investment for long period. Now, how do we do it bit by bit? SIPs to SWPs is a journey, and we are pushing very hard on the hybrid side of the products, where fixed income and the precious metals and the equities. Today, when we talk about mutual fund, 90% of the people think that mutual fund means equities. And if you talk about the distributors, out of the total active distributors, 80% of the distributors are distributing only equity products. Whereas the mutual funds are not only equity, it's equity plus fixed income plus REITs and REITs plus precious metals. This is the role which mutual funds have to play to bring on the best of the products to the kitty of to the wallet of the investor by charging a small fee. I think with more volumes, with the fees coming down, Mr. Ravi Tandon also talked about the index funds and the low cost products. I think we have reached a level where our numbers are going to be very, very big from here on. Even the kind of numbers which are there in India are internationally are very, very good numbers, because growth is there in our country. People are using this thing and using more of the digital asset to educate people. because with one message we can reach to millions in 1 minute, with one stroke, and that is being done. But how to reach out to the right target audience for this thing is very important. Creating niches is very, very important. Everything doesn't mean carpet bombing will not work. We have to be very, very targeted, very, very, if I talking about a retirement fund, how we are, when we talk about a retirement, generally we talk about a retiree, post-retirement. But we have to talk the retirement, about the retirement fund to a youngster who is 30 who has to plan for the retirement after 20 years. That is something, that kind of education we are trying to push. No more traditional messages. Mutual fund sahi hai is gone, is in the minds of each and everybody. How, when we have actually come out with a web page, mutualfundqsahihai.com, giving the details of all the what is good for whom. So that is the kind of thing that we are trying to do, and inshallah we'll succeed. We have succeeded in past also, we'll succeed in future also.
We would like to know from you, like with your global experience that you talked about, where the education is done by means of a gamified tools, interactive tools are used there. Are you trying to do the same experimentation here and propagate the financial literacy, or are you using any other tools to propagate that? And does that really fit in here for us to do that?
No, I think the Indian clientele in a way has moved to basically being instant in everything. So today, if you are at home, you want to order through Zepto because you get it in 10 minutes. I think there's that whole instantness which has come about in this whole ecosystem in India in each and every aspect of what we are doing. And to that extent, I think gone are the days where we would actually make presentations for 1 hour, 2 hours trying to explain what the thesis is for investing. I think time has come that we basically need to shift, as Sandeep mentioned, to short reels. If you can't communicate the ideas within the first 3 minutes, the client is gone, the client is lost. Short reels, very targeted messages, very focused messages. I think that's the way digitalization will move, and the whole ecosystem has moved to basically getting instant results. Even if somebody invests, he wants to instantly know that it has got invested. He needs to get day multiple reminders that this is how your money has flown and now you have been allotted units. So I think in this digital world, scalability becomes critical and client servicing basically becomes far more easier. And the ability to keep clients engaged and informed at all points of time becomes very, very important and possible. So I think these will be the trends going forward.
Thank you. I think we have run out of time. So before we close, let me have a quick answer from 2 sentences from each one of you. What is going to be your vision for 2030? Of course, for 2047, we have the Viksit Bharat, but short term for 2030, what is going to be your vision? Starting from Saurabh, we can.
I would be happy if we can reach a number of close to 200 million retail investors. I'm not putting an AUM number because the AUM number will be an outcome. If we can reach those number of retail investors in India, automatically the AUM will be a very large number.
Okay, so my vision would be slightly non-quantitative. I think if we are able to include more investors in the right way, impart that right knowledge that you should only put money which is not going to be used for 5-10 years in the equity mutual funds and in hybrid mutual funds, and that mutual funds are sahi, and I think if we are able to protect them from volatility, I think the nature of the market is such that water will flow to its normal level and people will invest more. I think the numbers will be achieved and maybe it will be surpassed by whatever number targets that we put. So I think we have to just ensure, and with SEBI is also here, and SEBI has been guiding us and has been providing a safe environment for Indian investors, that we don't do anything wrong. What we don't need are any accidents. We, like Saurabh also said, that we need to have safeguards. I also worry about data security and data infiltration and cyber attacks. I think if we are able to make the digital platform safe for Indian investors, I think we will surpass any target that we set ourselves.
So simple, I echo what Saurabh said, 200 million investors and AUM equivalent to bank deposits.
So can I have a last word from the regulators as well, Mr. Tandon? See,
Sorry? Yeah? I have said, that's what I'm saying.
225 lakh crores.
Mutual funds are also moving downward at a very high speed.
So one last word from the regulator, sir.
So for us, as a regulator, our thinking would be very clear. We want the trust to be maintained. That's the first thing which we require. We don't want any mishaps to happen. Second is the 65%, the number which you said. We want it to grow to at least 100%. That's what the point would be. And the 5.5 crores, like he said, that will go to 20 crores. That would be the ideal scenario which would have. But the important thing would be the trust thing. That should always remain there.
So trust and transparency are the two things, sir. I mean, I'm sure we all take oath on that and ensure that we stand to the expectations of the investors and empower the investors. And thank you very much for a very, very engaging and productive discussion. Thank you so much.
Thank you for that engaging discussion. May I now request Mr. Venkat Nagesh Chalasani to present a memento to our panelists as a token of our appreciation and gratitude. First to Mr. Amit Tandon, Chief General Manager, Securities and Exchange Board of India, SEBI. They are there. Mr. DP, please allow a round of applause. Mr. DP Singh, Deputy Managing Director and Joint Chief Executive Officer, SBI Mutual Funds Management Limited. Mr. Mihir Upadhyay, General Manager, Division of Investment Funds to International Financial Services Centers Authority, IFSCA. Mr. Sandeep Bagla, Chief Executive Officer, Trust Asset Management Private Limited. Mr. Saurabh Nanavati, Chief Executive Officer, Invesco Asset Management India Private Limited. May I request Mr. Madhav Nair and Sandeep Thakkar to come over to present a memento to the moderator of the session, Mr. Venkat Nageshwar Chalasani, as a token of our appreciation and gratitude. A loud round of applause, ladies and gentlemen. They have given me their time for this conference and for this panel. Please, a loud round of applause. May I request all for a group photo? And ladies and gentlemen, so we now move on to our next session, which offers perspective on achieving financial inclusion through insurance, and will provide insights on role of microinsurance and government schemes, AI and insurtech innovations for financial inclusion, parametric insurance and new age insurance models. For this session, I invite the moderator, Dr. M. Narendra, Chairman, IMC's Banking, NBFC and Finance Committee and former CMD, India Overseas Bank. And the panelists joining him for the session would be Ms. Girija Subramanian, Chairman cum Managing Director, New India Assurance, Ms. Kasturi Sen Gupta, Executive Director, the New India Assurance Cooperative Limited, Mr. Ravi T. Sheshadri, Strategic Advisor, Insursa, Dallas, Texas, USA, Ms. Aarti Bhushan Malik, Chief Technical Officer, Universal Sompo General Insurance Company Limited. May I request all the dignitaries to take their nominated seats on the dais. India Assurance to present her address. Over to you, ma'am.
I request all of you, please occupy your seats. We have a very important and from the chairman of the New India Assurance. So I would request all our participants, please be seated. Vivek Modi, सबको बिठाना. Please come sit there. Okay.
So good afternoon, esteemed business leaders, colleagues and friends. It's a privilege to stand before such a distinguished gathering of individuals who shape the trajectory of our economy and our society. All of you are architects of growth, guardians of capital, and catalysts for change. Today I want to speak about a subject that sits at the intersection of economic development, strategic opportunity, and social justice, financial inclusion, and more specifically, the unique role we as an industry can play in accelerating this agenda. Over the past decade, India has made remarkable strides in bringing millions to the fold of formal financial system. Schemes like the Pradhan Mantri Jan Dhan Yojana have been transformative. Over 50 crore bank accounts have been opened. Each of these accounts is Aadhaar seeded and mobile linked, laying a digital foundation for future financial products. This is not just access, it is infrastructure. But while the account exists, does it translate to meaningful participation? That brings us to the next phase of financial inclusion, moving from access to usage and then from usage to resilience. Let's take a closer look at insurance, a space I represent and one that is indispensable to inclusive finance. India's insurance sector has clocked a strong growth with a 13% CAGR over the past 2 decades and even higher at 15% in the non-life insurance space. We have liberalized, digitized, diversified and matured. Yet in the last 5 years, growth has slowed to below 10%. The question before us is, are we reaching the limit or do we need to redefine the mission? I believe it is the latter. Traditionally, insurance penetration is measured as a percentage of GDP. India's non-life insurance penetration is around 1% compared to a global average of 4.2. Life insurance fares slightly better, hovering around the global average. But as any business leader here will agree, numbers need a context. We must distinguish two concepts, penetration and reach. Penetration refers to premium volume relative to GDP. Reach is about how many lives or assets are actually covered. And in terms of reach, the Indian story is far more promising than the headline numbers would suggest. Consider these national scale initiatives. Over 50 crore lives are covered under PMSBY, the government's accidental insurance scheme, at just rupees 20 per annum. Over 23 crore people are enrolled under PMJJBY for the life insurance coverage at rupees 2 lakhs per person. Ayushman Bharat or PMJAY is providing free health insurance to over 50 crore vulnerable citizens. ESIC covers more than 13 crore workers and dependents, and over 26 crore RuPay card holders have embedded personal accident cover, often without even being aware of it. Let's take Rajasthan as an example. Under a state health insurance scheme, 1.35 crore families are covered. A health ministry survey revealed rural health insurance coverage at 90% and urban at 80%. States like Goa, Andhra Pradesh, Chhattisgarh, Telangana and Meghalaya show similarly high figures. And yet, not all of these numbers reflect in the official penetration statistics, as some are run in trust mode. So what does this disconnect between low penetration and high reach signify? It shows that insurance is indeed touching lives, often through simplified, subsidized, or embedded models. From a welfare perspective, that's a success. But from the standpoint of financial resilience, it's far from enough. A rupees 2 lakh cover is better than none, but it's not adequate protection. It won't shield a family from financial ruin or from a serious medical event, the loss of a breadwinner, or destruction of property. Insurance touching a life does not mean that life is financially resilient. And the story of financial inclusion is not complete unless we move from basic coverage to comprehensive need-based protection. Take the example of motor insurance. A Ministry of Road Transport study found that 54% of vehicles in India are uninsured. Despite clear legal mandates, non-compliance remains rampant, especially among two-wheelers and commercial vehicles. Every uninsured vehicle represents not just missed revenue, but also increased systemic risk and weaker road safety accountability. With better enforcement and technology, we can expand the insured pool, reduce average premiums, and bring down fraud. Then there is the problem of the missing middle. As identified by Niti Aayog, the poor are covered by government schemes, the wealthy and salaried are covered by private, retail, or group insurance. But nearly 30% of India, comprising informal workers, gig workers, and lower middle class families, remain uncovered. These are the families which are one emergency away from poverty. A medical crisis, an accident, or a business shock can undo years of hard work. Bridging this gap is not just a social imperative, it's also a huge business opportunity. Just as insurance provides protection, credit provides empowerment, and India's journey here has been equally significant. Over 43 crore loans have been sanctioned under the Mudra scheme, with disbursements exceeding rupees 24 lakh crores. Microfinance institutions have reached over 6 crore women. Self-help groups backed by banks have created grassroots entrepreneurs across states, and yet challenges persist. Many informal borrowers lack documented credit histories. High interest rates from NBFCs and private lenders often tap them in cycles of debt. Fintech innovations, the account aggregator framework, and alternate credit scoring models are the next big unlocks for deep, responsible credit inclusion. None of this would be possible without India's digital financial rails. UPI, which now accounts for over 50% of global real-time transactions, is a game changer. Direct benefit transfer has revolutionized subsidy delivery by eliminating leakages. The JAM Trinity, Jandan, Aadhaar, and Mobile have provided the plumbing for digital financial inclusion. But having a bank account or a UPI ID is not the same as using financial services meaningfully. We must build trust, improve literacy, and encourage responsible usage. A special word here about women. Numerous studies have shown that women invest more responsibly, default less on loans, and are more likely to use insurance meaningfully. The government's Bima Vahak initiative, where women community leaders act as a last mile insurance facilitators, is a masterstroke. It is not just financial inclusion, it is gender empowerment. We must ensure that every financial product, be it loan, a policy, or a pension scheme, is designed with women in mind. And what about our elderly and informal workers? India is aging. The Atal Pension Yojana has over 5 crore subscribers, but this is just the beginning. National pension scheme adoption among informal workers remains slow. Without adequate saving buffers, our gig economy could turn into a retirement crisis. The challenge is clear. We need to move from fragmented schemes to integrated solutions. This is where the IRDA's Bima Trinity initiative comes in. Bima Vistar as a product will bundle life, health, property and livelihood coverage into one easy to understand policy. Bima Vahak will enable community-based women-led distribution. Bima Sugam will serve as a unified digital platform for comparison, purchase, claims and portability. This is not a regulatory reform, it's an ecosystem transformation. Some may ask, do we need more players in insurance? Today, India has just over 30 non-life and 24 life insurers. Before nationalization, we had around 350. With the rise in smartphones, UPI at every Kirana store, APIs for insurance and credit, and a digitally fluent youth, and we are poised for takeoff. As I close, let me leave you with a few thoughts. Financial inclusion is no longer about opening accounts. It's about building resilience. Insurance, credit and pensions must be core to the inclusion agenda, not just side notes. We must move from transactional access to relational trust. This journey is not just the government's responsibility, it needs industry ownership, business innovation and community engagement. The next 10 years offer us a chance to redefine inclusion, not just in numbers, but in impact. Let us build a future where every Indian, regardless of income, gender, or geography, has access to financial tools that protect, empower, and uplift. Let us not treat financial inclusion as a policy target, but as a national mission. Thank you for your time, and more importantly, for your commitment to building a more secure, equitable, and resilient India. Thank you.
Thank you, Ms. Subramanian. May I now request Mr. Ravi T. Sheshadri, Strategic Advisor, Insursa, Dallas, Texas, USA, to address us with his valuable knowledge on the subject. Over to you, Mr. Sheshadri.
So good afternoon, everyone. First of all, let me thank the organizers for giving me an Yeah. So, one of the key things that today we are looking at reaching insurance for all is a very, very important mission. And in a country like India, where you have more than 140 crores of people, and the potential is so high, that's one reason. A lot of international players are looking at the Indian market. The reason behind is the premiums could be even 1/3 while compared to the international markets, but then the volumes are too high. As Mrs. Girija pointed out, 22 years back, I was heading Hong Kong of United India. In such a small place, Hong Kong is almost similar to Chennai, from where I come from. Had 105 insurance companies, such a small place. Premiums are huge. Even today, when you look at the Middle East markets or the African markets where I work very closely, there are a good number of companies which really provide. So there's space for everybody to operate. Now, how exactly are we to reach everybody is, the first thing is product innovation. Are we innovating the new products which caters to the customers? Obviously, the answer is yes. 5 years back or 10 years back, what are products that we thought we could not happen because we were always using the word indemnity. But then parametric threw away that. Which means if you travel by an air, you get into the airport, pay a premium of 50 rupees, the flight lands more than 2 hours late, 5,000 rupees is credited in your UPI account from wherever you paid the premium. This has been possible only through technology. In a day, there are 10,000 landings across the globe. There are 200 data points which are consolidated together, and the people who do the software has ensured that nobody has to talk to anyone, it happens. Recently, I was consulting for one of the Egyptian markets as a technology consultant, wherein we were trying to provide parametric cover for agriculture. And that's the time we realized that if I go to X major reinsurer, I don't want to name them, major reinsurer who had around 60 questions to answer. Whereas the last time you had, last 5 years, what is your claims experience? Do you have drip irrigation or good water, all the stuff? They were charging $3 per $100. There is another major reinsurer in the world. They said, we will compensate whatever that you have insured. You don't have to answer any question, but then I will charge $16 for every 100. Guess what would have been the answer? When we went to the farmers and spoke to them, the farmers said, we don't mind paying $16, but we don't have the time and patience to queue. I'm talking about the Egyptian market. So across the globe, parametrics is coming up in a big way. Technology is something which can really help each and every one of us in our own style. While India has been investing hugely on digital transformation, when I say digital transformation, I would say it's only automation, but we have not spent money on artificial intelligence. Why I'm saying this is, wherever I go and speak, in fact, the entire last week I was in Hong Kong, I was proudly speaking about India because I said, if I take a railway ticket, in a day, almost more than 10 lakh tickets are booked. Even before I get my railway ticket to IRCTC, which takes 30 seconds, my insurance policy comes within 3 minutes. All of you would have experienced, the SMS comes. That's the way we have really got advanced in automation. But are we using artificial intelligence? Is something which is a big question. So probably I leave the thoughts to other panelists also on that. Product innovation and reaching to the last mile is always a challenge. It can only be done by the ecosystem, not only by insurance companies or banks, because when you go to the panchayat unions, they may refuse. And it's only the college students, which being a chief mentor of Christ University in Bangalore, we have already done 6 villages, 100% insured village in India, which is possible by the ecosystem. All the entire government machinery should coordinate with universities where student volunteers go enroll, because all these general forms, account opening, Aadhaar card, everything, some student volunteers have to go to villages and do it, which is where we can really reach out to everybody. Thank you, everybody.
So, insurance, both life, non-life, health, are all very, very important. As it has grown actually, but the penetration level per se at the moment is very less. But when COVID happened, we all felt, had that be a proper health insurance, the things would have been different. Similarly, of course, the recent air crash. Now, then only some of the big companies like New India, they will be remembered and they will be taken care. So, in such cases, now Madam said, in the transport sector, when you have to register your vehicle, your insurance is a must. But the later, no, it doesn't get renewed. Quite a lot of them. Now, this is the one problem which has to be through regulation. It should be mentioned that even at renewal or any time, because once registration, then they have no other point to go there. I think that's where it is pending. But the number of accidents which are taking place and the amount of human losses as well as even the vehicle loss, all that is very, very large. So there is all of us will have to feel adequate insurance. Similarly, in the bank, when we finance all the, what you call, whether it's hypothecation or it is a mortgage or any machinery, plant. Recently in Telangana, very big fire happened in a chemical unit. And a lot of people died, a lot of people missing. Now, most promoters now always like to have lesser insurance, and so that they don't pay the full premium. But when we find, when we have to be recovered our loan, it becomes a big problem. So in that respect, the regulator has taken one big mission, and Madam has covered very well, like our financial inclusion, what banks have done, that has to happen in the insurance. There is a correlation. She clearly said if the inclusion takes place in the financial, it has to be also inclusive insurance. So by the regulator has said by 2047, insurance for all. So I would be requesting Madam, Malik from our Sam Fujan Insurance, being a chief operating officer, how are you getting your direction towards insurance for all 2047 in your own humble way?
So, good afternoon, everyone. Very good question. In fact, many of the things have already been covered by Girija ma'am in a very lucid manner in her opening speech itself. Insurance for all by 2047 is the vision for all, and is driven by IRDA, and all the insurance companies operating in Indian market are taking their bit to do their best in this forum. So insurance for all, the concept wise, if you look at it, then what does it include? It includes that we have to increase our accessibility to the last mile of India. We have to make our products very simple, and we have to pay claims and build a trust. As sir was just now giving an example of a huge loss in Telangana. So what happens is that they take insurance just for a smaller amount, and then they expect that entire claim is to be paid. And when the claims are not paid, the general unhappiness is that insurance companies doesn't pay claim, right? So if we have to reach to the last mile, what problem we see at the moment with the insurance fraternity is that even though you reach out the people, they feel that insurance is a very tough thing. We do not understand the terms and conditions, and hence we will not be buying, or otherwise it's very expensive, hence we will not be buying. So there are n number of reasons for that. So insurance companies are working into these forums. First is reaching out to the last mile of the society, creating awareness, making products very simple to understand, and make the journey very simple. The way if we see, like, in today's world, even though we go to the remotest city of India, people are buying products from Amazon, and they are getting deliveries also, right? So people are that way, they are not tech savvy as such, but they know how to fulfill their needs. So insurance is one of their need, which will protect them and their families in the event of eventualities, is what they should understand. And they should have the products available so easily, at a click of button, they should be able to buy it. So these are the two major factors on which all the insurance companies are working. So IRDA has given certain states to the insurance companies, so that each insurance company puts in efforts to reach out to that state and speak with the people there, reach out the people there, and then make them understand the importance of insurance. So awareness campaigns are the ones which have been done. You would have seen the recent advertisements which are coming, that Acha Kiya Insurance Liya, right? So this is something which has been deliberated a lot in various forums, that how do we reach and how do we create that kind of awareness. If you see in the financial segment, mutual funds were not being trusted by the people as an investment model, vis-a-vis banking investments or the FDs. And the mutual fund sahi hai, that concept has gone to that last mile, right? So in the similar way, the efforts are being made in the industry that, people get to know that there is insurance, there is a need of insurance, and there is a availability of the insurance which they should be taking in. So I guess that's the...
Thank you. So now, Madam Kasturi Sengupta, she is having more than 35 years of experience, and recently she got posted on promotion from the National Insurance to ED of New India. Give a big clap up for her.
Oh, thank you.
Yes.
Thank you, sir.
So now, Madam, that IRDA has been doing a lot of regulatory, enablement, and they have been very liberal also. As Madam has also said, even that the number of insurance company also can be increased.
Yes.
Similarly, on the health or in new product formation. So can you little highlight how are those coming and how you are taking advantage of it?
Yes. First of all, last year, I should say that it has been a year of revolution as far as insurance is concerned, because last year IRDA came up with many regulations. So not only was that on the capital, increase of the capital base and other things, particularly, I would like to speak on the financial institution. They came about in the regulations on the rural and the social sector. So they have now told all the insurance companies to adopt, to tell in the local parlance, to adopt a stake through the state insurance plan. So each general insurance company now has to have a particular state where they will see that the inclusion through the sort of insurance also comes in. So what they have done, IRDA through the GI Council now, General Insurance Council, they have given the list of the Gram Panchayats. So see the level to which the penetration they are thinking of. So the Gram Panchayat level, that sort of a minute allocation is being done, and each company has been asked to work with the Gram Panchayat level to see how the insurance can be sold. New concept of agency, there's something called POSP, where the rules and regulations are much diluted. So that is the point of sale persons who can now sell the insurance, the Bima Bahaks, what Madam was telling about. That even the Anganwadi worker, that is the health worker who goes from house to house, talking to the woman, talking about, especially the young mothers and all, they have been encouraged to take up insurance as a parallel profession so that they can also explain in the vernacular language and they can sell the insurance product. Most importantly, what Madam and Aarti, both of them, and Sir also, because they are both, all of them have been associated with the imparting of the insurance knowledge. The insurance awareness is not there. So that also that also is a part of the campaign that IRD is envisaging upon now, what Sir had stressed upon in the place of health. Because if you see the general insurance, the major part what people understand is motor, especially in the urban areas, and is the health. So the penetration that can happen, the inclusion, what every one of us we are talking about, majority it has to be the health and also to the in the SME sector. So coming to health, the things what IRDA has opened up, first of all they have said that insurance has to be given irrespective of the age. So earlier what used to happen that the senior citizen many of the time they were debarred from having any insurance. So now it is open. Every company has to devise a product where it can be given to all ages, to all segments. And not only that, the things that were excluded like mental diseases, transgender operations, then your HIV, AIDS, everything now has to be covered. So now each company has got a product to cover all these things. Not only that, Madam was talking about the missing middle. That is, we have the Ayushman Bharat scheme for the BPL families. We have for the white collar people, the employers, they take the policy, the group mediclaim policies. But what happens to the middle, that is about 40% of the total population who do not have any access to insurance. So IRDA has specifically said that now every company has to devise a product which will cater to this particular segment also and at a very low cost. So as Madam was talking about the Bima Vistar, which will cover, that also has a component of health inside. So another thing that happens is that many people, they have the insurance, but they face a very tough time when actually the claims come in. So that way IRDA now is trying to very much to streamline the process. So they have now specified the timelines. They have said that when a person gets admitted, they are trying for a common empanelment of the hospital so that cashless can be given immediately. And number two, they have specified when a person gets discharged, there are only 3 hours within which the claim has to be settled. If not, maybe some penalty or something will come. So cashless has to be given within 1 hour or 2 hours in the case of some complex cases. So these timelines and all they have specified and they have made it a part of the regulation. Pre-existing diseases, many of the companies used to deny the insurance because of that. Now they have specified that it has to be reduced from 48 hours to 48 months to 36 months. That is 3 years now. And they have also given the specified list. These are the things, like diabetes, hypertension. They're the most common illness that the people have, be it rural or urban. So all these things have to be covered. Nobody can be denied an insurance also. So with this, they have really made the insurance very simplified, very clear, and very focused with that objective of that inclusion, so that what Sir was telling about the inclusion of 2047, we really look forward to that this will be a reality.
Thank you, Kasturi. So now I am asking, give me a clap. I am asking Ravi that insurance is whether is sought or insurance is sold. This is the difference there. Now in that, now bank may digital lending, online everything fully, and the loan is, and we have that ULI. Now it is in minutes, not even minutes, sometimes second also. Right. So in that respect, one is the concept I said. Second is how the technology can make a difference.
Right, sir. See, the first thing is when you are talking about insurance, whether it's a push product or a pull product, nobody wants insurance. Let me tell you very frankly, if you say you are from insurance, the appointment you get is the last. And after coming there also, people do not want to meet you at all. Okay? And I thought that this is only in India. So, I thought that probably when we meet in Asia Pacific, so one of the countries which has been doing very well as far as life insurance is concerned is Japan. Next to US, Japan is doing very well. So the president of the Japanese Insurance Association was there. So I just asked him over a casual dinner. I just asked him, in India we are trying it very difficult. It's been a push product for so many years. When I joined the insurance company some 35 years back, they said it's a sunrise industry. I don't know, the sun is keep on rising. It has never come to the top. So what exactly is the problem? Is in Japan, is it the same? He said, no, it's the same thing. Across the globe, it's a push product. Nowhere in the world, it's just people realize and get it. Unfortunately, the cost of medical or any other losses are very expensive in international market. So people have realized the importance of insurance, and when you go and push, they buy it. Here people know it will happen to her, but not to me. That's always our case. We don't want it. It will happen to somebody else, but not to me. Okay. Suddenly, Air India flight goes off. Poor thing. Next 3 days, I was traveling to Cochin. 9,000 rupees fare came to 2,700 by all Indigos. People are not. That's a typical psychology of people. Oh, no aircraft, I should not travel. Suddenly people will shift their gears and change. Psychology, emotional. So, insurance is a product which is always a push product in even the advanced countries. But only thing is how technology, you are talking about the digital lending. Now, when we look at the next generation, yes, probably our generation or the next one might use all these web or whatever it is or go to an office. But the Alpha Gen, they are not interested in talking to anybody. They will take insurance only through an app. They are not interested in talking to anybody. They want the claim also to be. So all insurance companies should realize the fact that 10 years from now, nobody wants to even talk to someone. We may feel it very bad, but that's a reality.
So,
in order to talk to my son and daughter-in-law, I have to fix a time. Only that time they will talk. That's the reality of life. Otherwise, everybody is busy.
Sheshadriji, that if insurance sector is integrated to the banking sector, then the growth is stupendous because the bank assurance model is there.
Bank assurance.
When we finance, we insist that there should be key man insurance. Because even in housing, not only the people concerned owning the house should be insured, then the house also should be insured. So, madam, that's why I am going to ask her how the bank assurance model, you are also having banks as your equity holder. So, how that bank assurance model has been picking up as of course, madam, all of you are having that, and they have been liberal. Pehle kya tha, you can have only this much and all. Now they have opened up. So, how this is working?
So definitely banks, because insurance company still has a limited reach if you compare it with the bank. So if you talk about SBI, it has branches in every remote city and a remote place of the country, right? So and banks are the one which have been trusted. So anybody who is dealing with a bank will never, or keeping money in the bank lockers or in the accounts, will never have that second thought in the mind that what will happen to my money, right? So if the banks come forward and join hands with the insurance companies, it is definitely going to help, and we already have this bank assurance model. As sir rightly said, it was previously limited to only the loans which they give and whatever are the assets against which they were giving the loan, that was getting secured by the way of insurance. But now it has gone much beyond it. The banking people are also coming forward, and along with the insurance teams working with them and the digital transformation, all of these things are helping to get more and more, to reach more and more people and take them in the gamut of insurance. Now, bank assurance model currently is working on two frameworks. One is embedded model, and one is they are selling the insurance products also. So, embedded model is a very, very effective model. You are buying a credit card, you are buying a debit card, you get that personal accident insurance which banks are bearing the premium for it. And as they are doing it for the masses, they get the leverage of having very, very economical premiums as well. So this is just one example, but it's if you talk about the personal accident insurance, is a very old form of insurance, I would say. Banks are going beyond it, and they are even or started offering other products. The recent ones are the cyber insurance. So retail cyber, we are speaking a lot about the digital transformation, but that comes with a huge risk, and that's why we hear that warning in our mobile phones or in the TV advertisements what could happen. So everybody knows that, when I'm dealing with something, I'm doing online transactions, something can go against us also. So all of these things also they are thinking. Even with the regulatory transformation, we have a leverage to design a customized products. So it be it a purchase protection, that using bank's credit card, you are purchasing assets, it gets automatically insured. So those kinds of products are being also developed and being sold in the market. So banks are definitely, bank assurance channels are going to come up as a very good help for insurance sector and reaching the desired penetration.
Thank you, Arati. Now, Madam Kasturi, I am asking one little different question. You know now that climate risk is a big risk. What happened recently also Himachal, earlier Wayanad. Crores are lost. So actually that regulator in Reserve Bank also, they have considered that as the biggest risk, and the financial risk and transition risk. So as an insurance company, you have a big role. The loss and damages are very high. So how are you looking at that?
Yes. So first of all, sir, it's a very good question, because now we call it as the NatCat peril. That is the natural catastrophe risks that come in. So what is now happening? The solution for that, first of all, government is thinking of having a sort of a NatCat pool. So that is in a very nascent stage. But if we have that, like we have the motor third party pool, we have the terrorism pool. So like that, they are thinking of having a NatCat pool, so that all the insurance companies, they contribute there. And then what happens, of course, there will be a fund manager and a pool manager. And then when such catastrophes come in, the government pays to that pool. So that is one of the concepts that is coming up. But another insurance solution that can happen, that is the parametric, as Madam was and Sir was also mentioning. So in the parametric, we have various weather-based parameters like rainfall, like the earthquake, temperature, the humidity, wind speed, many things. So say if the cyclone that exceeds certain levels in the Beaufort scale, then immediately we do not see how much actually is the loss incurred. Whoever are the people who are covered in that region, immediately they get a sort of a compensation. To make things a little more simpler, with an example that is very close to us, say in Maharashtra, say there are torrential rains beyond 200 millimeter for 3-4 days together. Such things do happen, because we have had floods also because of the torrential rains. Now if such things happen, the fishermen cannot go down. The daily laborer cannot go out. They cannot have their daily wages also. So what happens? This is irrespective of the property loss, these things can be covered. So if we, in the parametric insurance, as Madam and Sir they were telling, that it is just the trigger that has to be crossed. So if we keep the trigger as a rainfall more than 200 millimeter, then for 3-4 days, immediately the daily wage laborer, he gets 3,000 rupees. So we do not see actually he was at a loss or not. Immediately such things are paid. So as you said, sir, in Wayanad, or as the cloudbursts that happened in Himachal and all these places.
Weather forecast,
weather
weather
forecasting
related.
and all these things. And these are all controlled through the satellites, because we have the data and all, so that nobody can question also whether the event has occurred or not. Because data and everything is coming through the satellite or through the National Remote Sensing, ISRO and other things. So immediately when the trigger is reached, immediate payout happens. So no questions asked. It's a transparent, it's a lucid procedure, and immediate compensation.
So Kasturi, what I was telling is, in this global uncertainty, supply chain disturbance, then conflict, again war, so many years actually, such of that result in very big risk. Even for government, the defense preparedness, again that has to be covered. So I think insurance company, as you go, you have to bring a lot of international product to the Indian context also. So now very important for that, the insurance company have to be very solvent, and they have to have large capital base, just like bank, capital adequacy, their capital strength is very important. So you know that insurance sector must have started with the 24% foreign direct investment. It all came up to now 74, and there is a proposal. It has to be increased to 100%. So there is also a new bill going to the Parliament monsoon session. So, Madam, being the chairman of one of the number one New India Assurance Company, Madam, how are you looking at this? Yeah, this particular various parameters and how that will help. One more thing I am asking, one more question. How are the reinsurers are looking at India in their rating? How they are forthright coming in all your cover?
So basically, as I said also earlier, that the number of insurance companies numbering 30 in the non-life space currently there in India is because of the huge geographical diversity that we have, a lot of urban, rural and other divides, a lot of tier of cities, geographic exposure to risk also. There's a lot of diversity in India. So the scope for producing so many more kind of customized products for various segments of society is also there. Therefore, it is very important that many more insurance companies do come, and it is with all these thoughts in mind only that the FDI has gone up, has been increased to 100%, and we would welcome any kind of and any much of competition that will be there. We've always seen that even when foreign insurance companies come and set up base here, first of all, the premium base is pretty small in India. It's not comparable to the developed countries. So whether that is acceptable to them, and if it is, and they do take up the challenge, then it is really good for this country, because we'll be able to get to see more products that are, floated out here. We'll be able to try and see whether we can customize it in a more Indian way, to this to diaspora here. So very, very welcome all the competition, and I hope many people open up their shops here for insurance. And as far as the reinsurance, you said, reinsurers view India as a very, very positively. It's an emerging market and one of the fastest developing emerging markets in insurance. And we see many insurers coming here in the last 10 years at least. Many insurers have set up shop here with the opening of GIFT City, IFSC, the tax-free zone, SEZ zones and all. There are many other insurance companies that are, contemplating setting up shop in India to serve the Indian public.
Thank you, madam. So now, Mr. Raviji, I will be asking you one question, because you are not in insurance company now. So, because both three of them cannot talk some area. One area I am asking, we have IRDA as a regulator. We have a Department of Financial Services also looking after, there is additional secretary for insurance. So you have a dual control by the government and all that. So being outside, how did you find all this, and how you are foreseeing that all their cooperation and enablement can result in better insurance industry growth?
Thank you, sir. I know it's a very sensitive question, but before I answer that, I would request all of you to give a big round of applause to Girija ma'am. Let me tell you very frankly, some 30 years back, when Coca-Cola entered India, the slogan that was written on Nariman Point by Thumbs Up welcomes Coca-Cola to India. I know how many of you remember that. That's a bold statement. Sir, you remember? Exactly. So Thumbs Up said, we welcome Coca-Cola to India. Today, Coca-Cola conquered the market but could not do away with Thumbs Up. Bold statement from madam. New India can face anybody. This confidence I have seen her in many forums, including CNBC, NDTV. She has been very bold enough in making some statements which are actually with facts she is speaking. Right. Coming to the other one of IRDA and this thing, most of the countries where I operate, there is only one regulator, which is Financial Services Authority, FSA, who controls the stock markets, your banking industry and insurance. Here, for the same, there the economy does very well, because he knows when stock market is not, he says banking you do this, insurance you do this. They have the full control, including a country like Sri Lanka, where when I quit United India and came, I did a training for the Financial Service Authority of Sri Lanka. They were very open-minded. They said, Ravi, you can talk about insurance, but in case this fails, what happens? This is what happened in 2008 debacle when the US markets troubled. What exactly happened to AIG? AIG was number one company, suddenly toppled down. Because they were in banking, they were in insurance, everything. Somewhere somebody has to do a balancing role. I definitely feel, yes, the DFS, IRDA, everybody is good. But in my opinion, all of them should work together for the growth of the country. Understanding, because it's one of the biggest markets in the world. And then if there is a good coordination between both DFS and IRDA, and especially at this juncture, I have been listening to many of the speakers since morning. Like the way SEBI or RBI is matured enough to handle, IRDA is in the nascent stage. They are yet to come to that level of, I'm not saying they are very good, but then the Indian market is like that. It takes time. The reason behind is, most of the countries, when there is a D tariff, when prices can be at any price that you can quote, after 7 years it's stabilized. But in India, even after 20 years, we have not stabilized. Everybody wants to undercut, get into the market. Whether this will help in solvency, which I don't know. Everybody is looking at top line, they are not looking at bottom line, which is going to be a huge this thing. So somewhere there is a good coordination between regulator and DFS should help the market well.
No, I am to maintain the time. I have to. So you are right. So one question I will put anybody. If you have any good suggestion or yes, very brief. Come on. Quickly. Yeah. Use the mic. Hello. Mic there. So you can ask for anybody. Yes. But very quickly.
No, I'll take it on a very light note. First of all, recently between India-Pak war, war insurance is not available in the country. So there were so many clients of us ask it, okay, let's insure under any form and all those things. Even terrorism is also not fully covered. So just wanted views of the people over here because corporates are ready to take insurance. And besides this, okay, follow on. Besides this, okay, Coca-Cola was invited.
Yeah.
Thumbs up.
Yeah.
But double cola, all bottles were broken. Okay, sir.
Okay, right. That's in the right of me. Let me say that, let me be very frank with you. As a technology consultant, I was working for a company called DXC. Some of you might be doing, I think one of our audiences also is from DXC earlier. I was a consultant for a company called Mosaic, who was only providing terror and war cover. And there are only two insurance companies which really took the cover. They are as reinsurers, New India and Bajaj Allianz. I can openly tell the names. All the others were not even knowing that there is a war cover. So it is not the question of insurance companies not doing it. They are doing it. New India and Bajaj were doing war cover, and very beautifully, you know how I used to check. See, I was a global delivery head. So I used to check the policies and my inquisitors to see what all policies in India has come from terror and war. Only two companies were consistently doing. So there is a war cover which pioneers, innovative thinkers have done it.
Yeah, we've got a lot of requests for the walkover after this Pakistan episode. But then we have to find reinsurance capacity for that. And
Capacity, yeah, very important.
We have to always be backed by reinsurance capacity.
Aye.
And since they did an initial inquiry, and when we presented to them the rates for the cover, nobody wanted to take it. So then we
The last question, please.
Hi, my name is Saurabh, and it's been my pleasure to listen to you all. I have been listening since morning because this is related to finance. I'm the managing director of a company called Single Deck Solutions. It's a business management consulting company. We are into service industry. Like we have insurance for most of the industries, most of the companies. I don't find any much into service industry insurance options in India in general. Or is it something like that?
Yeah, please.
No, we have solutions, protection for all aspects of service industry. Please visit one of New India's offices. We'll be most happy to cover you for all your services.
My Kaya has a New India insurance actually.
No.
Please, she will get later. So madam, so thank you for all of them very nicely. Insurance is not like banking. It is a very tough subject. So if you are happy, give a big clap to them.
May I now request?
1 minute.
Yes.
Yes. And we have public.
New India, we have out of 10 general managers, 11 general managers, 9 are women. Both the executive directors are women, the CMDs are women.
So may I request Mr. Mahesh Thakur to join Mr. Dr. Narendra, and both of y'all please present the memento to our panelists. Ms. Girija Subramanian, Chairman cum Managing Director, New India Assurance. Mr. Ravi T. Sheshadri, Strategic Advisor, Insursa, Dallas, Texas, USA. A loud round of applause, ladies and gentlemen. Ms. Aarti Bhushan Malik, Chief Technical Officer, Universal Sompo General Insurance Company Limited. Ms. Kasturi Sen Gupta, Executive Director, the New India Assurance Company Limited. And thank you for such a wonderful session, panelists. Thank you. Please stand for. Gentlemen, we now begin with our panel discussion on digital payment initiatives and future of payments. This is going to be one of the best panel discussions wherein even the commoners can relate. It is going to be very, very worthy session. Request all to take your seats. The session would discuss on UPI 2.0, CBDC and cross-border UPI expansion, tap to pay, contactless and BNPL trends, challenges and opportunities in digital payments. Dear all, please do not crowd in front of the stage. I request all to take your seats. The session is highly required session. I request all, please understand and take your seats. The session deals on digital payment initiatives and future of payments. I invite Mr. Mihir Gandhi, Partner, Leader, Payments Transformation and FinTech, PwC India, the moderator for this session on the days. This session will shed light on critical topics, UPI 2.0, CBDC, and cross-border UPI expansion, tap to pay, contactless and BNPL trends, challenges and opportunities in digital payments. The esteemed panelists joining this session with the moderator are Mr. Naveen Surya, co-founder Beams VC and founder and former chairman FinTech Convergence Council and Payments Council of India, Mr. Prasanna Lohar, President India Blockchain Forum, Bank Advisor, FinTech Mentor and Investor, Mr. Rajesh Bansal, former founding CEO, RBI Innovation Hub, Mr. Rishi Gupta, MD and CEO, Fino Payments Bank, and Mr. Sirin Kumar, General Manager, FinTech Department, RBI. May I request all to join us on the day, and a loud applause, ladies and gentlemen, because this is a session you have to know more about. So over to you, Mr. Gandhi. You have next 50 minutes. Thank you.
Thank you. Good afternoon, everyone. Very happy to be here and part of this panel of esteemed colleagues from the digital payments and financial industry. I'll be starting off the session with a brief introduction of how payments has evolved in the last decade or so in India, right? So 2010 onwards, we really saw the growth of digital payments in India with the setting up of NPCI in 2008. And then a lot of new products got introduced with RuPay, the domestic card scheme of India, with UPI coming in, which is the faster payment system of India, and also other innovative products on the Bharat Bill payments and other areas. We've been fortunate to be part of it and see and help some of the stakeholders, including the banks, fintechs, and few other entities to grow. So we've already progressed, and India is currently the poster boy, if I can say that, for digital payments across the world. A lot of international banks, government organizations, operators, fintechs do come to us to seek
to see how we have actually grown and transformed such a huge country of over 1.4 billion people to use and enable digital payments in a secure and safe way. So I think that's the background which we want to talk more about. We are already at a pole position, and what next can be done, right, going forward on the digital payment side. That's the key objective of this session. We have a few stalwarts of the digital payments industry, and I'll start with Naveen. Naveen, if you can give me your perspective, what are the future expectations from the digital payments, given that UPI has already done so much, right? So what more can be done from a use case perspective, security, innovation, and maybe Rajesh, you can also add in, right, with Naveen on that front.
You caught me this on the spot. I'm out of practice now. People still think I'm a payment professional, but I'm more of an investment and NBFC professional, but it doesn't matter. Well, I think UPI started for a particular objective, which is achieved as a retail payment and a fast payment. We all know that. I personally believe that while it will continue to expand, now innovations are already being done by the ecosystem within us actually as a payment professional. It's good that now it comes from the use case side, and which is what is happening. I would actually jump in and rather say I see more use cases on the CBDC side, right? And I'm trying to keep it brief. Of course, Steven we have who knows everything about CBDC, so obviously he will tell us what all is happening. But in my list, for example, within UPI, the customers receive money instantly, right? Let's say if I send to Mahir receives it immediately, I get the receipt. But the banks behind, the settlement is still in a batch. Now, probably CBDC can solve that problem. Now, obviously, there are implications who wins and who loses is a different equation to look at from a bank's perspective. But actually, that can also be solved. Why I'm recommending? Because we all know there are also challenges around, let's say, refund, cancellation, reconciliation, which actually is a big part of that problem. In the whole ecosystem with the success, sometimes we don't talk about it. But with CBDC, that could actually get solved. And like wholesale, while I think the government security part, I'm sure Cyril will talk about it and we'll know more. But the same model can be applied here. And finally, international, which I think we tried, but I personally believe again, UPI international transaction that people are trying to do, unless you have a CBDC or a global CBDC, let's even buy country with the tokenize of two countries value, because the biggest problem is India, it still does not allow capital convertibility. So we have to solve it in a very innovative way. I'll keep it brief for now, maybe, and probably go to Rajesh sir.
Thank you. So let's just stop for a second and all the chest beating that we do about. So pardon me, I am not going to be following the party line, and especially as I was discussing Naveen, not anymore, right? So we talk about 18 billion transactions a month, and we go all over the world and say we are the best. Just reflect. To advise a few countries in the past, on an average, and when you get time, you try and see, you do 10 transactions a day. Cash, digital, whatever. Each of the adults. And I'm only talking about 16 plus. 10 transactions a day. 1 billion adults. Which means 10 billion transactions a day is the potential. So where are we? We are still a far cry from there. So let's, I believe, not a naysayer, I am the eternal optimist. Let's do a reality check, because unless we do that, we'll not, look at why and how can we get to, 10 billion a day. That's one reality check. The other number you should look at is cash to GDP ratio. Cash to GDP is the holy grail of how many people actually use digital payments. Sure, Mihir is wondering, we thought I'll talk about UPI is the best. Yes, it is. 12% GDP, cash to GDP. A lot of my friends at RBI, when I bring it up, they don't like it. They say, no, you don't get it. Cash किसी और वजह से ज़्यादा है. For whatever reason, cash to GDP is 12%. It is pre-demonetization, right? The third number, before I go ahead and do what could we potentially do, is 85% of people in Kenya use M-Pesa. Mind you, 85%. And the unique UPI users are 35 crores in India. I will give you a number. 35 crores out of 100 crore adults. So just to bring some, I would say over enthusiasm that we have, because we don't look at, what can we do better. So what are the challenges? I'll focus on only 2-3, otherwise there's a lot. And last month I was asked to present to the advisor to Sri Lankan president and CEOs of banks. That is where I started reflecting. I didn't tell them all this. I told all the good things. I didn't tell them what we can do better. See, one of the things is that whether it's payments or digital finance in general, trust is everything. And somehow we need to do more to build trust. What does it mean? In practical terms, if you have a problem in a UPI, you should be getting the money refund instantly. So when I came in, somebody in insurance also, I think somebody was talking about instant. The Gen Z and the millennials only look at instant tap, instant resolution, instant cab, instant food delivery. That's what I am getting used to. Not a millennial, but yeah, I am getting used to it. Yeah. So the fact is, dispute resolution, a lot more needs to be done. And we have been looking at the Reserve Bank Innovation automated grievance redressal, and I was there. That is one possible thing. Second one, I'll not take more time, is 50% of India's population, women. Women, our studies showed that 2/3 of women do not have an agency over their phone. You do not have agency over their phone, and they have to use their father's phone, their brother's phone, or their husband's phone. You are not going to get there. So we need to innovate to get to 10 billion a day is when I will stop.
Thanks a lot, Rajesh and Naveen, for your comments. So moving on, I'm sure a lot of things can be done on the UPI side, on the use cases side, Naveen, as you mentioned. International is one area where, it would be quite interesting to know what's happening, and maybe Prasanna, you can share your views on the CBDC part of it, how CBDC can be, leveraged in the Indian side, retail and wholesale, but also in the international side, right? Where there's a lot of talks of stable coins happening, and stable coins growth being used. Of course, there are risks associated with it. We were speaking about that, Naveen, earlier, in terms of whether there is a fundamental peg to the actual monetary value, and also the currency conversion, etc. So, if you can please share your views on CBDC in the Indian context, what's your view, retail as well as wholesale, and how it can be used in the international areas?
Thank you so much, and thank you IMC for inviting us for this wonderful forum with all stalwarts out here. UPI is a good story for us. Started in 2016 and now almost 9 years. And Sir spoke only 3.5 million is the customer base. And look at the population of India, almost 1.4 billion. And when e-rupee comes, and tomorrow suppose digital demonetization happens, all of those people will have those wallets in their pockets. What does it mean? The numbers which you are talking today will go in the next day, the next level. Provided we have seen one demonetization back in 2016, and tomorrow, if you say from tomorrow onwards, we're gonna do e-rupee adoption, I think that's the story we will see for a CBDC. Why CBDC has started or looking at global financial inclusion challenges, where we keep saying, as per Findex report of 1920, like almost 1 or 1.2 billion people do not have bank accounts, right? And they don't have that kind of infrastructure available. And same story goes with the India also. Many of them do not have bank accounts, like women's or farmers. They do not know how to really reach out there. And DBTs, direct benefit transfer, typically happens from government to their accounts, where Cyril sir will talk very high about that. But they are not reaching out to the actual 100% DBT which they are available for. And even if they receive, they do not use it for a right purpose. So globally, maybe 2008 financial crisis has happened, where Bitcoin kind of cryptocurrency started coming in. Let us create another parallel financial currency, but it was not well supported. Rather, it was not regulated per se. Today we have 20,000 plus cryptocurrencies, and today some of you also can start your own, but regulation is not there. But coming back, CBDC also crypto, which is backed by government, which is a legal tender per se. And it's not like India, but the journey started with smaller countries like Bahamas or some of those smaller countries. At least 11 countries are live doing. I think one of the best examples is Cambodia, where at least 50% people use it on their fast payment, the way we have UPI. China is enforcing. We do it for buying some burgers and all of that. But in Indian context, we are riding on a right digital public infrastructure. We have Aadhaar. We rided initial moment of CBDC or e-rupee on UPI to peg the currency into the wallet. Because this infrastructure was available, we announced in 2022 February by our Honorable Finance Minister, and we launched retail followed by wholesale within a 7 to 8 months. Because we had NPCI and blessed by all banks, that consortium was already built, which is not there outside of India, many of those countries. So 111 plus countries doing at all various stages to bring that financial inclusion. Bank international settlement, collaborating with the multiple countries to do. The Naveen sir was talking about how we can do cross-border play. I think there are at least 15 to 16 projects where RBI is also part of one of them since last 1 year. So CBDC will bring a lot of future of money. And as everybody talks UPI versus CBDC, UPI is a payment method, CBDC is a complete infra to build a currency. Rather we build today paper currency and there is a more cost. For example, if you have to print 1,000 rupee, it is more than that cost. But tomorrow CBDC will come, I can name at least 20 benefits apart from AML, money laundering or handling that money, paper money from Chase branches to the ATMs is a huge cost, and moreover the operational gaps there. So whatever we have seen in UPI and others, a lot of a front-end level innovations happened, but back-end level, right? How do we do reconciliation, settlement? I can give some examples. Do not quote me. Some of the PSU banks will have thousands of crores in suspicious account, just because of a lack of not having a right settlement. And there were a lot of tries that happened. NPCI did, Vajra and others. But coming back to CBDC and followed by stable coins, with the fear of China dominating around the currency or these cryptocurrencies, I think CBDC plays a major role to bring a right adoption of digital currencies. And good to see that many countries are creating right monetary policy, right infrastructure, and right use cases. I think while we are part of a pilot, we already have at least State Bank of India where we work, we have at least 6 million customers. And if you look at other number with one only use case, which is DBT, today we have at least 80 to 160 million farmers. And this number is decreasing while there are a lot of efforts are happening to have agri financing and all. I think RBI Innovation Hub has done a very good job on Kisan Credit and ULI, which is happening. But imagine it is powered by CBDC. So direct money goes on the fly, right? There are many other use cases which are futuristic use cases. For example, carbon footprints. So one of the use cases we are looking to drive in those Coorg and other those sectors where water level or tree level or surface level, how much we are generating carbon footprint. Against that, give back the money to the farmer. That can be done directly on a CBDC wallet. So CBDC at that junction where you will find lot of innovative products here onwards and a lot of innovative methods of payment. But looking at, in interest of time, reconciliation, settlement, managing the money, it will be very easy. And I emphasize UPI CBDC will marry someday, and it is as good as a CBDC wallet people will use instead of a UPI. I think the way we started, there were so many UPI wallets on the Play Store. Eventually, it has become a part of a bank's app, or we have seen some Google Pay, Phone Pay are carrying. Similarly, I think CBDC has its way to go ahead. Yeah. On a stable coin, I am being a founder of India Blockchain Forum. We work with a lot of global countries also, where it is already happening outside of India. I think we have to pick up those threads, and the way we are so powerful regulator, proof of concept, pilot, prove it right in all regulation. I think stable coin become another factor to do what Naveen sir was talking about, cross-border pay or there is or trade finance use cases, tokenization. There are a lot of futuristic use cases we talk, maybe Nandanji talks about Finternet. So I think that can all become reality when we amalgam CBDC along with the stable coins. I don't want to get into technicalities. Many countries are already doing it. Maybe may not be the way we are going to do it. I stop here, but in a nutshell, I would say future of finance is powered by UPI, because UPI is always as a layer where CBDC has taken advantage of these railroads. But we are yet to reach those actual future of finance backed by tokenization and ESG needs, where from this digital to intelligent era where we are with powered by AI, tomorrow's era is going to be autonomous. While we are transacting one-to-one, P2P or P2M, machines are going to transact, right? EV vehicles are going to transact and say, this is how I'm saving. So that time we need some kind of a financial product. I think that is what the readiness of CBDC or any of those regulated, I stop here, yeah.
Thank you so much, Prasanna. Very good points. Lot of things to think about actually. So, Siri, now just coming to you, if you can share your views from a regulator perspective, and your own perspective, what more can be done on the digital payment side to so if you can share your views, what more can be done on the digital payment side to reach some of those goals what Rajesh also was mentioning earlier, and what more can be done to ensure that today we have 350-400 million people who are using, say, digital payments or UPI, if you must say. How can we reach the next 200-300 million people? How can we make them use digital payments? Is it the issue of mobile phone not being there or infrastructure not being there? Or is it some innovation in terms of use cases that need to be done? So if you can please share your views on that.
Thank you, Mayor, for that question. And I take you from all the panelists, Rajesh sir, Mr. Prasanna and Mr. Naveen. And, for particularly Rajesh sir, for highlighting the potential and the requirement for digital payments. He very well highlighted the numbers which are yet to be tapped for digital payment despite all the efforts and successes. So RBI has been the forefront in the Indian financial markets to promote digital way of payment, starting with automated clearing to RTGS, to NEFT, to IMPS, to various other products related to that, and then IMPS was a fast payment system, and then UPI came into the being as another fast payment system, and its success, and RTGS and NEFT both being 24/7. So all these things which I am mentioning, and with the India's DPI, typical digital public infrastructure of UPI, Aadhaar, Jan Dhan accounts, with everyone having Jan Dhan accounts and all this combination of this Aadhaar-enabled payment services, Aadhaar-based payment services, Bharat Bill payment services. So you can see the ecosystem which is being created over a period of time, and UPI as well as CBDC both are promoted by RBI, conceptualized by RBI. CBDC right now, RBI is also the operator, as Mr. Naveen did mention about it. So the future, there is a lot need to be done, because we have a vast majority, as Rajesh has pointed out, to be covered. So what needs to be done is to create a digital public infrastructure. Now, once you create the digital public infrastructure, the private sector, the fintechs, and the traditional banks, NBFCs, everyone take advantage of that digital public infrastructure like they did in the UPI case, with conventional and non-conventional means to come forward with ideas. Like, for example, in case of UPI, merchants were onboarded on a large scale. There were QR codes everywhere. So this was a very core infrastructure. POS machines were already there, but it was not enough. But the way QR codes, revolutionized way of making payment, and with the infrastructure being there, when demonetization happened or when COVID happened, when there was an actual need, that time the players stepped up, the consumers adopted, and overall it led to a surge in payments. And you can see the kind of growth which is there. Even now the currency to GDP is 12%. But just imagine if this digital payment was not there, probably it would have been much higher. So it has certainly saved the cost. whatever efforts are being taken, UPI has, what President indicated, scratch the surface. But then, so what does it indicate? It indicates that there is a possibility and the need for all kinds of efforts in the ecosystem. So CBDC is one of them, the latest effort in that direction. Because one of the question comes, when UPI is there, why do you need CBDC? So here is the answer, that you need all kinds of efforts in the ecosystem, and with its unique features of currency. Traditionally, cash was used as a means of payment. It has evolved over a period of time, barter to gold to currency, fiat currency, and all. And this CBDC is a natural progression in that direction. CBDC being a central bank liability in which people traditionally used to transact, and with the digitization of bonds and all other kind of assets, bank deposits, everything, this was the last frontier, I would say. Now with that having come in, it brings in a lot of new use cases because of its very nature. It's a unique product, and it also has risks. It's not without risks, it's not without challenges, but then it brings those kind of unique niche use cases. And we started with 4 banks in the retail space, 4 banks, 4 cities, and thereafter, based on our experience, we found that there were issues about acceptance infrastructure and all. Interoperability was enabled first with the QR code interoperability, then with the Rails interoperability, and now with the CBDC wallet, you are able to make payment everywhere across the country. And there are more than 6 million, around 7 million users are there. There are 19 banks in the pilot today, 2 non-banks are there in the pilot today. So the way it is expanded in the last 2 years in the retail CBDC is huge, which means that the banks see a huge potential, even the non-banks see a huge potential. And last year, the offline as well as programmability features were rolled out. So in the offline feature, it is not yet a part of the regular CBDC. Experimentations are happening because it has to be a technology which, without checking with the online database, it should be able to enable transactions from one device to another, taking advantage of the token format of CBDC. So that is one which is a work in progress. But the challenge there is to ensure that there is no double spend, there is no vulnerabilities or misuse there. So that is a work in progress. On the programmability, there are 2 types of programmability, both user level programmability as well as sponsor level programmability. So let me just briefly touch upon these two things. User level programmability is one in which the wallets which are there, digital wallets. Let me take a pause here and just explain what wallets are and the design of CBDC. The way CBDC is designed is like cash. The banks are the distribution partners of cash. You go to the bank ATM to withdraw money. You go to the bank counters to withdraw money. In a similar way, here also bank provide the digital wallet. 19 banks and 2 non-banks which I mentioned, they provide wallet to the end users, and using those wallet funds, the rupee tokens can be withdrawn from the bank account to those things. Now, when you are spending that money, that currency which is equivalent to cash in all respects, it's a legal tender, it is equivalent 1-to-1 with physical cash, then you can program it. Some of the features of programmability you can, while giving to your child, let us say you want your child to spend only for books or in the canteen or something. I'm just giving you an example. It's no way restricting those kind of privacy or independence, but then people would like to do in a certain way. So it enables that. That is a user level programmability where each and every wallet holder can do that. That is, some banks have launched and some more banks will launch. And then there is a sponsor level programmability. Sponsor level programmability means the government, state government, central government, corporates, banks, they can, while disbursing funds, where there is a specific end use or there is a restriction about geographical region in which it should be spent, or there is a time limit within 3 months it should be spent, or 6 months it should be spent, or it should go to a specific merchant or a category of merchant only because they are the authorized agencies. So that is a sponsor level programmability, and we have seen a huge amount of interest and uptick in that. To give you some example, there is a PM Vidya Lakshmi which has been launched. In the PM Vidya Lakshmi, the government actually for the education loan gives interest subvention. It reimburses the interest subvention to the banks. Now instead of giving directly to the banks, and there are reconciliation issues and claims related issues. So the way it has been programmed, that money, programmable CBDC will flow to the beneficiary, the person who has taken the education loan. And he will accept that within the time limit, and the money flows to the bank account. If it doesn't accept within the stipulated time, 3 months, 6 months, money goes back to the government. So there is no reconciliation issue. Everything is kind of tracked one-to-one, and that is enabled through programmable CBDC. Another major prominent use of CBDC was in case of Subhadra scheme, which is in Odisha, where the women beneficiaries of the state are given some benefits on a half-yearly basis, and that was inaugurated by the Prime Minister last year, and Subhadra benefits are given to women beneficiaries who are having onboarded on CBDC, and the state government of Odisha has enabled that. That was one big one, and there are, I can tell you, a huge number of ongoing discussions which I cannot reveal at this point of time, and there's a huge amount of interest in using this feature of CBDC for ensuring end use. Not just by the government and the state governments and the central government, but also by the banks. For example, banks, when they give money for certain end use purposes, normally banks give loan for specific purposes, money should be spent there, and there is a credit, post-credit disbursal compliance, etc., which needs to be done. There is a follow-up. If the power of programmable CBDC is used for that purpose, so it will enable cost savings of the banks. Similarly, corporates can use. So this is what I would like to summarize. Sorry, I've taken a lot of time, but I would like to summarize this particular point by saying that there's a huge potential of CBDC. RBI has been promoting all sorts of payment systems and new ways of making payments, which I mentioned initially already, and more ways and innovation will come. But CBDC is certainly one of the latest DPI which the private sector is going to use, and it will help the use cases going forward.
So you would like to talk about it is with Aadhaar backed. You do not need an account also.
Yeah. So this is I have touched only on the retail CBDC. Wholesale CBDC and cross-border are different elements, but that will be probably for another day. As regards Mr. Prasanna, which mentioned about Aadhaar based, what is referring to is normally cash transactions. When we do, it is you don't need to have a bank account. So bank account is an account based relationship. Right now, for opening a CBDC, you need to have a bank account. For example, if you are a customer of SBI, then you can download the SBI wallet and do the transactions through that wallet. So in a way, KYC is already done there because you are already a customer. But as we are equating it equal to cash, there is a thought process that whether we can, for small value transactions, for genuine transactions, with all kinds of safeguards, whether we can have a differential CBDC in which the requirement of having a bank account is not there. Identity can be verified using Aadhaar and all or other means. But then it is not yet decided, not yet launched. So let me be very, very clear about that. Yeah.
I just wanted to add to that just a possibility. I mean, just was listening to Prasanna and you, that what if we were to reconceive a hybrid of CBDC and UPI for a futuristic system, where today the whole UPI issues are also because it's riding on a bank, and bank core infra issue we all know what are there. Of course, this is there, you can talk more about banking side. But what if you had a CBDC based wallet only using on UPI rails, and then end-to-end all the issues go away, including MDR? I'll leave it there. I mean, it's just a suggestion.
So thank you. I think what you're suggesting is a combination of UPI and CBDC. CBDC money. Yeah, UPI rails. So as you can see, the CBDC is a currency system, and UPI is a payment system linked to a bank account. But then UPI and CBDC both are enabling payments, and we have made both of them interoperable also. But you know, using a combination of okay, yeah. So I'll tell you. Oh, sorry. So this what we have done is, because there are also challenges about using CBDC in a large way. We have currently limits for small value transactions for CBDC. So large value transactions, may lead to large scale leakage from banks in terms of their deposits, because ultimately these are central bank liabilities, and there could be movement of deposits to the CBDC. So what we are trying to do is not to derail or replace the existing system. Existing system stays. The role of banks are very, very important. So they continue to accept deposits. They continue to give loans. But at the same, I'll tell you. I will. Here we want to use the power of technology for the CBDC because of its underlying technology, which is there in a private virtual currencies, let us say. But at the same time, not replace the existing system. So that's why there is no interest which is paid on the CBDC, and there are lower limits to ensure there are velocity limits, etc., which are there to enable small value transactions. So there has to be best of both worlds to enable the best of technology and to enable the choices to people. But at the same time, the current system also continues.
Thank you. So Rishi, sorry we made you wait. मेरी turn ही नहीं आएगी. So just wanted to take your perspective, Rishi, from a banker's perspective. What are the challenges you see today in digital payments, and the future opportunities which you can leverage?
See, I think the biggest thank you, IMC. I think the biggest challenge which I see is the digital frauds which are happening across the country. The menace which is there on digital frauds. I think that is one area where all of us as banks and regulators have to work together. There's a lot of work which the government has done through multiple LEAs which have come up in the last 2-3 years. But I think the fraud level has also grown quite a bit. Thanks to the government, the awareness campaigns which the government has done through the MHA and as well as the PMO and the DFS, the awareness is quite penetrated now. People know 1930, if there is a fraud which has been done, you need to call up that number. So that is where the number of complaints which have come up to the LEAs have also grown up substantially. I think that is one area which all consumers, and I'm talking about the people who are there in the room, I don't want to get very technical, but largely people have to create an awareness that they don't get defrauded. But that is something which will continue to happen. The fraudsters run a monthly target model also. So they have all the AI, ML tools with them, and they are able to do a lot of new ways of frauds are coming up every month, every week, so to say. I think that is one area where from a normal consumer point of view, we need to work harder in getting the consumer awareness as well as able to recover that money through the banking system. I think if we are able to do that, the penetration of digital is already there. And I'll take Fino's example into this. We started as a physical company and we have a large distribution of merchants across the country. And our customer segments, we have about 1.5 crore customers now who have a bank account. And we never thought that these are the people who will actually start using UPI and move into kind of a digital framework. But to my surprise, and also I thought probably it will take about 10 years for them to actually start using digital platforms. But within 2 to 3 years, I saw a large chunk of people moving into UPI, and it's become kind of fancy. It is like an aspiration tool for them, just like their boss is using QR code for payments. Why can't I use it? I think that aspiration has actually moved the people to start using digital payments, and I've seen people coming to our counters, depositing cash, first open an account with us, deposit cash with us, and then use the same money for doing digital payments. So the ability to move cash into the bank, I think that is one big service which banks like us are doing, because a lot of the people don't have bank accounts. So one thing, when you were asking about the question in terms of how do we increase the penetration of digital, I think the large population in the country, which is 800 to 900 million people, when we talk about them, the question completely changes. And the ability to suck cash from them into the banking, I think that is the biggest thing for digital payments to become successful. For the next 400 million people to use digital payments, I think there are two things which are required. Apart from the frauds which we just talked about, the ability to suck the cash from the ground and bring it to the bank so that they can then do the UPI transaction, whatever digital tools, whether CBDC or any other tool they want to use, they can use it. I think the second part is the availability of the mobile phone and the comfort of using that mobile phone to do financial transactions. I don't know the numbers exactly, but I understand 700 to 800 million people are using social media as well as YouTube for entertainment and for communication purposes. But half of them are actually using it to financial services. And if one person has a bad experience, either through fraud or transaction getting stuck, he will probably take a lot of time to come back into the digital ecosystem. So awareness, customer grievances, if we can handle, see most of the companies who are in digital space, except for banks, they have no way of handling customer grievances. You just think of somebody who is very remote in the country, who does a transaction through PhonePe or any other digital tool with PSP, and his transaction gets stuck. There is no way he can write an email or call a call center or do anything else. Compared to a bank or to us, they can go to a merchant point, they can go to a branch. So the ability of a customer to visualize that if my transaction gets stuck or I am in some way my fraud has happened, where do I go? So fortunately, at least for fraud, the government has taken a lot of efforts and Reserve Bank has taken a lot of efforts. But customer handling on digital side is still very, very early. For the next 400 million people, we have to make sure that we are able to suck the cash into the bank account. We are able to handle their grievances, ability to handle their grievances on the ground. And that is, I think, one of the basic things. And the third is the penetration of the phone. 50% of the people in the country are women. There is no concept of individual phones as we move down the chain. There is a family phone. So there is one phone which is between the 3-4 members of the family. And of which, if we understand, like in our case, 40% of our customers are actually using UPI and digital tools out of 1.5 crores. But I would say that out of that 40%, 30-35% would be still male dominated. So women domination and women using tools or financial tools for their independent decision making is something which we need to focus on. That's a more social change which has to happen in the country. So comparing ourselves with maybe Kenya is a good example, I understand, but M-Pesa has been there for donkey's years, for more than 25 years. But having said that, so to my point, penetration will increase by cash, sucking in by ability to handle grievances, by ability to provide mobile phones on the ground, and most importantly, if women can participate in taking financial decisions and can handle on its own, I think that's a large population of the country. If we assume there are 600 million women in the country and only 20-25% of them are using it, that means that 500 to 400 people, 400 to 500 million women are still not using it. I think that's the way we have to look at that is the way. Sir, मेरी बारी तो अभी आई है ना.
Sure. Thanks a lot, Rishi.
अभी तो बोलना शुरू करा था मैंने. You have to be fair. But having said that, let me just conclude. I think the efforts of the government and the regulator has gone into the way we can penetrate it. He was saying that please conclude. So I think that is the way I think we should need to focus on. Innovation, technology will keep on happening. But the change which we have to bring on the society for it to penetrate to the next 400 million, I think that is something which I would look at. And that is something which because as we know, we have been on the ground and we know what is happening on the ground. We are not sitting in AC rooms and talking, we see it happen on the ground.
Sure. Thanks, Rishi. Very interesting points. Let's see, how and when that can happen, right? So, just coming to the next point, I think it's the last question, and then we'll open it up. Given what all we have seen, right, and obviously we want as regulator, we want as banks, as operators, for customers to have a choice, right? So that hence we are offering CBDC, we are offering wallet, we are offering UPI on bank account, etc. Do we feel, as a group or as individuals, there is a need for an alternate payments operator, right, in India, right? So there was some recent incidents of outages, etc., that happened on UPI. So do we feel that there is a need or requirement for, alternative payments infrastructure, which will be akin to NPCI and which will have different options? So maybe Rajesh, if you want to give your views, and then maybe Naveen, and I'll open it up to all of you.
Yeah, I was hoping you will not ask me that. Okay. There are still a remnants of being an ex-regulator. Yeah. So, I mean, and I was reflecting when you were asking that question of what does the world teach us? The fact that payments is a network business. So while the outage might sound like a reason why we should have one more payment system operator, but fact is that's not necessarily the trigger. You should always, before this I was talking about insurance and backup. So as the size of the market grows, maybe we need to have more than one payment system operator in the country. It has its own perils. I have seen that in Tanzania, Kenya, Philippines. It has its own challenges. It's like the interoperability of CDSL and the other two depositories. So it has its challenges, but carefully crafted. Maybe in the time might have come and we can start looking at at least one more payment system operator as we go along. Dilip should be saying.
You want to go first, Rishi?
So I think competition is always good. So it brings more innovation and it brings better pricing. So give you an example in UPI MDR. As banks, I can't charge anything, but I am being charged. So if there is another payment system operator, maybe he'll give me free. So I will be able to, I will use him rather than going towards the current payment operator, because I'm losing money on every transaction. So plus it brings innovation. Regulator can be one, but operators can be many.
I would correct one term here. I think payment operators are already many. And what you are talking specifically is no umbrella entity, right? That's a term. Right. So anyway is the term. I think it was coined about 5-6 years back. And I remember I was super excited about that because I was one of the applicants. Right? Okay. So, and probably I at that time very vocal about it. And actually I agree with Rajesh's point. It's not about outages. It can happen with anyone, right? Globally, not just locally. It's about the earlier point that Rajesh mentioned that we still have miles to go. While it's not about GDP percentage, but the physical cash circulation is also increasing rapidly at the same pace as digital. So the reality is there is a scope, more clear, and I always think in a different way that wherever we have a government monopoly, I'm sorry to be so direct. We've seen what happened with Air India. Ultimately, it will be sold. What is happening with MTNL and BSNL? More you protect, more you create monopolies. They do very well initial phase. But comes a phase where the complacency comes in, where the lack of competition creates complications. And because we have a scope, ideally they should also be given an opportunity to privatize and actually be able to compete with other players. Now, while Cyril is here, I don't operate a company, I can be probably more practical, I will keep it in this room. The reality is we never found that satisfactory answer that there's none of the applications were sufficient or innovative enough. I mean, I find it extremely loose comment. I'm sorry, Cyril sir, keep it personal. So somewhere actually I don't think any of the applicants even got the response or even the application back. So that's something which, the good part is RBI itself had identified this as a reason to do it. Only they know what was the real reason for them not to consider it. So it be reconsidered, can it be reconsidered? Of course. It has been already there. So I have taken more time. So that answer is yes, we need more and everybody agrees to it.
already CBDC has come as a new way of making payment, right? And it provides the infrastructure, it's a DPI, so just that much. Because it's already a new way, it's a currency, but it allows you to make payment, so both P2P, P2P, all kinds of payments. So a new rail, alternate rail, over a period of time, and new players, possibly some new players as well would come, and it will help. But I mean, the other part has been, quite well addressed by other panelists, so I don't want to go further on that.
I can just say that when UPI was not there back in 2015, this question would not have come, right? Whether to, but now what UPI has given in the last 9 years, while we have NEFT or RTGS or any other means, we can, even you can go in a branch and do the transfer, right? You don't. But the way we are becoming more digital, the opportunity to become to have a real-time payments, while UPI is there now, CBDC is another method wallet, which is a complete infrastructure which is coming in. And what we have seen, right, the kind of a change request enhancement which has happened. I'll go back in 2012 era where we had come up with IMPS. And IMPS has at least 60 plus circulars for a change request to enhance it more and more. And at the same time, we tried creating UPI, and UPI has come up. So that was the answer from NPCI itself to create a resilient payment ecosystem. And within UPI, we have seen UPI 1 and now UPI 2.0. There are a lot of new changes that's coming by saying the balance request or will be less. The kind of infra they support 25K per second transactions. And UPI could be offline also for some of those low ticket size. So all these enhancements are coming, but I go with some of those suggestions. Right, there was NUE kind of a momentum which is diluted, and more attention is given towards new payment methods which are happening. See, it takes years together to build a governance, bringing banks coming together and starting NPCI like a momentum. I think I look at some of the other momentum which are happening. It's not only payment, like trade finance. Like now IBDS is coming in, which they are creating invoice up to do financial transactions on for trade. Or you are talking about ULI, which is a unified lending interface. So I think more use case specific things will come in parallel, and maybe I will not be surprised we'll have a National KYC Corporation of India, which is a vision of a government of India to create uniform KYC, maybe backed by CERSAI or any other entities. There are many other problems to solve apart from payments. I think that's how government or a regulator should come collaborate.
Well, thanks a lot. I think we are on time. This maybe one question.
One question, yeah.
One question we
Only
can.
one question. So we'll give to the first earlier. Yes, sir.
I'm a big fan of CBDC, but I think it's going to create problems for commercial banks. In the 8th Banking Finance Corporation, I had given a talk on the future of banks and what they need to look at. And one of the points I made was that banks, unless they change, they're going to face problems because it can get disintermediated for deposits. And as and more people buy CBDCs, there'll be less of cash. Therefore, banks will not have enough deposits. Therefore, lending will be a bigger challenge. They'll have costlier lending. They'll become excellent payments things. So they have to reinvent themselves. And in the audience were 3 chairmen of banks who put up their hands and said, CBDC is not required, it will never come to India, it will never come to the world. I said, what are you talking? And it's come. And I don't know how it is in the banking sector, maybe some people, gentlemen here can say, unless they reinvent themselves and think of themselves completely differently, they're going to face a problem.
Sir, I don't think that this is a problem. I think it's an opportunity. Ultimately, banks are in control. In fact, on the bank money you pay interest, here you don't. Here the responsibility is on the government. It's a legal tender. Fundamentally, banks are already transforming. They already have challenges. And many of them have done amazingly well with the partnership between banks and fintechs. Today, UPI is a great example. It's nothing but a collaboration example globally. Everybody from a government to regulator to banks to fintechs have come together for this. So same thing is for CBDC, sir. There's no difference. Sir, I agree with you, but sir, ये fear of unknown है. It is actually not real problem. The real problem is physical cash which is circulating out there. In fact, that moves here. So it is a fear of unknown, nothing else. I don't think it's a reality. It's just those people who don't understand it, they just say some arguments.
See, everything, sir. Me, I don't think so. Banks are looking it from a threat or any other perspective. I think everything is about the consumer. And I will give you an example. Nobody pushed UPI. People invested in UPI, or the merchant ecosystem came around and we started to use it. We found it easier than doing your IMPS transaction. UPI runs on the IMPS platform. But small value transactions, people still did not probably wanted to use cash and not use the IMPS platform of the banks. At that point of time, the PSP operators came in, they put in billions of dollars. No bank will put billions of dollars for sure, because every bank is listed. They have targets, and there is nobody has that kind of money to invest for some future payment platforms. But there were operators who came from US and other countries who were ready to put in billions. Now they control nearly 85 to 90% of the payment systems in the country. That is where NPC and everybody is worried that why can't we reduce it to one third. Having said that, so because the consumer started to adopt UPI as a platform and it became ubiquitous, it became completely available, there were no latencies, it could work at any point of time in any part of the country. I think the consumer behavior changed the adoption. Nobody pushed consumer to use UPI. Tomorrow, if consumers will see that there is a value in CBDC, then they will start using the CBDC. You don't need to push. To my mind, I think pushing doesn't help in changing the consumer behavior. We did not push our customers to move from cash to digital. They themselves thought it is a better tool. They wanted to move. It was aspirational. Tomorrow, CBDC could become an aspirational tool. If we are able to protect CBDC as an aspirational tool, that I'm started using it and it's very like virtual cards. If you start using virtual cards, it looks very interesting to do that transaction through virtual cards. So tomorrow CBDC also, because of the change in the consumer behavior and the adoption of the consumer behavior, things will work. To me, I think it is still some time away, but I would say it is a step in the right direction. But rather than pushing it and looking at numbers, I think we should let the consumer adopt it. And once it adopts it, then they will not move. Like Swiggy, Zomato, Blinkit, 5 years back we didn't have any of them. Now we can't survive without them, because we started using it. Same way, if CBDC has value and the consumers hatch onto it, it will grow. That is my view.
Thank you so much.
Thank you for that interesting session. May I now request Mr. Mihir Gandhi to present a memento to our panelists as a token of our appreciation and gratitude. Mr. Naveen Surya, co-founder Beams VC and founder and former chairman FinTech Convergence Council and Payments Council of India. Mr. Prasanna Lohar, President India Blockchain Forum, Bank Advisor, FinTech Mentor and Investor. Mr. Rajesh Bansal, former founding CEO, RBI Innovation Hub. Mr. Rishi Gupta, MD and CEO, Fino Payments Bank, and Mr. Sideen Kumar, General Manager, FinTech Department, RBI. May I request Mr. Raj Nair and Mr. Rajesh Mirzankar to present the memento. Mr. Raj Nair and Mr. Rajesh Mirzankar to present the memento to Mr. Mihir Gandhi, the moderator, as a token of our appreciation and gratitude. Can I request all to stand for a group photo? We now move on to the next panel discussion on NBFCs as India's pillars of growth, CEO vision for the next decade. I invite Ms. Pooja Barwani, Executive Director, Strategy, Risk and Transactions, Deloitte India, the moderator for this session on the days. Can everybody clear the days, please? Yeah. Kindly, very interesting session. We have great panelists. All are requested to please take their seats. All are requested to kindly take your seats. Please clear the stage. Please clear the stage. We are starting with the next panel. Excuse me, ladies and gentlemen. Please move away from the stage. The next panel is starting. Excuse me. I invite Ms. Pooja Barwani, Executive Director, Strategy, Risk and Transactions, Deloitte India, the moderator for this session on the dais. The esteemed panelists joining this session with the moderator are Mr. Y.S. Chakravarti, Managing Director and CEO, Shriram Finance, Mr. Sanjay Hinduja, Founding Managing Director and CEO, Shapurji Palanji Finance, Mr. Anuj Pandey, Chief Executive Officer, Ugro Capital Limited, Mr. K.V. Srinivasan, Executive Director and CEO, Profectus Capital Private Limited, and Mr. Neeraj Sharma, Chief Business Officer, Auxilo FinServe Private Limited. May I request all to join us on the dais for this discussion, and the session is all yours, Ms. Barwani, for the next 40 minutes.
Yeah, it's on. Thank you. So like they say, we're saving the best for last. That's why we have the NBFCs here. That are the pillars of financial inclusion, right, for the BFSI community. So, like I said, best for last. And complete onus on this panel to make sure it's thoroughly interesting, because we know it's the last panel of the day, right? Okay. So NBFCs, just a quick overview, just to give context. Today, they account for 25% of the total credit. They serve 500 million plus customers in the underserved rural segments. And due to the DPI account aggregation, OCANE, 80% of NBFCs are adopting some amount of digital transformation, some amount of digital lending. So these are fairly large figures. The sector is undergoing, of course, we all know, quite a transformation. We have traditional underwriting that's moved into API-led ecosystems. We have asset-heavy models that have now moved into embedded finance journeys. So a huge transformation that we've seen over the last decade. Now, on this panel, we bring together experts who are shaping this transformation for us today. And we have experts from all asset classes. We have niche asset classes like education finance, supply chain finance, to more diversified NBFCs. So with that, I will throw open the first question so that we can hear from them. Let me start with Mr. Srinivasan. So Profectus is very well known for MSME underwriting, which is one of the most difficult asset classes. Information initially had been a little bit of a challenge in how you get to underwriting it correctly. So if you could throw a little bit of light upon how you assess these MSMEs, how are you getting this data? Is the data more prevalent now? And how are you going about it?
That has actually happened in the data size, primarily engineered by the government, right? That has made life a lot easier. There was a time when if you want to really assess the income of an MSME, you basically go sit in the shop, observe how many people are coming and going, what are the kind of transactions that are happening, and then try to guesstimate the turnover and the profitability, etc. I think now things have become a lot more organized. Because you have today UPI, which has got a documented, much more documented sort of way of assessing the cash flows. You have GST, which is able to, you're able to get almost immediate information on what's the situation in the company and so on and so forth. And so on, the consideration set is actually expanding more and more. So those surrogate ways of assessing have now given way to less surrogate ways of assessing. Having said that, the MSME sector still has a significant portion of cash economy, and you have to do various things to sort of triangulate and get to the truth. But with technology and with better science going to the entire thought process, things have become a lot easier. I think one of the key factors is that we have moved significantly away from balance sheet based lending or asset based lending. We are now looking at cash flow based lending, and within cash flow itself, not just looking at the bank statement, but even going to the digital transactions, UPIs, and so on and so forth, and actually able to assess the true worth of an MSME, and with as much latest data as possible, right? Earlier, the balance sheet used to be probably 15, 18 months old, right? You call for audited balance sheet. It's no longer required. So you've actually moved on and you're trying to trace the cash. That has made MSME lending a lot more interesting and a lot more stable, and probably more deep as well. So it's part of a continuous journey that we are looking at.
Great. And now just switching over to Anuj. At UGrow, you do a lot of MSME lending too, but you've adopted more of a data-driven approach to assessing credit. So how are you using AI and alternative data to assess the same asset class?
Thank you. So as KV was referring, MSMEs are a difficult entities to underwrite because they're quite heterogeneous in nature. So what we have tried is we have tried to statistically model the behaviors which are available through the modern data science techniques. So you have the top line behavior now for most of the MSMEs in form of GST. You have the real cash flow behavior in terms of the banking behavior, which is available with the click of a button. And of course, the bureau behavior. The bureaus have evolved. The commercial bureau is now very evolved. So if you have consumer and commercial bureau both, and then you have all the things which you require to accurately assess the real cash flows. And the data is so large that this is ideal to apply machine learning. So our experience has been very good. We have made an internal statistical model. We applied for a patent for that, and last year we got it, and it is giving quite a decent result. As KV was referring, relying on the traditional ITRs and balance sheets is no longer required. They were in any case an estimates. Now you are in a position to accurately assess the probability of default for next 12 months. So that is how primarily we have used.
Okay. Thank you, Anuj. I'll move to Mr. Chakravarti. So at Shriram, you're looking at multiple asset classes, and you have deep roots in Bharat as a whole, as you call it, right? What shifts are you seeing in credit behavior in the rural and semi-urban, and how are you using technology to sort of adapt to that?
I think, so as KV and Anuj has put in, I think today the availability of data actually is making life a little more easier for NBFCs particularly, where you are reaching the last mile. Now, as you said, Bharat, so, the data usage has become so much that now you are able to, as you said, trace out payments, the receipts. Their payments are also they are making through UPI, so you know what is the cash flows. So what all this is helping in is that the borrower is also realizing the importance of building a track, which actually was not there. Probably even 5-6 years back it was not. I think there is a sea change in the way the borrower have started thinking now that they have to make. They also understand able to understand the importance of timely payments. So I think and it's going to change as they use more and more, they understand more and more how the credit market works. People definitely change. And I think also the UPI actually is helping change that behavior, because there are a lot of lending that is happening based on UPI transactions, the banking transactions. So they understand that it is better for them to go through this route
rather than cash. So as people were mentioning earlier in the panel also, I think it will slowly start happening that cash becomes less and less in the market, and these transactions. Even we advise, when people talk to us, we advise them, you want a lower rate of interest, please bring all your transactions on the book. I'll give you a lower rate. So people, I mean, you need to work on it, and I think there is a change that's coming in. I see a distinct change in the last 4 5 years.
No, thank you. And I think that's a very important point because along with proliferation of data and models, I think this borrower shift in mindset that you're talking about and wanting to adapt to that is extremely crucial. Let me move over to Neeraj. Neeraj, you all are building, you all have built a very niche monoline, if I may call it, education finance company. How are you shaping that up, and how is technology creating additional growth for you? Where are you seeing the pockets of efficiency coming up due to technology, especially for your sector?
See, two things here. One, unlike like Mr. Srinivasan said and Anuj said, we do not get data which we can work on as far as education is concerned. We deal in two things. One, students going abroad, and second, we are funding to schools out there. For students going abroad, we work with, they should have visa, they should have application letters from this, and most of these students are assessed on their future employability. So we do not have data. Should we give them money today? So the data or the basis of giving money is this guy or is this course or is this university good enough for him to get the job, and what kind of job he will get and how he's going to pay us. So in our loans, we give moratorium for some time, and then eventually after he is employed, he pays back the money. Now, education infrastructure lending, there we again, the schools are not that organized where they keep data or the data which we can believe, which means we have to, as Srinivasan sir said, we need to believe in the cash flow, or we need to assess the cash flow correctly. So this is what again we are doing, but I would say in our case there is no ready-made data which we can dig in. Now, as far as technology is concerned, technology-wise, we, of course, we have all those systems and processes, but we have also tried building scoring models within, and we have also tried kind of having a repository of universities, that if a student went to a particular university, how did he fare? Did he give the money back correctly or not? And the company is going 1 mile extra, even checking with the job counselor abroad, how the jobs are, what is the job situations and all. Like recently, there is some upheaval in US world. So that definitely these kind of things do affect us and our assessment cycle. Should we not? And I would say when the parents are, So yes, technology is helping us. We are taking, but that is more on data churning, not ready-made data available. Should I give money or not?
Okay, thank you. You answered that. I was going to ask you, my next question was, how do you feel about the Trump administration? But, all right, moving on to Sanjay. Sanjay, at Shapoorji, you all are building a very tech-driven supply chain finance company. If you could shed a little light on what you're building and how technology is helping your organization.
Thanks, Paula. As several people on the panel said, I think asset-based lending is almost dead in NBFCs. We all based on cash flow lending. And for cash flow lending, data and then contextual data. Data by itself means nothing. We use technology very effectively to take data and make sense out of it, help us with decision making, help us with monitoring, help us with compliance. So data is nothing for us, it's just very basic. How we train our models, we use a lot of AI for compliance, for decision making, for monitoring our portfolios. And it's also a byproduct. It's not the only, it's not the main reason. It saves time, saves money, saves turnaround time. And the customer service is fabulous because you don't think they run very quickly. You're not wasting time. You're not calling them 15 times for getting data because they can get data automatically. I need to call them for small things which they used to do. It saves me time, but it also saves them headache of me chasing him. So there's a, make it a funny statistic. Our entire portfolio, we did 20,000 transactions last year, and our entire operation is 2 people. So technology makes that much of a difference, which means there's less headache to manage.
Perfect. Thank you. I'll move on to a very interesting, a topic that all NBFCs go through in terms of ecosystem, strategic collaborations, and how we can work together from a co-lending model to fintech partnerships. Of course, the ecosystem has to develop as a whole. Just a quick statistic I'd like to throw out there. So co-lending and API-based integrations have gone up 4x in the last 3 years. And a lot of the adoption has been from the NBFC side. So with that, I want to start with Anuj. Anuj, Ugro has embraced co-lending and partnerships in a very good way. How do you ensure alignment when between fintech partnerships, between banks that you're co-lending with, in terms of customer experience, credit risk? How do you look at that?
So, so our experience has been very, very interesting, so to say, for last 3.5 years. The first learning is when you are co-lending with banks, it is very important that the understanding which you have of the target segment, bank also understands the same. Now this is easier said than done. Typically, the way a target segment is understood is via the underwriting policy which you have for that target segment and the portfolio behavior which you have. So when you combine these two, it used to take earlier about more than a year for us to explain to the bank that this works. Slowly in that last 1.5 years, we are seeing there is more openness to understand, a little more of adaptability. Now, technology integration, it is very clear regulatory guideline that credit cannot be outsourced. In a co-lending partnership, typically there are 2 models in the draft guideline. It is suggested that there would be only one kind of a model, but I'm talking about what is at this point in time. In the co-lending model, which is CLM2, what happens is an NBFC first underwrites, sanctions and disburses a case, and then on day 1 it can go to a bank. But the bank has to also underwrite the case again fully. Now, for this to be done seamlessly, the integration and the data transition from NBFC to the bank has to be very smooth, and otherwise the system breaks down. That is being developed. It requires a lot of effort. It forces process changes on both entity sides, which takes a longer time. But in due course, when both the partners start seeing the advantages, then things starts to move. But it is so far quite a slow burn.
Okay. Neeraj, coming to you in terms of ecosystem play, education finance, again, very niche. What kind of innovative partnerships are you looking at to sort of further growth in your sector? Where are you seeing more embedded finance opportunities with, edtechs? How are you looking at ecosystem?
See, of course, we have, the way we disburse or we source our cases is through channel partners. I would say a lot of business is done through channel partners, and these channel partners are counselors or loan aggregators. Of course, our systems and their system, they do talk, and in some cases, yes, we are in the process of making them talk. But yes, this EdTech solution or this embedded finance definitely is a multiplier. It gives a multiplier effect because directly doing business is becoming tough. DST teams, they don't. I mean, they are not productive anymore, and all. I'm sure all these guys would agree that somehow the industry has shifted to DSA model. I think 70-80% of the businesses are done by DSAs, and it do save cost, but there is a cost associated which is long term. Right. So yes, we are also happy. We are also in the same boat. We are doing this through other partners. So for us, I would say these are mostly channel partners, and of course all those, when we are doing credit assessment, all those, how to check the student, their parents, and all those things we are doing. But per se, like Vidya Lakshmi, which is for banks, for us there is no such system today. There's only channel partners.
So you have the FIDC in the audience, so you can say that once more.
Yeah, correct. Definitely, I'll miss it.
All right, coming to Mr. Chakravarti, in the rural and semi-urban, how are you looking at unlocking new revenue streams with ecosystem, with strategic partnerships?
So we've been actually, if you look at our evolution, I think right from the group when it started its chit fund business to today, we've been partnering with local, say for a chit fund business, it's like DSAs, you have agents, and those agents were used for selling multiple products. And then I think for the last 22 years, we've been working in close collaboration with small local financials. Where we find it uneconomical to do business because the volumes are low. You cannot have a branch. You don't want a remote, some guy sitting there remotely, one guy sitting there and lending. So we've actually partnered with, across the country, we have partnered with a lot of small financiers who fund your three-wheelers, your used two-wheelers, or small areas where even local transport vehicles. So we've always been on a lookout for, we are aware that you cannot do on your own all of the things. So it's a way of life for us to partner with people. In this digital world also today, we actually are working with more than half a dozen fintechs, technology partners. So it has to be, we understand that you need to work together. Like the banks are lending to me. So that means I need to work with other people so that, we actually spread the risk. We also live and grow together.
Thank you. Sanjay, you also believe at Shapoorji in the, co-lending model to be a sort of good propelling growth trajectory going forward. So can you shed some thoughts on how you look at co-lending from a supply chain finance perspective?
For us, co-lending is a one-way lending. We do not do any bilateral loans. And our experience has been fabulous with the banks. It takes a long time to get to onboard a bank because of the systems, like you said, processes, understanding of the product and how you can underwrite. You can underwrite all the different writing standards. But our experience has been absolutely fabulous. As I told you, we process at times 500 transactions a day with one bank, and it flows beautifully. Two things come into play here, which was not possible without technology. So we have built in-house technology which is very sophisticated for handling co-lending, because co-lending is not a technology play but a regulation play. Regulator wants you to have a letterhead with both your logos on it, common sanction letter, common escrow accounts. So co-lending has to marry compliance with the bank, with the NBFC. We have different compliances, they have different compliances. So the technology aspect, without that, it's impossible to do it. And our experience is actually fabulous.
Okay, that's.
I think it will become an integral part of your funding one of the components of funding would be towards ESG, green, whatever, green finance, whatever you call it. The other thing is, for as a NBFC, I mean, all of us are lending to some kind of, business, right? So I think the MSME is going to be the largest component going forward of our books, probably in the next 10 years, and because that's where the real credit gap is also there. Apart from that, I was also wondering, we were all talking about the rural-urban divide, the rural, credit to rural, but if you look at urban, look at Bombay as a city. Take probably business guys in and around here, small guys. I'm sure half of them would be borrowing from their local money lenders and not from an organized lender. And the kind of immigration that's happening into the cities today, I think very soon we will be looking at the underbanked, underserved in the cities rather than the rural area, is my gut feeling. So that's where I think, so the business, next 10 years opportunity is to go where the banks are not willing to go or cannot go. Partner with banks, partner with smaller finance companies or, the aggregators and grow.
Sanjay, same question to you. What does NBFC in 2035 look like to you? Your NBFC.
I would like to earlier question on co-lending.
Yeah.
I think time to come, compliance is extremely expensive, and banks and NBFCs, mid-layer and upper-layer NBFCs, do it pretty well, and the cost keeps going up. So you see banks moving closer to NBFCs in terms of tech and innovation, NBFCs moving closer to banks in terms of compliance. These two components are extremely expensive. So this segment will become almost one segment, and regulation will catch up with that. Small NBFCs will become mom and pop operations. Coming back to NBFCs coexisting with banks, I think it will become imperative that it will flip around. Today, banks think they're God and support the NBFCs. I think time will change. But NBFCs will drive the growth of the bank, the technology of the bank, and banks will provide security, stable liability side, and many other good things. But I think you'll find the driving engine for many banks will come with partnerships from NBFC. So I'll be sitting here. I'm very scared to have said that, but I hope you can hear.
Anuj, how do you see the role? And UGrow is across multiple asset classes, right? So where, and everybody has unanimously agreed that MSME is where a lot of the growth will be, given how underpenetrated it is. But where are you seeing sort of the green shoots other than MSME? Is it in some of the climate sustaining parts in terms of EVs? Are you looking at it? Gold has shown a huge growth. So what asset classes are you looking at for growth in the next decade?
No, I think more than the asset classes, and because you're talking about future,
right?
I don't think it will change too much. As NBFCs, we should be very clear what are our strengths. And our strengths are last mile distribution and underwriting. And we should keep focusing on doing better of what we do. We cannot be banks. The capital side will be provided from banks, and NBFCs should continue to focus on what they do. So if, and it will involve a lot of adoption as far as technology is concerned. A lot more compliance related activities, but the core has to remain same.
A lot more compliance, which you're right. Compliance costs have been going up. Mr. Srinivasan.
Innovation and more innovation in the areas of customer sensitive underwriting, customer service needs, and innovation in terms of predictability of defaults, that is a predictive collection model or whatever. And number 3, innovation in terms of ferreting out that particular amount of income which is still going to be remain hidden in the MSMEs for all times to come. GST ONDC, CBDC, whatever you have, we will have maybe a less cash economy, never a cashless economy. So it's going to be important.
See, we are 4 trillion economy, maybe 16 trillion economy next 10, 20 years. So definitely NBFCs will have a run time going ahead. However, in my opinion, they are going to face challenging times. And the reason I'm saying is, already NBFCs are working on a very thin margins, right? Which is just volume they are multiplying by borrowing. Bankers increasingly either are being told or themselves are not lending in a aggressive manner to NBFCs. So the bigger and better NBFCs, yes, capital again for them could be challenging. So yes, it will be a challenging time, but yes, a lot of opportunities, I would say. And of course, technology, so jiske paas nahi hai, he is out of the business, right?
Capital, yes, capital is on, something that has to keep coming, right? But thank you. Just want to, yep.
How do we get the required funds?
Fund.
And as he said, when the bank grow more money to NBFC, banks are told don't give only that. So in that respect, in the next 10 years or whatever, no, that becomes their very important aspect. So that was the issue by FIDC also. We should try to get some refinance and all. So I would like to ask senior people there, what are their plan for enhancing the resources?
I'll tell you first, and Kivi, you can do it later. So co-lending definitely was one very viable solution for that. And that's why a lot of NBFCs moved towards co-lending. It's a very practical liability solution. And within the core liability mix, the dependency on banks has to come down. So NBFCs like us are now more reaching out to DFIs and to other alternate sources. But with the combination of co-lending and diversification, I think it is sustainable.
I think if I look at it from a futuristic perspective, a very thriving market in asset-backed securities. So where today securitization is limited to institution, that same thing becoming more micro and becoming a retail way of viable investment for, and obviously with proper ratings, would become an extremely potent way to raise money.
So I agree with him that again, the bond market has to deepen, and the bond market basically different instruments, very crucial for at least smaller NBFCs. The larger NBFCs, yeah, since they have like Shriram, we have access to, we were able to raise money from, masala bonds. No. Why? We have to think, sir. Our borrowings are so large. We hedge for full term and no partial hedging. No, I'll put it this way. It doesn't work better in terms of cost because of the hedging cost. We hedge for the full term. So it doesn't work. But I don't want to risk my entire borrowing from one basket. So that we have seen what happens to liquidity when things turn. Yeah. So that's another reason why, though sometimes even though it's a 50 basis points more expensive than what I could get domestically, we would still go there and borrow in overseas markets because of that risk of concentration we didn't want. And of course, being a public deposit taking company, we also about 23-24% of my liability also comes from public deposit.
I have a request to the regulator. Now, compliances, as Mr. Sanjay was saying, that it's going and increasing cost. Afternoon we were hearing that mutual funds have some 60 lakh crore or some AUM under them. where they are investing in equity, which is considered to be little riskier than the debt, not all asset side. So the point which I'm saying is, can NBFC be given a pie of this money which is going to mutual fund through bonds, NCDs or whatever, right? So because they are better compliant, they are rated, everything is there. Of course, FD experience of the past is bad, but I think we have moved ahead, right? So I think sincere request submission to regulator that if they can think on this, right? Sir, the money which goes to the bond market is as per the mandate of the investors. So they want to in a money market mutual fund or a equity mutual fund, so or a bond mutual fund. So fixed income mutual fund, it is as per the mandate of the investors. I mean, whatever the mutual fund is. Now, once the money is there for money market mutual funds, it flows through the repo market and through the tri-party repo market to the from the corporates mutual funds to the banks concerned. It does come from, as far as the bond market is concerned, the major issue is there that the ratings of the entities which are raising fund, I mean, normally if you see the market, you will see mostly the funding is available for AAA rated, AAA or AA rated, mostly AAA rated bonds of reputed institutions. So because the credit risk, the people who are the mutual fund, people who are managing these mutual funds may not be sure about the credit risk of such entities. So there, I mean, the money is flowing. The nature of the financial system has changed. Earlier it was more CASA deposit, over a period of time wholesale funding is happening. But the money is flowing to credible institutions with higher ratings, and there are various ways. I mean, a bond market is there, NCDs are there, all these are there already. So I meant more of that, like I'm depositing fixed deposit with the bank or I'm putting money into mutual funds. I should be allowed straight to invest into or give loan to, or say NCDs of NBFC. See, as a investor, as I'm putting money into shares, losing money, sometimes entire money. So this is far better risk than equity risk, I would say.
Yes, okay, please. You want that? Yeah, please.
So, my name is M.K. Chauhan. I'm incoming Vice President of Indian Merchants Chamber. So my suggestion to all of you is, in some granularity, if this proposal or appeal can be articulated to IMC. IMC may like to take it at an appropriate right department. So let's take it forward. Thank you.
Perfect. I think we're good. Do we have time for one? No. Okay. So, okay, I just want to thank the panelists. So just few themes that, stood out, which I would just like to highlight. A, digital acceleration is no longer a differentiator. It's the default going forward. Strategic co-lending, embedded finance is the key going forward. And there is clear alignment between regulatory evolution and the sector's aspiration, but we need to have continued clarity and flexibility as we go forward. And most importantly, even though we were the last panel, NBFCs continue to be a huge, plugging in a huge gap in the financial services ecosystem. Yeah.
Very true.
12.5% of GDP. Panel.
Thank you, and I request the panelists to be on the dais as we come to the close of the. Please be seated. Please be seated, sir. As we come to the close of this excellent conference, may I request Mr. Mahesh Thakkar, Co-Chairman, IMC's Banking, NBFC and Finance Committee, and Chairman, Finance Industry Development Council, to deliver the vote of thanks. Over to you, Mr. Thakkar.
Pending felicitation to my own people, I propose the hearty vote of thanks, to the entire conference organizing people. Of course, first and foremost, we are coming to an end within 30 seconds from now. our chief guest, Mr. Anand Sinha, former Deputy Governor, Reserve Bank of India, for making wonderful presentation and bringing out 12 good issues which IMC and FIDC can take forward. To our all speakers, moderators, participants and press for being part of this conference, and of course, very enriching day for all of us. Our sponsors, gold sponsors, Standard Chartered Bank and technology partner Kia AI for support to this conference, and of course, acknowledging the support and entire work, for the last more than 1 month to the IMC team led by Sanjay, Mehta, Bharti and others. And of course, let's not forget our MOC who've been there working from since morning. Selby for a wonderful, presentation to all of us. And thank you to all of us for sitting throughout the day. But please wait, we will felicitate our esteemed guest here, and I'll request Narendra sir to join us.
So may I now request Ms. Pooja Barwani to present a memento to our panelists as a token of our appreciation and gratitude.
If you are all satisfied about our program and you got the takeaways, give a big clap to everybody.
Mr. Y.S. Chakravarti, Managing Director and CEO, Shriram Finance. Mr. Sanjay Hinduja, Founding Managing Director and CEO, Shapoorji Pallonji Finance. Mr. Anuj Pandey, Chief Executive Officer, YouGrow Capital Limited. Mr. K.V. Srinivasan. Mr. K.V. Srinivasan, Executive Director and CEO, Profectus Capital Private Limited. And Mr. Neeraj Sharma, Chief Business Officer, Auxilo Finserv Private Limited. May I request Mrs. Rajalakshmi Rao, President, Ladies Wing, to present a memento to Ms. Pooja Barwani as a token of our appreciation and gratitude. And may I request somebody from Standard Chartered Bank over here? Anybody from Standard Chartered Bank? And Mr. Mirjankar, please join on the stage for a group photo. May I request Mr. Sanjay Mehta and Ms. Sheetal Kalro to please join them on the stage. For a group photo, please. We extend our heartfelt gratitude to our gold sponsor, Standard Chartered Bank, and our technology partner, Kia.ai, for their generous support and commitment to this conference. Their partnership has been instrumental in making this event possible, and we look forward to their continued support to IMC. Thank you for your invaluable contribution. Esteemed guests, I hope all the participants are carrying enough information and value back home, and may you have a great weekend, but we would request you to kindly submit the feedback form which was given to you to our representative sitting at the registration counter. Your feedback matters. Thank you. Can I request all the IMC staff to come onto the dais for a photo, for a group photo? In making this event possible, and we look forward to their continued support to IMC. Thank you for your interest and value back home, and may you have a great weekend.